Welcome to Davos. I'm Brian Sazi. We are reporting live from inside the Congress Center at this year's World Economic Forum.
And I'm Julia LaRoche. For the next 3 hours, we'll be live with Yahoo Finance Editor-in-Chief Andy Sower and our colleague Alexis Christoforous, bringing you all of the interviews from all of the newsmakers. But it does not end there. Be sure to tune into Yahoo Finance all week long. We're going to bring you the latest from the World Economic Forum, the 50th anniversary.
Julia, talking about newsmakers, President Donald Trump spoke here this morning. Packed crowd. He received what we would characterize as a polite reception by the crowd, but by all means, the speech was very, very interesting.
Yeah, it was a bit more of a subdued Donald Trump, I would say, really giving a victory lap to the strength of the U.S. economy, cheering his performance during his first 4 years in office, pointing to the record low unemployment rate, rising wages, those sorts of things. Also touting the Phase 1 trade deal and making some news around Phase 2, saying that that is coming shortly, but most of the tariffs will stay on the table for the time being.
And I think if you invested in this market and if you watch the Trump speech, he's looking for an economic acceleration. I believe he said massive in the second half of this year, and I think that's what this market is betting on. We have to see it at some point. We haven't seen it just yet.
And again, a lot of that ties back to trade. It also ties back to deregulation. So yes, Donald Trump making a victory lap, but also keep in mind that the administration is out in full force as we speak or begin this show. Treasury Secretary Steven Mnuchin is going to be talking about the resiliency of the U.S. economy, but it does not end there. We have Commerce Secretary Wilbur Ross, we have Ivanka Trump, we have Jared Kushner, we also have Transportation Secretary Elaine Chao, so I think it's safe to say that the Trump administration is taking over Davos.
And the Treasury Secretary, Steve Mnuchin, he will give one of the last panels at the end of the week, an update on the global economic outlook. He will be the showstopper, potentially.
But it's not only that, Brian. Keep in mind that it's beyond just politics here. We're talking about the next generation. We're talking about shareholder activism.
Yeah.
Actually, rather, we're talking about stakeholder capitalism. And we kicked off this morning with a panel of young teenage activists, Greta Thunberg, who is the climate change activist, really stealing the spotlight this morning.
I got a photo of her.
And you got a photo of her, and a lot of companies are coming out now with bold plans to tackle climate change, so that is something that is huge on the agenda here.
Stakeholder capitalism, very much a big theme here at this year's World Economic Forum. And I caught up with PayPal's CEO Dan Schulman after he gave a panel this morning, and he is really focused on changing the way we do capitalism. You look at how shareholders drive their business now, or how management teams drive their business. Let's do the stock buyback. Let's pump our stock price. But you have companies out there like Keith Block, who we also talked to. He's the CEO of Salesforce. You have Dan Schulman really trying to change the game.
And I think that goes back to just the roots of the World Economic Forum. 50 years ago, Klaus Schwab began this forum. He was only 31 years old at the time, and he pioneered this whole stakeholder theory that we're talking about, that a purpose of a company is not just for maximizing shareholder profits, but it's taking all stakeholders into account. The communities that you operate in, the environment, your employees, those sorts of stakeholders, and that is the real driving force at the World Economic Forum.
At 31 years old, I think I was drinking a beer on the beach. I don't know if I was thinking of the World Economic Forum, Julia.
Well, I'm 31 years old, and I think it's quite impressive. 50 years going strong.
He has created quite the legacy. Now let's get back to President Trump's speech. I think one of the themes that is not getting talked about is this sense of decoupling from the rest of the world. This was very much, I think, a re-election speech by President Trump. He ticked through a lot of his biggest achievements on jobs, of course, the stock market. And for him, you're getting the sense that the U.S. may be going at it alone right now, even despite a lot of the trade deals.
Well, I also think it's interesting to note, so he was, again, touting the U.S. economy, the strength there, and that he thinks there's upside potential. But let's keep in mind that we did have a PwC survey come out of the CEOs, and I got to say that the sentiment from CEOs worldwide has been falling year over year. If you look at the sentiment from last year, that you have more than half expecting an economic slowdown when it comes to global GDP, and certain regions, certain pockets of the world are feeling a little less optimistic, especially about their own company prospects. So that is something that we are going to dig into today when we talk to an executive from PwC here.
And we have a lot of guests coming up. Who's up next?
We have Peter Beshar. He is the general counsel of Marsh McLennan, and we are going to talk about all of the risks that the World Economic Forum folks are focused on. Peter, thank you so much for joining us.
Great. Good afternoon, Julia.
Okay, so we were just talking about the Global Risk Report. It seems that there's a change this year. You have climate finally taking over the top 5 spots. So I got to ask you, what was it that spurred this change?
Sure. Julia, we've been producing the Global Risk Report for the last 15 years. And this has been a shocker for us that we've never had the top 5 risks all relate to one issue of climate change here. So natural disasters and water crises. And also importantly, not just the nature of the risk, but whether or not the world community can organize and get itself so that a coherent response can be made to the risk.
I would imagine it is a sizable risk to a business, an insurance business like a Marsh & McLennan, if we have green swan events. We're starting to hear more about that, especially at this event.
Sure, you just look at the wildfires down in Australia. The fires in California alone in the last 2 years have produced $30 billion of damage. The sum total of all fires for the last 30 years in California. So you just get a sense of the intensification of the threat.
When we talk about risks, what can we do to mitigate some of these? Because they sound really dire when you see your report. It is a really dire situation.
And Julia, that's one of the main things here in Davos this week is converting good words and good intentions into really concrete deeds at scale. And I think the corporate community is feeling the heat, quite frankly, both here in Davos and elsewhere. They're feeling it from Greta Thunberg, the activist that you mentioned, who spoke earlier today, from their employees, and in many ways from their own children, to just demonstrate that there's a way of responding in concrete steps that can really start addressing the threat.
I guess I was going to say, my follow-on to that, though, is of young people driving change. Does that change the future of work for companies? Because you're talking about the next generation of talent, the next generation of voters, the next generation of investors.
Sure. Think about some of the companies that have just made extraordinary leaps forward. Beyond Meat, a wonderful product for the millennials, hell of a stock, and doing an important role in combating climate change. Tesla's been another example of just really disrupting their industry. And then there are other companies like Microsoft that made a pledge not just to go carbon neutral, but to actually go carbon negative by 2030. And I think those are the types of actions that are really necessary.
As a business leader, are you more optimistic about the economy this year or less after hearing President Trump's speech?
I think what was striking about President Trump is just his presence here, first of all. He considers himself a unilateralist, and in many ways this is the quintessential multilateral, multi-stakeholder event. So it's quite fascinating that he chooses to come here, as he's done now twice out of the 3 years in his administration. And as you mentioned, I thought the speech was as much of a campaign-style event to a U.S. audience about the economic strides that have been made in the country.
Do you think the economy is as strong as President Trump suggested?
The business community, and we're in the risk business, Brian, so we probably see a little bit more questions on the horizon about will the global economy really gather steam. It's been fairly subdued over the past several years.
Well, beyond the risk as they relate to climate change, what else is on your radar from a risk standpoint when it comes to, corporations?
Sure. For the business community, the other big risk in the Global Risk Report was really cyber attacks against the control systems of critical infrastructure. And so what we've seen in the past are really thefts of data in the form of data being stolen, your social security numbers, your credit card numbers, or data being held hostage in the form of ransomware. But really the emerging threat, and what experts are particularly concerned about, is the idea that you can manipulate the controls of nuclear facilities, chemical plants, telecommunications networks, and that could morph from the digital realm really into the physical realm, so that you went from the loss of life, loss of data, to the loss of life.
Sounds like the worst case scenario.
Do these factors keep you up at night? You are in the risk business.
We are indeed. And there's elements of progress, obviously. If you think, Brian, of something like artificial intelligence and quantum computing, are those developments more likely to help those of us who are trying to defend networks or those who are trying to attack networks? And something like AI has an element of both. So it will enable companies like ours to detect anomalous behavior that warrants further investigation. But at the same time, as the NSA's announcement this past week demonstrated, that they had identified a flaw in the in the software, Windows 10, that underpins some 900 million desktops. And so if nation states or hackers can use AI to find and then exploit those vulnerabilities, that poses a significant threat for the business community.
And Peter, I do want to talk about the World Economic Forum and your experience coming to Davos. It's the 50th anniversary. Just for our viewers who might not be familiar, walk us through, kind of the benefit of coming. What do you get out of it? Is it the sessions? Is it the interactions that you have in the hallways? Tell us more about it.
On so many fronts, Julia. First of all, I'm in awe of Klaus Schwab and the idea that he conceived and founded this organization 50 years ago at the age of 31. For me, it's two things, really. The combination of who the stakeholders are, so they're government leaders, they're nonprofit leaders, and they're business executives. And then you spend a fair bit of time talking on areas like risk, which is our specialty, and at the same time you talk about things and learn about things that have nothing to do with what you do. So immunotherapy, or just so many other of the rapid advances in technology and science that are far outside anything I spend my day on.
Well, we hope you download the Yahoo Finance app and watch some Beyond Meat's share prices on that app.
I absolutely will.
All right, Peter Beshar, General Counsel at Marsh McLennan. Good to see you. Thank you.
Many thanks.
Thank you.
All right, coming up next, we'll talk to one of the biggest name CEOs in the game. A lot of people are checking out his advice. We'll be right back. Welcome back. We are still reporting live from inside the Congress Center at the World Economic Forum. And we're joined by Genpact CEO Tiger Tyagarajan. Tiger, good to see you not in the studio this
Great
time.
to see you, and that too in Davos. Wonderful to be here.
Absolutely. One of the big themes here at the conference is uncertainty. Uncertainty about the year ahead, uncertainty about the next decade. That is right in your company's wheelhouse, dealing with that uncertainty.
Yeah, and all I would say is that haven't we been dealing with it for some time now? So a little bit, you've got to get used to the fact that that's the world we are in. Uncertainty driven by macro, driven by societal changes, climate changes, but also by technology and disruption that technology causes. So it's real.
Well, we're going to dig into that disruption when it comes to technology, but I got to ask you this because in your role at Genpact, you talk to CEOs all the time. What is top of mind from leaders today?
Growth, number one. Number two, how do I deal with disruption? But mostly from an offense perspective. See, how do I use disruption as a weapon to grow? Of course, I have to defend as well because I'm getting attacked by my competitors, but it's actually offense a lot these days, not just defense, and that's very important.
In this type of low growth environment, amid all that uncertainty, Do you see a rise in corporate restructurings coming?
Oh, we've seen that actually for the last year, 2 years, where companies are redefining what their core is. So we've seen so many companies split. We've seen companies actually decide that they want to go down a certain path, therefore acquire more in that direction and then split into two. I mean, let's pick an example, the most recent one that got announced some time back, United Technologies. We're going to have 2 or 3 companies come out of that. We saw GE change in
Big
different
customer
ways.
of yours too.
Lots of these are kind of customers that we deal with a lot. Yeah, you're right.
It seems like everyone's going through some sort of transformation. From your viewpoint, though, what do you think is the hardest part for companies when it comes to the digital transformation?
People, Julie. It's always about people. What kind of change do people have to undertake themselves? What kind of change do they drive in the teams? What new skills they have to learn? What new behaviors? How do you get teams to work together? Sometimes some of them may feel, I'm going to lose out in this race and someone else is going to win.
Okay.
So it's always about being in front of that, not behind it, because if you're behind it, it's too late.
So it can create fear, it sounds like.
Fear, how do you rally people to actually make it a thrill? Riding a roller coaster sometimes is not that exciting until you're in it and you create the excitement.
Tiger, I know besides GE, one of your key customers is Boeing. What has been your advice to Boeing amidst their struggles with the 737
No,
MAX?
we don't get into advice on those types of topics. Customers like Boeing are the kind of things that we do for them is not that dissimilar from what we do for many customers, which is how do you run processes better in finance, in procurement, in supply chain, in analytics. I mean, that's the kind of work that we do for a number of our customers. We don't get into the engineering side of any of our customers.
You know, I also noticed that you write a lot about artificial intelligence.
Yeah.
And when it comes to AI, it seems like sometimes there's 2 camps. You know, there's the Elon Musk camp that's going to be terrible, and there's the Sundar Pichai camp that it's, you know, the greatest thing since electricity or fire or what have you. Where do you stand on the whole AI debate?
So first of all, I want to say, I never want to stand in a camp where it seems to be against Elon Musk. How can I and how would I? However, I am an optimist. I am the glass half full person. My view is that AI is like a lot of other technologies in the past. Every technology has a good and a bad depending on how it's used. Clearly, AI is going to change the nature of jobs, it's going to automate a bunch of things. And therefore, people have to relearn things and it will take away some jobs. But that same technology is going to be used to create new jobs. That I'm a big believer in, and I'm a firm believer.
Right, new jobs, but also you're talking about displacement of jobs. Who's responsible at the end of this? Is this companies are going to be beholden to create jobs? Everybody.
Everybody, including the individual. I'll start with the individual. I'm responsible to relearn myself. But technology is going to enable me to do that much faster, much better than in the past. And the other thing I'll say is there are a couple of billion people who have no access to education, health, or microfinance. AI will make that available at almost zero cost. Isn't that growth for a lot of people who actually create that, such as technology companies and other companies?
Some of the biggest news so far is coming out of President Trump's speech here at the World Economic Forum. Really touted the strength of the U.S. economy. Do you think it is as strong as he suggests?
It is. I mean, every industry, every customer we work with who has a significant presence, either because they are U.S. companies or they have a big business in Europe, in the U.S., we see that strength. We see that strength as not just subjected to one industry or one place. I think he talked about inclusive growth. Unemployment rates are down, there's no question. And it doesn't matter which part of the economy you're looking at, whether it's the East Coast, the West Coast, the Midwest. It's not easy to find talent.
Do you think it's getting better, though?
Better in terms of?
Just a faster reacceleration. I think we've seen a tremendous boom in the stock market the past year and a half, big bull market. Do you think economic growth in the U.S. is accelerating?
I don't know about acceleration. There's a time at which when you look at the growth and say, I'd like this to be where it is and steady, that's actually sometimes better. Steady Eddie is sometimes better than acceleration because that might lead to a fall. No, we feel, one, growth is more pervasive than concentrated. Two, we feel that in the customers we work with and their teams. And three, we feel that in different parts of the regions of the U.S. and not concentrated in one or two places.
You just mentioned inclusive growth, though. So I got to ask you this because I know you're a big supporter of women and diversity, especially on boards. Can you talk to us about that? How do we finally move the needle? It is 2020, and we still aren't seeing the representation that we would like to.
So I'll start by saying, Julie, it's actually easy to move the needle on boards. And we've done it. So now we have 4 of our 11 board members are women. That's easy because you just get the great women to join the board. The more difficult thing is how do you move that needle across the company? We've been challenged with the middle of the organization. So we've had a bunch of programs where we actually, talk about subconscious bias and train people. We talk about, for every job opening within the company, we actually make it open to, and we force women candidates to be on the slate. We've changed the way we describe jobs.
You should be
Use
the model
right
for
words.
corporate America.
I don't know about that.
Well, how, are these guys giving you a call?
Who?
Any CEO.
No, I'm involved in a number of the discussions, whether it's with Catalyst, and I'm on the board of Catalyst, with the Bloomberg's 30% club. So I think we share a lot of best practices. I've learned a lot from those discussions, and we try and implement them. But the glass is still, on that one, half empty. So Julie, you're right.
Well, Tyra Garajan, CEO of Genpact, thank you so much for joining us. And to our viewers, you won't want to miss our next guest. She's warning of what could be the next crisis. Stay tuned.
That was so good.
Yay, thank you. Welcome back to our live coverage inside the Congress Center at the World Economic Forum in Davos, Switzerland. Our next guest is an executive director at Greenpeace International, Jennifer Morgan. Jennifer, thank you so much for joining us.
Great to be here.
All right, so you all put out a report, and you're drawing some pretty strong parallels to the 2008 financial crisis as it relates to financial services and climate change.
Yes.
Walk us through your thesis here.
Sure. So this is it's the finance sector stupid report, and we say that because if you look at the role of the financial sector, it's played as big of a role in creating climate chaos as the fossil fuel industry. You have had, since Paris Agreement in 2015, $1.4 trillion invested in fossil fuels by 24 of the banks that come to Davos. So we looked at who comes to Davos and what they've been up to. And obviously, it's, they say nice things, but their investments are going in completely the wrong direction.
Jennifer, out of all the CEOs you mentioned in there, banking CEOs, which banking CEO, in your view, is really out to lunch on climate issues?
Well, I think I'd have to name JP Morgan Chase and Jamie Dimon.
What is it about what he has done or not done?
Well, I think first of all, they've invested $200 million in fossil fuel investments since Paris. And number two, he gives mixed messages. It's pretty clear from congressional testimony and other things that he doesn't understand the risk. And the risk is, as you were saying, that we are building on sand. So we knew the risks before the housing bubble, or you can say maybe they didn't know the risks, but now they know the risks of climate change and they continue to invest in the thing that's causing climate change.
Has Mr. Diamond invited Greenpeace into the corporate executive office to talk about some of these issues?
No, they have refused to comment on this report.
Well, let's talk about some of the firms, though, that are making some steps. I want to get your reaction to Larry Fink, the CEO of BlackRock, putting out a letter just last week, calling on CEOs and saying that going forward, climate change is going to be central to their investment thesis. What do you make of that?
So I think it's good that there's been a recognition, finally, by BlackRock that this is a fundamental issue. It's a material risk issue. And to start by phasing out financing for coal and thermal coal, I want to know by when he's going to do that. I think the other key piece is to get the regulation in place. And so I would like to see Mr. Fink out there testifying to get regulation in place of this sector quickly.
Do you think we are at the risk this year of a green swan event?
I think we are now at a risk of anything. There is no new normal. The new normal is chaos. If you look at Australia and what's happening in Australia and the costs there, and I think you can pivot and hope that there will be a big reaction, and that's what I'm looking for, obviously, here at Davos, that you have many, many who join BlackRock and strengthen it.
Well, Jennifer, you're certainly an expert when it comes to this, and I want to get your take, just for our viewers, because we're talking about individuals who are watching. What are some actionable steps that we can take and implement into our everyday lives to help mitigate some of these issues?
Well, I think there's two things. I think the first is to be active in the political debate. I think oftentimes these things focus on the individual and how much certainly people should eat less and better meat and dairy. They should try and fly less. They should try and get around by public transport. But right now we need people's voices. We need people to get off their couches, to participate in the process, to call their local officials, and we need voices. And that's the exciting part of what's happening. We're seeing the biggest civil society movement that we have seen in decades.
What's your reaction to when President Trump, during his speech today at the World Economic Forum, continued to tout our oil independence?
I think that President Trump clearly is on another planet, and he doesn't understand that there is no money on a dead planet. The science is very clear. It's clear that he's listening to the fossil fuel executives that are in his administration and the bankers, because you can't consider that you're going to keep pumping oil out of the ground and know the costs of life and damages that are happening very much in the United States at all.
What Democratic candidate right now fits the views with Greenpeace?
Well, Greenpeace doesn't take views on different candidates. There's a scorecard that's out there looking at fossil fuel production, stopping fossil fuel production in the United States, taking money from fossil fuel interests in the election, supporting the Green New Deal. So you can see how we rate all of those candidates against those criteria.
So we're talking about folks and their experience at the World Economic Forum. Have you been here before? Is this your first time, or you've been here before?
I've been here 4 times
So
now.
do you feel like when you come here, you can walk away knowing that businesses might actually implement some of these actions, or government officials? What's kind of your read on, because we're having a big conversation. You had Greta talking this morning, and it seems like now it's become viral. Climate change has become viral. Everyone's aware of it. Do you think that we'll walk away making more fruitful steps?
I have to hope so. I mean, I question myself every year. Should I come? Should Greenpeace be here? And I'm here to speak truth to power to every person who I can, in hopes that they will walk away and they'll make real commitments and act, not just paper commitments. And let's see. Let's see. I think it's all to play for. We just had Allianz say they're going to get many, many more companies, 10 times more companies, to pledge their assets into clean energy. So that's the type of commitment we need.
Real quickly, before we let you go, the plan to put out forward more climate change more broadly, do you think companies are doing enough right now? They are continuing to skirt the line between profits and investing in these initiatives. It still seems like a fringe initiative.
I agree. I think it is too fringe. I think you won't have we won't have profit, we won't have a GDP if we don't start actually challenging and incorporating the fact that climate change is a material risk in all of this. And then we have to move away from this idea of eternal growth. We actually need to bring in more things about health, well-being. And right now, no. I don't see it as integrated fully into their businesses. I see lots of statements, but let's see where the money goes.
And do you feel as though AOC's new plan, the Green New Deal, is that a perfect plan?
A perfect plan it is not. It's a good start. It needs to also include stopping drilling for fossil fuel.
Sure. All right, well, let's leave it there. Jennifer Morgan, good to see you. Thanks for stopping by.
Thank you.
Come up next, we'll talk to another big name CEO who is putting out an interesting outlook on the 2020 U.S. economy. We'll be right back.
Welcome back. We are in the middle of our live coverage of the World Economic Forum in Davos, Switzerland. Let's take a look at the futures. They are set to open in just around an hour from now. It looks like we are moving to the downside with the Dow, the S&P, and the NASDAQ all in the red. We have Jared Blickery standing by at the Yahoo Finance Interactive Board. And Jared, when you take a look at the action this morning, stocks are pulling back from last week's record highs.
Yes, they are. This is our global map of the world indices. We see a lot of red on the board here. Hong Kong got whacked for about 3%. That's on fears over the coronavirus in the mainland of China, as well as Moody's downgrading them. We see the Shanghai is off about 1.5%. The Kospi down 1% along with Tokyo. In Germany, Frankfurt DAX, that was down nearly 1%, but it's recovered, pairing some losses. The CAC 40 in Paris is down about 0.8%. And in London, the FTSE is down 0.9%. Here in the U.S., we see the futures around 19 basis points down for the Dow, 30 basis points down for the S&P, and a little bit more for the NASDAQ here. We can also take a look at the commodity complex. Now, the U.S. dollar is sinking a little bit after gaining quite strongly on Friday, but despite the U.S. dollar weakness today, we're seeing crude off over 1% here. Also, gold not able to catch a bid, and actually no safe haven demand there. We're seeing it off by about 1/3, and then we're also seeing copper futures down as well.
All right, Jared Blickery, thanks so much. We'll have more on the markets here in just a bit. Well, let's take a look at some of the companies that the Yahoo Finance team is watching for you today. First, we have Tesla looking to duplicate its Chinese success in Germany. Now, the automaker wants to build another factory outside of Berlin, and it just revealed plans on going about it. Now, the new facility is planned to be built within a year, but it will face some obstacles. Now, the first one will be a colony of bats that will get in the way of workers, and a more serious issue, World War II bombs that haven't exploded and need to be removed in and around the factory site. Once the factory is built, Tesla says it has a chance of producing over 1 million cars a year. We are also watching Uber because it may be changing the way you pay for a fare. Now, the ride-hailing service is testing a new feature that lets some drivers in California set their own fares. This is a way to give drivers more control with the new gig economy law. Now, the test begins today, and there's no word on it if it will be expanded across the country. And Disney Plus is growing. The streaming service will debut in the United Kingdom and parts of Western Europe on March 24th. That's a week earlier than what Disney had previously said. It'll cost a little under $8 a week, or almost $78 for a full year. Now, the service will then launch in Belgium and Portugal later in the summer. The news comes after Disney announced that it will renew The World According to Jeff Goldblum for a second season. Coming up, we'll have more from our team in Davos, Switzerland, live from the World Economic Forum after a quick break.
Welcome back to Davos. We are still reporting live from inside the Congress Center at this year's World Economic Forum. Right now we're joined by Cloudflare CEO Matthew Prince. Matthew, good to see you.
Thanks for having me.
You are a regular attendee of the World Economic Forum. In terms of this year and in terms of meetings, what are you hearing from some of your clients or prospective clients on the cybersecurity front?
Well, when we started coming in 2012, cybersecurity wasn't on anyone's agenda. And what's really changed is now it's a topic of conversation on almost every boardroom around. And so, people from our team are here meeting with clients, advising them on what we're seeing on the cybersecurity landscape. And what's been particularly interesting is how much increasingly cyber and political events get tied together. So being able to understand what's going on in the political sphere and the cyber sphere is a really powerful.
Do you close any big deals at this event?
We do. I mean, we've met.
Have you closed any?
Well, we've met a lot of great customers through this event over the years. Last year was the first year that we brought a broader set of our team, and it's been something that's had a really positive effect on our business.
I wanted to touch on something you just mentioned, that cybersecurity tends to amp up around political events. So is it safe to say when you're in an election year, you're even more risk? And who exactly is at risk?
Well, I think that what 2016 taught us was that there were a lot of people that were trying to disrupt, especially U.S. elections, but we see that around the world. We had 16 of the 17 major U.S. presidential candidates as Cloudflare customers, everyone but Hillary Clinton, actually. And as a result, we saw the attacks that were coming to those candidates. I think that the world has woken up to that is now a new threat, and we're seeing a lot more sophistication, both from state, local, and federal officials, but also from candidates and campaigns, where just last week we were able to announce that we're being able to donate our services through our Project Galileo, not just to state and local officials, but now also to campaigns.
I think that's pretty interesting. Project Galileo, it's about making the internet safer. Talk to us a bit more about that and who you're trying to target.
It was really inspired by trips to events like this at the World Economic Forum, where we saw that, yes, there were a lot of large businesses that could pay us for our services, but there were also civil society and nonprofit organizations that were doing things that were either politically or artistically important, but didn't have the resources to necessarily pay us for our services, but would get large attacks because sometimes they would upset the wrong person. And so we started that initiative. It's over 5 years old now, and it's one of the things that I'm most proud of at Cloudflare.
The upcoming presidential election, is it more at risk for a cybersecurity attack compared to last election?
Well, I think that we have unfortunately run the risk of making every presidential election in the United States effectively the World's Cup of cybersecurity attacks. And
Not reassuring.
I think the good news is that we and a lot of other companies are stepping up to say, let's see how we can use technology in order to protect democracy and protect elections. We couldn't have built Cloudflare into the business it is without a stable, functioning government. So I think it's our responsibility to help protect those institutions.
Take us a bit inside how these hackers are operating. Where are they coming from? I mean, we kind of know the obvious areas. And are they getting more sophisticated? Is it something that's obvious? How does this kind of manifest itself?
It comes in a number of different flavors. So obviously there are nation-state level attacks where after we saw earlier this year, for instance, the general in Iran was killed, and we saw a massive uptick in the number of cyber attacks that were coming out of Iran. So over a 280% increase in the attacks that were coming from Iranian IP space. And we see different patterns from other nation states all around the world, but it also is sometimes individual criminals, bored kids. There's actually a surprising spike in cyber attacks that happen as schools are about to have tests, because the modern version of pulling the fire alarm to get out of the test is DDoSing your test service in order to not have to take the test the next day.
I want to ask you a little bit about the business, Cloudflare. Is this the year for profitability for Cloudflare?
Well, I think that we are on a path towards profitability, and you can see that we're making progress to that over time. We're also investing in the business and continue to push forward to more R&D and being able to deliver what it is that we have across it. But we're committed to profitability over the business, and I think we've demonstrated that we are on a path toward that.
Mm-hmm.
And one final question, because I'm just curious. What can I do as an individual to protect myself?
Go to
Give us
Cash.
some individual advice on my own cybersecurity and vulnerability, if I have any.
You know, it was actually interesting. What was one of the questions that I would get at every holiday dinner is, what could we do? And so one of the things that we built was actually a series of tools for consumers. So if you go online and download the 1.1.1.1 app, which is a service that you can have on your phone, it will instantly make your surfing the internet a lot faster. It gives you some of the same tools that we sell to some of the companies that are here at the World Economic Forum, but for you to be able to use it as an individual.
Well, Matthew Prince, CEO of Cloudflare, thank you so much for joining us.
Thanks for having me on. Appreciate it.
Next up, we have another big name CEO, Martin, PwC. Tim Ryan will discuss his outlook on the global economy in 2020. We'll catch you in a minute.
Welcome back to our coverage inside the Congress Center at the World Economic Forum in Davos, Switzerland. We're joined by PwC U.S. Chairman Tim Ryan, and we're going to get your read, well, your company's survey, rather, on the CEO sentiment out there. It looked like it was a little down from last year. What's going on with the CEO community?
Yeah, Julia, thank you. It's good to be here. We launched our 23rd Annual Global CEO Survey yesterday, and it showed a record decline in CEO optimism around global growth. I think that all goes back to the uncertainty that's out there. We look at everything that's going on. We think about trade, geopolitics, protectionism, regulation. It's caused a little bit of pessimism out there. So not a surprise, but without a doubt, certainly influencing some of the thinking.
But not only that, they're also not so upbeat on their own company growth prospects, and that you think that correlates with the global economy's growth prospects as well, right?
We saw a little bit of a conundrum because we also survey not just your views of the global economy, but we also survey how confident you feel in your ability to grow revenues over the next 12 months. And while that was a decline from previous years, it's still pretty high. So what's interesting is while the general view of global growth is a little bit down, what we're seeing is CEOs' confidence in their ability to grow their own revenues still very high. And I think that goes over the last couple of years. They're confident in their ability to control what they can control and to go out there and compete for market share. So that's still pretty strong.
Tim, who is right and who is wrong? President Trump gave a pretty a widely watched speech today, pitching a lot of economic optimism, which stands in stark contrast to this survey's findings.
Yeah, so I think at the end of the day, you got to get drilled underneath the details. What we see, even company by company that we meet with, they're feeling pretty good about their own growth prospects. I think what you're hearing is we'd like it to be even better if we get some certainty. And what the survey really highlights from my perspective is the uncertainty. So as we negotiate different trade agreements across the world, as we look to reduce the fraction of regulation that's out there, I think what you're seeing is not a question of right and wrong, but more certainty will bring even more economic confidence and ability to invest.
So on the heels of the Phase 1 U.S. China trade agreement, and then President Trump said today that, look, very shortly we're going to start Phase 2 negotiations.
Right.
Do you think that probably helps with the kind of an uptick in the certainty, I would suppose?
I do, and it's important to point out the survey was done in October, November timeframe. It would be interesting to see if we did it today, because here we are a couple months later, you've got Phase 1 USMCA in place. So I think directionally we feel a little bit better than what the survey is indicating.
Mm-hmm. Yeah.
Looking out towards the back half of the year, the president suggested, at least to me, that the U.S. economy will strengthen and re-accelerate in the back half of the year.
Yeah.
Based on all your CEO conversations at WEF, is that likely?
Yeah, so it's interesting. I've had a number of meetings just in the last 2 days, and that is what we're hearing. And that's also what we have heard over the last couple of months back in the States from our CEOs. There is a sense of confidence that there's a lot of really good signs in the economy in terms of consumer strength, companies investing, a lot of investments in technology. So I think we do feel pretty good about the momentum of the economy.
Well, you know, another big theme at the World Economic Forum, of course, is stakeholder capitalism. I just feel like we're almost at a watershed moment that this has come up over and over. Do you feel confident, based on your conversations with CEOs, that we'll actually start seeing some of this implemented?
Yeah, so it's a great question, and without a doubt, over the last year, and when you think about BRT in August, and you think now here at the World Economic Forum, we're hearing about that. I do feel like we're at a tipping point. What I see behind the scenes over the last couple of years, there has been a lot of activity around taking care of people, investing in communities. I think you'll see more transparency, more of a willingness to invest. And I think it starts from some really good things that have been happening over the last couple of years.
But do you think corporate America is at the point, most particularly CEOs, that they're willing to give up 1 penny a share to go ahead and go all in on stakeholder capitalism? It could be more pennies, but maybe a penny.
So Brian, what I would say is, let me reframe the question. CEOs understand what's important to all their stakeholders, and it's not necessarily a question of do you invest in a penny for something that doesn't tie back. Investing in people is good for the bottom line. Investing in communities strengthens people who can buy your products. Investing in your own employees with upskilling helps give innovation and whatnot. I think you're seeing more of a willingness to invest in those types of things that will also be good for business. What I don't hear in the C-suite is it's either or. This is the right way to go make money and get a sustainable economy.
I want to talk about the future of work, because when I think of the future, I think of this young generation. There was a teenager panel here with Greta Thunberg and many other activists. And you have to wonder, because these are the future workers, voters, future investors, are companies doing enough to prepare for that? Because, I mean, they're going to be working very soon. And what does that future look like?
Yeah, so it's funny. I tell people, with all due respect to former CEOs, there's never been a more challenging time to be a CEO because you have so many stakeholders. But in many respects, it's easy if you listen. And when you listen to your consumer base, you listen to your future employees or current employees, they're telling you what the answer is. For example, they're telling you they want to be invested in upskilling. They're telling you, we're worried about our job relevance. What are you going to do for me as an employer to help me stay current in a world that's going to keep moving faster and faster? And I'm seeing more and more CEOs listening to that. And a great example is 3 years ago here at the World Economic Forum, upskilling was barely on the agenda. Today, 3 years ago, it's mainstream. You're seeing companies across the U.S. invest in their employees for upskilling because it's good for employees and it's good for business.
What do those investments look like?
So a couple of things. You're seeing investment in basic skills. So how do you build a bot? How do you build an automation? How do you learn human-centered design badge where you learn about how to solve problems differently? And then you are seeing also investments in teaching employees critical skills like data analytics, and in some cases even trying to take people with base knowledge, teaching them artificial intelligence, natural language processing and the like. We're seeing that across the board.
Well, Tim, I don't know if you can name names, but can you name some names of folks who are just getting it right when it comes to the upskilling?
So one of the things we do is we don't necessarily talk about clients, but I'll tell you what we do at PwC, because we, in this particular moment, we actually feel like we're a leader in this space. 3 years ago in the US, we launched a program called Your Tomorrow, where we said to our employees, as long as you opt in, we're not going to leave you behind. Because we even knew with a highly educated workforce, they were worried about their job relevance. Over the last 3 years, we've invested $500 million in each of the last 3 years, upskilling our employees, and we've not mandated it, and we have an 87% engagement rate where our employees are taking advantage of the programs we have. It helps us, helps our clients, most importantly, it helps them stay relevant.
Well, Tim Ryan, PwC Chairman for the U.S., thank you so much for joining us
Thanks,
at Davos.
Julia. Thanks, Brian. Good to be here.
And up next,
Well, we'll talk more about markets coming up next on Yahoo Finance.
Hello, everyone, and welcome back to our live coverage inside the Congress Center at the World Economic Forum in Davos, Switzerland. Our next conversation is going to be out of this world. That's right, we're talking about space with Rick Ambrose from Lockheed Martin Space. Rick, thank you so much for joining us.
Thank you for having me here.
So you and I were just talking about space, and it's such a huge part of the global economy, yet it's not something that your everyday person thinks about. So walk us through why space is so important to us here on Earth.
Yeah, that's a great question. Space is a true global business and industry. If you estimate the size of the space market, it's probably just under 400 billion, and with most of that being applied here to Earth. Our climate we monitor, the weather systems, the lives we save, Space Systems, we calculated in the U.S. alone last year, saved 422 people through search and rescue and things. But monitoring those weather, warning you, all that comes from space.
Rich, I believe yesterday, China came out and said they will launch 60 spacecraft into orbit this year, a record for them. Do you think we're at risk, the U.S. is at risk, of losing the next space race?
Yeah. I like to put it in a different framing. Is not a space race, but for space to be viable, it has to be a vibrant marketplace like any other industry. So we want many people in space, many countries. There's 75 spacefaring nations today. And as we move forward, supply chains, competitors, for it to be vibrant, we have to have that level of competition. Because we go to space, we want to stay this time.
When you hear China come out with that type of news, do you think that poses a security risk for the U.S.?
Well, there's always going to be, space clearly provides national security capability to many countries, and it's there. Now, they're counting all their satellites, 60, and frankly, they were, in 19, launched more satellites than U.S. and Europe and Russia. So that's ongoing. They have a very vibrant program, but I think it's good. We have plenty of technology, great industry base in the U.S. and Europe and abroad, and I'm not worried about it. Let's go make a great space economy.
You know, it really feels like just in the last couple of years, it's like the excitement's been re-energized when you think about space. It's just something that's now more and more discussed. When you think about the future, what are the ambitions? I mean, what's the moonshot, if you will?
Well, exactly that. The big ambition is a moonshot with NASA's directive for us to put the first woman and a man back on the moon by 2024. That is not an easy task. That is a big challenge. But we have the capability. We have to go fast, but we're going to have to reuse a lot of our systems that we have today. And so we, in construction today, we have the Orion capsule, be part of the Artemis mission. And it's global. We're teamed with, NASA has a European Space Agency doing the service module. That'll go up. You probably saw us, we're teamed with Blue Origin as the lead to do the lander, to go down. 4 companies involved with that, Northrop Grumman and Draper. So if you're not excited by space right now, nothing's going to excite you.
Can you give us an update? You mentioned Orion. Is that still slated for a manned aircraft by 2022?
Yes. Right now, we don't have a firm date for the launch. It'll be either the end of 20 or early 21. NASA's looking at that right now, and I think they'll have a date pretty soon.
You know, Richard, too, you have a joint venture with Boeing for services in the space race. Given Boeing's troubles, has that slowed any initiatives regarding that alliance? Are they still moving as fast as they were in the space race?
Yeah, so there's a couple partnerships. One, we were partnered with Boeing. I think you're referring to United Launch Alliance.
Correct.
Yeah, no, that's going. ULA is redesigning their Vulcan rocket as part of the next generation launch vehicle. That's moving. That doesn't affect what's going on there. And then Boeing has a commercial crew working with NASA. That's solo with them. I wasn't sure you're referring to that. But in our industry, we have a lot of checks and balances we have to put in because we only get one shot to do this right. So we have independent, internal, external audits, quality, mission success that we all review with our employees.
Well, go ahead, Juju.
No, I was going to say, real quick, what is the biggest challenge?
The biggest challenge?
Yeah.
For the moonshot? Well, I'd say the schedule is probably the biggest challenge, and making sure because our commitment is to see astronauts there safely and home safely to their families, and we're not going to do it if we can't get there safe.
Rick Ambrose, thank you so much for your time.
Very cool topic. Thank you. We appreciate it.
Thanks for having me.
Well, that's it for us right now, but we're going to hand it off to our colleagues, Editor-in-Chief Andy Sower and my normal morning show co-host Alexis Christophers for another 2 hours of live coverage here at the World Economic Forum. Take it away.
everyone. Welcome to Yahoo Finance's special live coverage of the World Economic Forum in Davos, Switzerland. I'm Alexis Christoforous.
And I'm Andy Serwer. It's the 50th anniversary of the annual meeting here in Davos, and it's shaping up to be one of the biggest yet. President Trump arrived here this morning and delivered his opening remarks a short time ago. On the same day, his impeachment trial started in the Senate.
You know, the sun is just beaming through here. I know it's usually very, very cold. It's in the 40s today.
Maybe that's climate change,
It's
Alexis.
a heat wave. Speaking of which, we've got a lot of news today. Environmental activist Greta Thunberg, all 17 years of her, was here earlier today. She addressed the crowd, saying that she doesn't believe anything has happened in terms of climate change since she started being an activist back in 2018. And she's asking everyone here to divest of their fossil fuel investments.
And kind of interesting that she was here at almost exactly the same time that President Trump was here addressing the audience, so two people who don't necessarily see eye to eye on things.
Yeah, they've gone on it on social media. We don't believe they ever met here in Davos. In addition to those two big headliners, lots of CEOs, thought leaders, influencers, some showbiz folks as well, entrepreneurs. I saw Will.i.am here earlier.
Tim Cook, CEO of Apple, we saw him, and all manner of CEOs of that ilk.
Yeah, also spotted the MLB Commissioner Rob Manfred and lots of other names that you're going to be hearing about for the next 3 days while we're here in Davos.
And joining us now is David Rubenstein, Carlyle co-founder and co-executive chairman. David, great to see you.
My pleasure to be here. Thank you for having me.
So you just saw the president speak, and in fact, you spoke with the president after his speech. What were your thoughts on his remarks, and what did you guys talk about?
President was better received, I think, than he was 2 years ago. He's better known in many ways, but the policies that he put into place seem to be working. You may or may not like his personality, you may or may not like his style, but the economic policies he put in place seem to be working in the United States, and therefore a lot of people here are giving him some credit. I wouldn't say they're saying he's the nicest person they've ever met. I didn't say that they said that. They didn't say he's not, but I would say they are saying his policies are working. And so I think he was pleased with the speech. It was worked on by his team, and he read from the teleprompter. And when he does that, I think he kind of gives a pretty good speech. When he goes off the teleprompter, sometimes things go a little bit different than maybe his advisors would like.
And some people complained to me that the speech, instead of really addressing the crowd at Davos, David, was more for consumption back home in the United States, kind of a campaign speech almost. What do you think?
It sounded like a stump speech in many ways.
If you were being impeached and you had to run for presidential re-election and you had to deal with Davos, what would you rather do? I mean, he obviously worries about people in the United States. The people here are impressive people. I like everybody here, but very few of them are voting in Iowa. Very few of them are voting in the United States presidential elections. So that's his main audience. But he was well received here, better than he was before.
The Iowa caucus is coming up. We're going to find out in the coming months who will go up against President Trump for the White House. What are your thoughts? Who might we see as the front runner?
Well, the Iowa caucus has changed dramatically. I worked in the White House with Jimmy Carter, and he was given a lot of help by what he did in the Iowa caucuses, but he actually didn't win. He came in second to undecided, and he only got 11,000 votes. That's all it took to propel him. Today, it probably takes 100,000 votes or so to do very well there, or maybe a little bit more. Today, I would say that they're bunched at the top, and you don't really know until the last week or so. Surging a month in advance isn't as good as surging a week in advance. And so you don't really know who's going to get their voters out and so forth. So I do think that they're bunched at the top. There are 3 or 4 at the top, and it could go either way. I think the press is going to make it a big deal if one person wins by 2% or 3%. I don't think it's going to be that big a deal a week later.
Do you think Michael Bloomberg has a real shot?
Well, not in Iowa, but elsewhere, I should disclose that I have a TV show on Bloomberg TV, and I've long been close to Mike, and I admire him, and I think he has a real shot compared to where I thought he was going to be just 2 months ago. I thought it'd be harder, but it's clear that his ads are having some impact, and people think that if the party is moving to the left, he would be a good counter to that. Now, we don't know whether the party's going to move to the left. We'll see in the first 4 primaries and caucuses. If they move to the left, Mike has a better chance.
Going back to President Trump, David, was he in a good mood today when you met with him? Did he seem concerned about impeachment, number one? And number two, do you think he can get reelected?
I do think he can get reelected. Remember, most presidents get reelected. And when presidents don't get reelected, it's usually when they're in a recession. Gerald Ford, George Herbert Walker Bush, Jimmy Carter. The last president who got reelected in a recession was William McKinley. So it's, the economy is pretty good. So therefore, I think he has got a pretty good chance of getting reelected. We're not in a big war anywhere. That's another factor that can be taken into account. And generally, the economy is as strong as we've seen it in a long time. So yes, I recognize all the controversies and I recognize the people that can't stand him. But in the end, it's going to be down to about 6 or 7 states. And in those states, he's doing reasonably well.
And his mood?
His mood is pretty good. He was well received here.
Okay.
And therefore, I thought he was, in a group with business people. And these are people that he's very comfortable with. So, and a lot of international business people. I think he's going to have dinner with a lot of international business leaders tonight. He's going to have breakfast tomorrow with a number of people who are also leaders here. And I think he's in pretty good spirits, actually.
I was in the room when he was giving that speech. I was sitting with the media, which can be a critical group, but cynical. And I heard some murmuring, some snickering when he made some grandiose statements. There was one where he said, the U.S. is in the midst of an economic boom, the likes of which the world has never seen before. And his speech was very optimistic, very pro-America, which one would expect from President Trump. But do you think there's a feeling that maybe he's out of touch with the rest of the world making statements like that?
Well, he wouldn't be the first politician to exaggerate how his policies have been better than maybe they have been, but I think his policies have worked, or something's working because the economy is doing well. Unemployment's low, interest rates are low, consumer spending is up, business spending is in pretty good shape, stock markets are record highs. What more can you ask of somebody, is what I would say. So there's a lot of a lot of consternation about him personally and some of his policies, but on the economy, it's hard to criticize him on the economy. And I think he was, giving a speech that he was pretty pleased to give. Think about this. Let's suppose you were impeached by the United States House. You have a Senate trial going on, and you come over here and give a speech. Do you think your mind would be on something else? That's amazing to me that he actually came over and his speech was focused on what he was supposed to talk about.
All right, David Rubenstein, co-executive chairman of the Carlyle Group. Thank you so much for joining us.
Thank you very much.
All right, up next, the Washington Post's Lalo Weymouth will join us on a big day here at the World Economic Forum. We're going to have more reaction to President Trump's speech today. And what now after the signing of that trade deal with China? UPS's CEO, David Abney, will be here as well. So stay with us live from the World Economic Forum in Davos. We'll be right back. Welcome back to our live coverage of the 50th anniversary of the World Economic Forum here in Davos, Switzerland. This is a small ski resort in the mountains here in the Alps where for 1 week every January, some of the most powerful names in business and entrepreneurs and elsewhere descend on this small, tiny town to talk about the state of the global economy.
And it really is. Davos is actually really a pretty sleepy place, except for this 1 week each year. And before the World Economic Forum, and this is the 50th anniversary, before it became situated here, the town was famous for the Thomas Mann novel, The Magic Mountain.
And there is a mountain here named after him.
Fame. That's right.
That's true.
That's right. In any event, we are now delighted to be joined by a guest, Lally Weymouth, the Senior Associate Editor at The Washington Post. Lally, thank you so much for joining us.
Thank you, Andy.
So did you get an opportunity, Lally, to hear the president's speech?
I did.
And what were your thoughts?
Well, I thought he was walking into a pretty hostile audience, to tell you the truth. And I thought he did fine. I thought he did very well.
Yeah, it's interesting you say that because I was telling our previous guest that I was in the room when he came in and during the speech, and I felt like the applause was more obligatory than really being supportive. Would you agree with that?
I would, and I thought the speeches that were building up to him were also not that friendly.
Yeah, it wasn't the most warm crowd.
No.
Yeah. Do you think that he was also extremely optimistic, not just about the U.S. economy, but about the world economy? And if you look at some of the surveys that have hit the wires recently, we had the Edelman Trust Barometer, PwC is out with its CEO survey. Optimism is not out there in leaps and bounds. Some CEOs are actually very concerned about economic growth this year. Do you think
I thought he was focused on the U.S. I thought in a way it was aimed at the U.S. audience. In a way, it was, you could almost say it was a campaign speech, and a pretty good one at that. Yeah. He was talking about the themes he talked about in 2016, the middle class being left behind, and he was explaining how he lifted them up.
Lally, you've seen so much history in Washington, D.C., and we both grew up there. And of course, with talk of impeachment, your thoughts must go back to the Nixon era and your mother, Katharine Graham, publisher of the Washington Post, and her role and your family's role in that part of history. What are your thoughts now about this impeachment process?
Well, I don't think it's at all the same, frankly. And of course, my mother did a great job, I thought, and of course, in Watergate. But I think this is very different. I think this is more like two parties who really have major differences, which perhaps should be settled at the polls, but unfortunately are going to be settled through this impeachment process. And it looks like the president will be acquitted to me, but I'm just speaking as an observer.
He touted his Phase 1 trade deal, which was just signed this past week. Do you think that that deal is going to be a meaningful shift in the relationship between the U.S. and China?
Well, I think if you talk to most business people, and I really read about foreign affairs, that people feel that someone had to stand up to China in certain ways. Not that they're not a great power, not that they're a rising power, et cetera, but they were stealing a lot of the IT, as you know, of our corporations. And I think that Trump did that, and I think Phase 1 will be meaningful.
I know you said your expertise is in foreign affairs.
Yeah.
And I know you've written about Venezuela.
Yes.
And I'm curious what you think about the opposition leader there and how that could ever be resolved.
I think he's really great. I interviewed him on, if you can believe it, on WhatsApp. You know, I tried to interview him in person, but he was flying around Latin America just before he re-entered Venezuela last year. And I think he's tremendously brave, tremendously courageous, and you know, of course, people thought that once he went back in the country, that Maduro would go. And I think it's really unfortunate he didn't go for the Venezuelan people who are starving, as you know.
Yes.
Having their medicine taken away, having their children's medicine taken away. And it's a human rights tragedy in Venezuela, I think. And I think Juan Guaido deserves a lot of plaudits, and I hope he gets them here.
You know, on the subject of Iran, I know the Iran foreign minister was supposed to come to Davos. Word is he pulled out at the last minute. Don't know if that had anything to do with the fact that President Trump was going to come and speak. Trump rekindled peace talks with the Taliban amid these rising escalations with Iran. Is there a Trump doctrine on foreign intervention?
Well, I think you're talking about Afghanistan, and I think that that apparently the administration definitely has ongoing talks with the Taliban, as you've referred to, and they're definitely trying to reduce U.S. troops in Afghanistan. But I think Afghanistan is one thing, and it's important, of course. And I think what you're referring to with Iran is a different situation. And they have another policy, which was the getting rid of the general.
Soleimani, yes.
Yeah, exactly.
And you've also written about the the rise of populism in Europe as well.
A little bit, yes.
And so are you concerned about that, or is that something?
Yes, I am, and I think most people should be. And I don't, but the interesting thing is I don't think it's just in Europe.
Right.
I mean, I think if you look at the riots in Chile recently, I think it's really, even in Asia, I think it's populism is spreading, and I don't personally think it's a great thing. But I think in Italy it was particularly prevalent about a year and a half ago, and it seems to be now calmed down for a while in Italy.
Right.
All right, we're going to leave it there.
Yes, Lally Weymouth,
thank
Senior
you so
Associate
much.
Editor at The Washington Post. Thank you so much for joining us.
Thanks. All right, up next, lots more ahead for you. The CEO of UPS, David Abney, and the future of work. It's a hot topic here. KPMG's U.S. CEO Lynn Doughty will be here to talk about that and a whole lot more. Stay with us. Welcome back to our live coverage of the World Economic Forum. And the 50th anniversary of this forum, Andy, really got off to a roaring start. President Trump has already spoken. And also the other big headliner, 17-year-old Greta Thunberg, the activist, spoke. And tomorrow, I'm intrigued to hear from Prince Charles. He's going to be here making his first appearance for the first time in 30 years. Apparently, he has a council all about sustainability, which ties in nicely with the theme this year. So we're going to hear from Prince Charles, who we know is going through Megxit right now.
Yes, the royals are always of paramount interest, not only to people in Britain, but strangely to me, at least, in the United States.
Yeah, I'm with you, and I think a bunch of people are. All right, let's introduce our next guest, David Abney, CEO and Chairman of UPS. It is great to see you.
Glad to be here.
Thanks for making time for us in Davos.
Thank you.
So you got a big shout out from President Trump during his signing of the Phase 1 trade deal. You were in the room there at the White House, and he had thanked you for helping to make that deal happen. You were there in the room when he gave the speech today. What are your thoughts on what he had to say?
Well, since our focus is on international trade, so we're going to be supportive of trade agreements, and we certainly were last week of Phase 1. That's why I was there for the signing. I think there's some positive momentum. If you take this agreement, if you take USMCA that was passed late last week by the Senate, and then even the Brexit situation looks a little bit more certain than it did a few months ago. So from a trade standpoint, I think we have a little positive momentum here, so we're excited about it.
David, some people have said that trade was fine until President Trump broke it, and now he fixed it again, and now we're just back to where we were before. What's your take on that?
I think that that trade has been slowing down for the last few years. There's been, I don't think that as business people we do as good a job as we need to talking about the benefits of trade, and I think that people think that that someone else is getting the better end of the deal. So I think it's something that's been going on for a few years. We just need to continue to, one, make trade inclusive, make sure that people feel like that they're benefiting from it. And then if we do that, I think you'll see a more positive tone.
You know, I said a moment ago to Andy that the theme this year is sustainability and what we can do as a global community to combat climate change. I know that you're taking some steps at UPS to do just that. Can you share with us the latest and sort of what your goals are for this year? I will. We take our responsibility very seriously. The number of planes and the number of trucks that we have on the road. And so first, it's the right thing to do, but then it's the smart thing to do, too. And one of the biggest areas that we focus on is through optimized dispatch is not being able or not having to run the miles that you don't have to have. The greenest mile you ever travel is the one you don't travel, right? And so we're doing a lot of emphasis there, but we're adding a lot of alternative fuel vehicles, and we are doing a lot from electric, even electric tractors. We've got the largest order with Tesla of electric tractors, and we hope to see those roll out this year too. So a lot of good things. What about drones? Are you implementing drones? We are. We were the first to get the Part 135 certification. We're the first to have a drone airline to get approved in the U.S. And we started out in the healthcare industry, and we're actually moving blood and medicines and clinical tests, those kinds of things, and gotten off to a good start. And as the regulation gets written, we expect to do much, much more, including delivering to homes at some point through drones. Yes.
And soon?
Well, it's going to depend on when the legislation or the regulation gets written. We already have done it in some tests. The technology is there.
Oh, I saw some of those tests, yeah.
That's right.
So other companies are getting in this field as well, and I want to ask you about your frenemy, Amazon. Some people have said that you get about 10% of your revenue from that company, but of course they're also getting the delivery business. Can you sort of talk to us about your complicated relationship with Amazon?
Amazon is a big customer of ours, and they're also a competitor in some ways. And as long as the relationship is mutually beneficial, if it works for them and it works for us, that's fine. But we have to remember that e-commerce is a lot more than Amazon. And over 90% of the large e-tailers and retailers are UPS customers. And that's not even talking about the hundreds of thousands of small and mid-sized businesses. And that's where we're really focusing from an e-commerce standpoint. Back to trade for a moment. What would you like to see in the Phase 2 trade deal? If you had Donald Trump's ear, what would you tell him to make sure is in there? Well, market access is something we hear from our customers a lot. They feel like in some industries that they are having trouble competing in being able to reach the Chinese market. Then there's intellectual property concerns that you hear about. But really, what we would like to see is an agreement that encourages trade both ways. You know, China to the U.S. back to China. We'd like to see where the tariffs could be lifted and that we get a successful agreement. And we just think the two economies are so intertwined that it would be best for both countries if we can find a positive answer that solves some of those concerns. I think a lot of people are in agreement with you. David Abney, CEO and Chairman of UPS, thanks so much. All right, thank you. All right, up next, KPMG U.S. CEO Lynn Doughty, and later, Savita Subramanian of BofA Merrill Lynch. The IMF cut its global growth targets. We know that. What does that mean for the markets? We're going to discuss it with our guests coming up.
Welcome back to our live coverage of the 50th anniversary of the World Economic Forum. I'm Alexis Christoforous here with our editor-in-chief, Andy Serwer. We want to introduce now our next guest, Lynn Doughty. She is the CEO of KPMG US. It's great to see you again. This is sort of a regular thing for us, right?
Yes, thank you. Thank
Davos.
you for having
Good to
me.
see you. I know it's a busy day. I understand you got to hear some of President Trump's speech earlier today. I don't know if you got to talk to other colleagues. Sort of what's the buzz around his speech today?
I think pretty much encouraging, that we're advancing on trade. And so I think where there was a lot of nervousness about that months ago, I think people are feeling a little bit more optimistic about that. I think from the economy perspective, and this is consistent with what I'm hearing from many companies that I'm talking with, that the U.S. is the sort of the stable place. And, we've been talking about recession for 3 years now, and we're still talking about it. We're still talking about it. So I think it's pretty consistent with what I've heard many companies say.
Lynn, I wanted to follow up on that point and ask you what the CEO and other leaders are talking to you about in terms of the economy and the expansion. Are more or less optimistic now than they were, say, in the fall?
I would say the fall, I would say more optimistic in the U.S.
Right.
They are not holding.
All right, it seems like we are having some technical difficulties, so we will sort that out. We will continue with our live coverage of the World Economic Forum over in Davos, Switzerland in just a few moments. But first, let's take a look at the markets right now. We are just 10 seconds away from the opening bell. We have the Dow, the S&P, and the NASDAQ. Looks like they will start the day to the downside. We can see the ringing of the opening bell right now underway on Wall Street. We have Jared Blickery standing by at the Wi-Fi Interactive board. And Jared, we talked about it earlier, but it looks like the momentum here is to the downside, at least for the Dow and the S&P.
Yeah, we're looking at the Dow Jones heat map right here, and we see a lot of red on the board, although it is kind of a mixed picture. We see some of the big cap names like Apple, that's down 0.5%, Microsoft down about 0.25%, and Visa down about 0.33%. Financials have been under pressure. We're seeing the 10-year T-note yield down about 4 basis points, testing the lower end of a positive trend line. So we'll have to watch that. That's something that's been consolidating for about 4 or 5 months now. We could see JP Morgan is down about 0.75%, as is Goldman Sachs, a very similar amount. And we're going to take a look at the sectors here that are leading, and it's a defensive looking day because we have utilities and real estate and staples. Those are outperforming right now. To the downside, we see materials are underperforming. They are the biggest laggard, along with energy and consumer discretionary. And broadly, we're seeing the commodity complex down. That's despite the fact that the US dollar itself is down. Commodities, specifically looking at crude oil, that's down about over 1% right now. Well, actually, it looks like it's pared some of its losses, so it's down about 0.6%. Gold really not being able to catch a bid either, and that's despite the fact that interest rates are down and there's kind of a flight to safety going on in other markets. Now, this is gold. We're looking at what's happened overnight, and we're going to take a look at a longer-term chart. If we go about a year out, we can see the rally is still largely intact here. We're just off and really maintaining gains around about 1550.
All right, Jared, thanks so much. Let's head back to the World Economic Forum in Davos, Switzerland.
Really focus on our values and our culture, and that's been 2 years of really intensive work. And I'm finding that other companies are really focused on their culture as well. In order to achieve your strategic objectives, having the kind of culture that will ensure that you can execute on your strategy is important. And so I think that Lake House is a part of that, where you're able to reinforce your values and your culture. And so, you're right. I'm in year 5 of my 5-year term. This is just part of our ongoing normal process. And I feel like we're in a really great position to turn the page, move forward with some great opportunities for our business growing and the trust that our clients place in us.
Is the company actively looking for your successor?
Yes,
and are you part of that process?
Yes. So we're in the middle of our, ongoing, as we do, succession planning, and so we're in the middle of that process right now.
What's next for you? You gonna take a little break for a while?
I'm gonna
or
take
what's
a
Go to the
next?
lake house.
There you go. Well, that's just with work people.
There's a couple of lake houses I'd like to go to, but for me, it's been 35 amazing years at
Yes, at that one
KPMG. Which has really given so much to me, and I've learned so much. It's been such an amazing experience, and I really look forward to giving back and in some new ways. Haven't figured out what that'll be. Still have a lot of work to do ahead, but I'm excited about the next chapter.
I'm sure it'll be a little bittersweet, but we wish you all the best. Lynn Doughty, CEO of US KPMG. Thank you.
Thank you for having me.
All right, we still have a lot to go. You can't go yet. We got a lot happening here, Andy. Savita Subramanian of B of A Merrill Lynch is going to join us, and Martin Schroeder, IBM Senior VP of Global Markets. Don't go anywhere. Much more from Davos and the World Economic Forum when we continue.
Welcome back to our live coverage of the World Economic Forum's annual meeting in Davos, Switzerland. And Alexis, so much is going on here. The sun is beginning to go down a little bit here in Switzerland, but
it's almost 4 o'clock here local time.
It is a long day and a long night. There's activities going until 1 in the morning if you're up for it.
We don't partake in that too much because we have early mornings, but oh yeah.
Speak for
A
yourself.
lot of partying, and it's actually warmer than it usually is. It's in the 40s here today. I remember the last time I was here, I was always cold.
Zero.
Could never get warm. All right, we have another wonderful guest with us, Martin Schroeder, IBM Senior VP of Global Markets, joining us. Thanks for making time for us here at Davos.
Thank you.
Talk to me about, I'd imagine you heard Trump's speech earlier, or at least a bit of it. I'm curious, because IBM is such a global company, if the unrest in Iran, if the trade deal with China, how does that impact your business, if at all?
Yeah, look, we have a business in China, but it's not a big part of our revenue flow. So, and it hasn't changed the way we're doing business in China. It hasn't changed the way we're selling technology. So,
your supply chains are not affected?
No. And our supply chain doesn't really come through China anyway. So we've been able to navigate. Now, I think what is an important discussion that he did have this morning, and he mentioned it very briefly. I was actually surprised he brought it up. But when he started talking about USMCA, he mentioned the digital trade component. So we talk, as we just did, we talk a lot about the physical trade, right? We talk about soybeans and iPhones and things. The really important part of the USMCA for us that he talked about was this digital trade idea. And USMCA has has sort of world-class digital trade provisions to help enable that digital economy to continue to grow. That is where jobs are being created. That's where the most GDP growth is coming from digital trade.
I'm curious, what does the deal that he struck now do for your industry that the old NAFTA did not?
Right. So NAFTA was silent on digital trade, right? It wasn't, when NAFTA was written, we weren't really thinking about it. What USMCA has that I would call world-class, it has really sort of three features to it that are really important. One, USMCA says that data can flow freely. So of course, if there's a national security interest, then you wouldn't allow the data to leave, but data can flow freely between these countries. That's really important to allow. When you think about how the economy works and how data is so important to move around in supply chains, for instance. So number one, data can flow freely. Number two, there can be no data localization mandates in any of these countries. So nobody can say, Canada can't say, sure, you can do business here, IBM, but you have to leave all the data here. It has to stay in Canada. We've been fighting these in lots of different places, so there's no data localization mandate in USMCA. And the third really important feature, there's no requirement, there can be no requirement to give up your source code or your algorithms as a condition of doing business. So again, none of these countries can say, sure, you can operate here, but we need your source code. That's craziness. We would never do it.
Undercovered facet of USMCA that you don't hear much about, and I guess that would benefit you guys?
Well, it allows all of us to now we run the supply chains of the world, we run the banking systems of the world, we run the reservation systems of the world. So it allows now all of us to operate in this global trading network and allow the data to flow and allow companies to do it, efficiently and effectively and really maximize their supply chains and the use of all these new tools that are coming out so that they can optimize the way they run.
And Martin, let me ask you about AI and automation, because that's something that IBM is keen on, and yet people are concerned about the fact that it will impact jobs and cause job losses. And some people suggest maybe we need UBI to offset that, universal basic income. Do you think about those issues writ large?
Yeah, we sure do. It's a really important topic. So, if we step back for a second, the one thing that I think we feel, and I think everybody has to feel, is the idea that when we usher in these new technologies, we have to do it responsibly. And we have to get people to trust the technology. Otherwise, we really won't get the benefit of what these can really do for us. So in the case of job loss, we've been very clear. Our belief and our AI is used to supplement. It's man and machine. It's person and machine. It's not there to automate every task in the world. We just don't see the world that way. So when we think about how do you start to trust these kinds of technologies, you really do have to have a set of principles, one of which, again, for us is this is man and machine. We're going to use these together to allow people to do their jobs better. Now, that does mean that every job is going to change. We've been very vocal about this idea that every job that we can see, it's going to change a bit, which means now we have to get a workforce ready for that change. So there are responsible ways to introduce these technologies so that you can build trust. This is a very broad, very deep, very important topic that if we don't make progress on this as an industry, and with the help of government, then we're going to miss a beat here, and we're not going to allow these technologies to really bloom and do what they can.
You touch on something so important because the PwC came out with a survey that showed so many people are concerned about they're not ready for for what's coming, right? They want companies to take care of the upskill. They want to be retrained. Do you have an actual plan in place, for the next 3 to 5 years where this can be a reality at IBM?
So we've been active already for the last 5 or 6 years. So we've created a program as an example. It's in the U.S., started actually in Brooklyn, called PTech, Pathways to Technology. And think of it as a 6-year high school. So we get kids in, we now have them in over 8 countries. We get kids in. We put them through a curriculum that we design. Now, we have a lot of partners who've joined us, so they design their own curricula, but we design our own curriculum. And we're starting now to get these first kids out of these programs. So think of it as you essentially graduate with a high school degree and an associate's degree. But it's our curriculum. So we put them right into the jobs that we know are being created, that we're creating today. So today, the newest again, they're just starting to come out of the school. So the newest, they're designing web pages. They're in digital design. They're in cybersecurity. And we're hiring as many of these kids as we can get. Now, across the whole program, not just for ours, but there are over 100,000 kids now in P-TECH schools. So it does scale as well. So yes, there are ways that we're driving, and with our partners, others will be driving to help build that workforce of the future, which is so important.
All right, well, hopefully other companies can see that and sort of use that as a blueprint. Martin Schroeder, IBM Senior VP of Global Markets. Thank you so much.
Thank you.
And as the Australian wildfires burn, climate change and sustainability are top of the agenda here at Davos. What role can technology play? We're going to hear from Dell Technologies on that and a lot more. We'll be right back.
Welcome back to our live coverage of the World Economic Forum in Davos, Switzerland. And we're joined by our next guest, Savita Subramanian, who is Bank of America Merrill Lynch Head of U.S. Equity and Quantitative Strategy. Savita, so nice to see you.
Great to be here. Thanks for having me in.
So I get this is your first Davos, I should say.
First Davos,
right?
yes.
And how are you doing?
It's fantastic.
Okay.
I mean, it's dizzying. There's such an array of activities and talks and topics. I mean, it's fantastic.
So let me ask you
Yes.
about your take on the global markets and the global economy from your perch. What are you seeing?
Yeah, I mean, so I focus mostly on the U.S., but I think that things look pretty good. So our forecast for the S&P 500 this year is 3,300 by year end, which is a little bit below where we are today. I'm not bearish. I just think the market's gotten a little bit ahead of itself. And this year is going to be more about earnings rather than multiple expansion. So it's interesting to see that last year, 2019 was really a year where the market kind of ran on fumes. It was all multiple expansion, no real fundamental earnings growth. So I think this year is the sort of the show me year where we need to really see earnings materialize in a meaningful way in order to justify the multiple that we've gotten to for the S&P.
But are we going to see that earnings growth? I mean, some people are saying that 10% would be aggressive. But don't we need that level to sort of keep the market up?
We do. In fact, our forecast is for 8% earnings growth, and I think that's achievable. I mean, that's why it's our forecast. But really, that's predicated on the idea that margins could stop compressing as much as we saw last year. And I mean, I think a couple of things that are encouraging are if you look at wage growth, we've actually seen a meaningful deceleration in wage inflation. So this means the cost pressure at corporates is going to be a little bit less than what it was last year. year, we've also seen a little bit of pricing power for corporations, which is new, and we haven't seen this for a very long time. So what I thought was interesting is that if you compare the CPI to average hourly earnings, you're actually seeing the CPI or pricing power outpace average hourly earnings or wage inflation, which is positive for margins. So if that continues or at least holds steady, I think that we could see a better year from a margin perspective. And then I think the problem with last year was we had really tough comps from 2018, and you've heard this. The tax cuts created this monstrous growth in 2018, and it was really hard to lap that in 2019. Here we are, we've got kind of a clean slate, and I think that, as long as we avoid a recession, which, I think we do, and our economists think we do, we should see close to double-digit earnings growth this year.
So against that backdrop, I'm sure you heard President Trump today mention the Federal Reserve, accusing them of raising rates too quickly, being too slow in trying to cut rates. He actually said he would love negative rates, which some parts of the world have. What are your expectations for the Federal Reserve this year? Do we still have a very dovish Fed through 2020?
I think we continue to have a dovish Fed. I don't know if the Fed is going to have to cut rates this year because I actually see a lot of signs of real growth coming back. So, if you look at a bunch of the barometers that we track within research, so we follow industrial barometers, we follow trucking surveys, you name it, we follow it. And a lot of these more economically sensitive indicators are inflecting positively just over the last couple of months. So I think the Fed is there, ready and waiting, as they have been for the bulk of this bull market, but I don't necessarily think they need to be aggressively accommodative this year, given that we're actually seeing some really strong green shoots in the economy. So I think it's interesting. We all, within research, we have our own, kind of list of indicators that we look at. And what I think is really meaningful right now is that every team, be it Europe, China, U.S., be it, equity, economics, everybody is seeing their indicators that they pay attention to inflect positively. So this is the first time in this bull market that we've actually seen this concert, this array
on the same page,
of indicators inflecting positively. So I think that's really worth paying attention to. Yeah. And the Fed, I think, is going to be there if we need them, but I don't think we will need them this year.
Let me ask you, though, about some of the scary stuff. I mean, because you were highlighting the PEG ratio being at 1.8, the highest it's been in 1986.
Highs.
PEG ratio is a price to earnings growth ratio. And then the talk about the FANG stocks taking all the air out of the room, the market capitalization of those tech giants being so large. Is that the riskiest part of the market?
I definitely think so. So we've written a lot about this. And I mean, it sounds a little weird, but I actually think there's significant liquidity risk in mega cap tech. And here's why. I know, this sounds bizarre, but because, these are supposedly the most liquid stocks in the world. But if you think about it, everybody owns mega cap tech. And I think what we've seen over the last several years is this convergence of hedge funds, long-only mutual funds, pension funds. Everybody is searching for growth, and they're all kind of, in our data, they're all more overlapped in that small subset of stocks than we've seen in the last 10 years. So just in case there is any sort of event or redemption cycle or anything where active managers have to sell their assets. And we've seen this movie before. We've seen active funds lose to passive investors every year, for decades now. So if we do see this redemption cycle, I think those really crowded, high growth, mega cap tech stocks are actually more at risk than other parts of the market that might be considered, a little bit more risky. So this is a really strange bull market if you think about it, because we've had a 10-year bull market that's been led by tech and biotech and utilities, like high yield and high growth. I mean, this is not your normal bull market. And I think that those pockets of the market are particularly crowded, particularly expensive, and poised to derate.
All right. Well, thank you for helping us sort it out, Savita Subramanian. Thank you so much for joining us, Bank of America Merrill Lynch, Head of U.S. Equity and Quantitative Strategy.
Thanks, Savita.
Thanks.
All right, up next, Karen Quintos, Dell Technologies Chief Customer Officer. She's up next. Stay with us. Welcome back to our live coverage of the World Economic Forum in very sunny Davos, Switzerland. The sun just starting to kind of go down, Andy. Now.
Music went down too.
Music went down too. That's what happens.
Down, right?
We want to welcome Karen Quintos, Dell Technologies Chief Customer Officer.
Chief
Yeah, I was going to ask. Welcome, first of all.
Thank you.
Thanks for coming.
Thank you. It's great
and
to be here.
I want to learn more about your job because you said that Chief Customer Officer is actually a natural fit for women. What do you mean by that?
Well, I think, when we think about the needs of our customers, they want to talk to somebody in the organization that is really committed to the outcomes that they're trying to achieve. And I think women bring this natural ability to collaborate, natural ability to build relationships, lasting relationships, and the ability to just sit across the table with our customers and say, what are the objectives you're trying to achieve? How can Dell Technologies help you with that? So that is a big part of the Chief Customer Officer role at Dell, building a customer success approach with our customers. And I also have responsibility for all of our data analytics and all of the big data platforms that we have built with our customer data. And then finally, diversity and inclusion and corporate responsibility is also part of my remit.
So what is Dell today? I mean, you were a hot growth stock, growth leveled off, did a big transaction, came across the other side, and where is the company positioned now?
The company's a very different company from what it was back in 2000 when I joined the company 19 years ago. Michael made the decision to take the company private, really gave us the independence to be able to transform into an end-to-end enterprise player. In the midst of that, made the decision to come together with EMC. And now when you think about Dell, we have our core PC business, we have a deep and rich enterprise business, servers, storage, networking, data protection. And we also have the rich assets with VMware and Pivotal, and a really key cloud platform, which is where we have built all of our as-a-service capabilities that we announced about a year or so ago, and continuing to invest in that area.
What about climate change? Quickly, we only have about 30 seconds. What are you guys doing in terms of sustainability?
Well, we made a big moonshot commitment that we announced 3 months ago that set the foundation for our 2030 goals. We said that for every product that we put in the market, we're going to take one back. And we also made commitments around what we're doing in the area of emissions, what we're doing in the area of using recyclable products capability into our packaging. So by the year 2030, we'll have 100% of our packaging will be recyclable, 50% of our product content will be recyclable. And that's what I love here at the World Economic Forum, because this whole theme around collaboration and how we do and work these things together with our customers and our partners will be how we all achieve the success in this particular area. So we're excited about it.
They're great goals to have. Karen Quintos, Dell Technologies Chief Customer Officer. Now we know what that is.
Yes,
Very
exactly.
Good. Thanks so much for being with us.
Thank you.
And do stay with us. We have lots more ahead, including some more big headline guests coming up here on Yahoo Finance, live from Davos, Switzerland, and the World Economic Forum.
Welcome back to Yahoo Finance's special live coverage of the World Economic Forum here in Davos, Switzerland. The mountains are lovely. The sun is beginning to set. There's a town here. There is a little town.
Oh, and it's adorable. Yeah, it's teeming with people right now, about 3,000 of the world's richest, most powerful people.
Well, and
more than
big
that,
thinkers,
though.
right?
Right,
it's
absolutely.
not just for the wealthy, although it's often described as such, and not inaccurately, I might add. We have got a whole roster of amazing guests, and we're joined straight away by Neil Ferguson, who is the Hoover Institution Senior Fellow. Neil, so great to see you. Thanks for joining us.
I'm definitely not one of the super rich. I just want to make that clear to your viewers.
But I hope you're in the thinker category, perhaps.
I think that's why I'm here.
Right.
I'm doing my best to think.
And not like Elvis Presley necessarily, though. We talked about that earlier.
Well, I don't think I can think of a single resemblance between me and Elvis Presley.
You're both outstanding.
Well,
How about that?
You're very sweet.
Now, let me ask you about President Trump. You heard him speak a little bit. What were your thoughts on his remarks?
Well, I rather relished the deadpan delivery. This was well-behaved Trump. I also thought it was right that he emphasized the economic successes of his administration, which I think are significant, even if he was guilty of a little hyperbole, as is his wont. You have to remember that the last time I was here, which was in January 2016, almost nobody gave him a chance of winning the nomination, much less the presidency. And then the following year, they were all in a state of trauma because he'd won against their expectations, and they thought there was going to be a great disaster as a result. And they're all a great deal richer than they were back then. And it's partly due to President Trump. So he was, I think, entitled to take a little credit for that, even if he didn't exactly get a standing ovation.
Bit of a victory lap, right?
Yeah, do you think they're begrudgingly embracing him?
Oh, yes. Yeah. I mean, the dirty little secret of Davos 2020 is that they all need him to get re-elected. Nobody wants to say that out loud. But I think the consensus view is, A, that he will be re-elected, and B, phew, that's probably a good thing if the alternative is shudder, Bernie Sanders or Elizabeth Warren.
Is he the best candidate for the world economy? Is Donald Trump the best candidate right now?
Well, I think if Mike Bloomberg were listening in, he'd say, what about me? But it's still not clear that he really has a strong chance of getting the Democratic nomination. And if you take him out of of contention, then what are you left with? Joe Biden, who's not exactly been impressive on the campaign trail, and the current front runner in waiting, Bernie Sanders, who is a democratic socialist. I think if the markets even begin to suspect that Sanders has a shot, I think there will be significant volatility this spring. If Biden can hang on to it, then people will relax. But on the basis of past performance, I think most investors would say, yeah, please, can we have 4 more years of this? Because think of just one example. Donald Trump, who is certainly not renowned for his economic expertise, won an argument on monetary policy with the Federal Reserve, which you reminded us of today. If you go back a year, the Fed was just abandoning its plan to do quantitative tightening and to raise rates. So Trump won that argument and gave the world, through the Fed, easy money and kind of quantitative easing too, or quantitative easing in all but name, since the Fed stepped into the repo market. So that alone is a win that Trump has essentially shared with investors around the world.
But Neil, you said that Bernie Sanders actually has a shot here, and we talked earlier several months ago about populism and left-wing populism versus right-wing populism. So why do you think Sanders has a shot?
Well, if you just look at the polling, if you look at the fundraising, if you look at the strength of his ground game, he is a real contender here. And remember, there's a substantial proportion of Democratic activists, especially young ones, who feel that he was robbed of the nomination 4 years back, and that was a calamitous mistake. So I think people in markets are currently underestimating Bernie, and I think it's conceivable that if things play out in his favor in the early primaries, we'll get a sudden sort of shock awakening. Oh my goodness, a progressive could do it. And all I'll say is that it is as unlikely seeming now in January 2020 that Bernie Sanders becomes president of the United States as it was unlikely in January 2016 that Donald Trump would be president of the United States. So if the consensus here is, oh, Bernie's nowhere, it's going to be Trump, you should probably bet against that consensus.
Right.
I want to talk quickly before we let you go about Britain. and you're pretty bullish on Brexit right now. What do the pessimists have wrong?
Well, I was a Remainer, but we lost, and I accepted defeat that same year, unlike some people
Think
I
of
could
you,
mention.
right. Yeah.
You know, my attitude was, as with the sporting contest, the better team won. I was pretty dismayed by how poorly Theresa May conducted those negotiations, but we're in a whole different ballgame now. Not just because Boris Johnson's Prime Minister, he's certainly a more uplifting figure than Theresa May ever was, but he's also got some very important people on his team, and I'll mention just Dominic Cummings, his chief strategist, who was, after all, the architect of Leave's victory in 2016. He's been the architect of victory again in the election of December last year, and I think having Dom Cummings on the Johnson team as the negotiations continue with the Europeans, and we look towards what will be a very difficult negotiation on the future relationship, I expect the UK will do better in the coming year than it did in the 3 painful years of Theresa May's premiership. I also think that the UK economy, leave aside international sentiment, is going to pick up because a lot of investors were really holding back for fear of Jeremy Corbyn, for fear of a no-deal Brexit. Both those nightmare scenarios have gone. And so I think the downside risk in the UK has really largely dissipated, and I think the outlook's therefore pretty bright.
And you're concerned, though, about liberal democracy, just generally speaking, around the globe, right?
Well, liberal democracy is certainly not having a great run because populists to the right, populists to the left, to say nothing of the strongmen epitomized by Vladimir Putin and Xi Jinping in the non-democracies. It's the liberal part that's frail. Democracy's in rude health. It's in rude health in, say, India. But Narendra Modi is not a liberal, and liberalism is the thing that's in some kind of retreat. I think that's partly because in our new social media-driven politics, the centre ground does not play well. And so I think liberalism has to rethink its appeal in the 21st century. It is losing the battle with those people who offer two much stronger brands. National conservatism, which I think is a good way of summing up the populism of the right, whether you're talking about Trump or Johnson or Modi. And to the left, this interesting new synthesis of socialism and environmentalism, personified by someone like Greta Thunberg, a young generation militant on the issue of the environment, but implicitly arguing for really large state interventions in the market economy. So it is, in fact, socialism by other means. Both of these ideologies are just more exciting, they're more galvanizing than dear old liberalism with its principles of individual freedom, individual rights, freedom of speech, freedom of conscience. I mean, those things are in retreat, even in places where you'd expect them to be in good health, like universities. I sometimes think when I look at the Western world's universities that free speech is more under threat there than it is in some authoritarian regimes. So I think that's where liberalism is struggling.
Well, lots more to continue to talk about. And do me a favor, visit us in New York, because it's going to be a busy year politically, and we'd love to talk to you again.
Thanks very much.
Neil Ferguson, Hoover Institution Senior Fellow, thank you.
Thank you.
All right, coming up next, vacation and hotel bookings are a good forward-looking indicator of the strength of the economy. We're going to have the CEO of Marriott, Arne Sorensen, joining us. And a little later on, MasterCard's Michael Froman. So lots more ahead here from Davos, Switzerland. Stay with us. Welcome back. We want to get right to our next guest because there's lots to talk about. Arne Sorensen is the CEO and president of Marriott. Arne, it's great to see you.
Thank you. Good to see you. Good
Welcome to Davos. I know this is not your first rodeo.
It's the 10th, I think,
You're
actually.
the 10th,
So, which
wow.
sort of snuck up on me. I thought, oh my goodness, I've been coming 10 years already. But
Wow.
it's good to be back.
Probably one of the warmer years that you've been here. We were just talking about how much warmer it is today than it usually is.
Beautiful this afternoon, but it was cold last night. I
That
don't
it
know if you
was.
were
It
out
goes
last
down here at night. You know, your business is sort of seen as a barometer of the health of the economy. We know the consumer, it was really the pillar of this economy last year. Many are betting they will be this year as well. In terms of bookings, demand for your properties, where do you see the consumer here early in 2020?
We describe it as steady. Now, of course, it sort of depends on your perspective. If it's an American question, in the first instance, where we're about 65% of our business, we describe it as steady. So it's growing modestly year over year. The American consumer is healthy. American corporates are healthy. Obviously, our business depends on business travel, meetings, and vacations or leisure travel. So all of them are relevant. Varies a little bit market by market. We wouldn't say that, as confidence built at the latter part of 2019 and into 20, we suddenly have seen a movement up, but we have seen a good steadiness and growth.
Sorry, a lot of people ask you about Airbnb, but I just want to ask you about that competitor. And you guys have sort of gotten in the game with some short stay activity yourself. Talk to us about what's going on there.
Yeah, of course, we've been watching this home rental space, shared economy space for some time. And what Airbnb and a few others have done is start this network, in effect, of hosts and guests who mutually rate each other, looking often for a great financial deal, a cheap place to stay, and they've grown very quickly. We've watched it, of course, from the distance. We've known one thing for certain from the beginning, which is if Marriott were in the business exactly the way the others were in, customers would never forgive us a bad experience. Because we bring a reputation of quality, and so we knew that if we ever got in this space, it would have to be brandable, right? We'd have to be able to say we can stand behind the experience that's being delivered. The second thing is we've never been in the lowest price segments of the hotel business. It's not really our model. And so simply to provide the cheapest place to stay was not of interest to us. But over time decided, you know what, we can participate in the higher end of that market, not luxury only, but quality, multiple bedrooms. So we think about families staying with 3, 4, 5 bedrooms, something like that, and wanting to have a quality experience connected to the loyalty program, which we can bring. And that's what we started last year.
And this would be sort of connected to tourism then and vacation
overwhelmingly about leisure travel.
Yeah, right.
Absolutely. And we've found already that 95% of the folks booking through us are our loyalty members. So they can earn points, they can redeem points, and they can say, I know I'm going to get a quality experience from that stay.
You talked about business in America and the consumer being steady, as you describe it. What about other areas of the world where you do business? Are there some pockets of weakness that you're seeing?
Yeah, and I mean, it won't surprise you. The weakest substantial market we've got today is Hong Kong.
Hong Kong.
And so if you look at
the protests had
January
something to do with that,
this year compared to January of last year, which was before the protests began, the month's not over, obviously. I don't know what the numbers will be, but I would guess we'll be down by half, something like that. You look at the rest of the world, and there's nothing that dramatic. China slowed a bit in 2019, but was still positive growth year over year. And depending on what part of the country you're talking about, Beijing was strong throughout. And there's every reason to believe now that China, with the trade deal, will probably firm a bit more going forward. Europe's been quite steady, actually stronger year-over-year performance than the United States.
What is your take on President Trump? I don't know if you had an opportunity to hear him today. I'm curious what you thought about his remarks, if you did.
Yep.
And then what about his policies and how have they impacted your business?
Yeah. I didn't see the speech today, and of course a few folks have described it to me, but I'm not sure that that's
How did they describe it to you?
That's enough to be even worth repeating.
Yeah. Okay,
right?
okay.
But I, as I understand it, it was about the strength of the United States economy,
Right.
Yes.
and I think we could pause and say, okay, when he was elected in 2016, we were already in year 6 or 7 of the recovery. We're still growing.
That's a pretty remarkable thing. And this recovery is now as long as any modern economic recovery that the United States has had. And so I think that's a real positive. I think when you talk about policies relevant to us, I've had one official meeting with him in the White House with a bunch of folks in the travel industry. And the purpose of that meeting was to say, Mr. President, your voice is heard in the rest of the world as we don't really want you to come here. And I'm not talking about immigration. I understand immigration is a very complex issue, but talking about travel, people coming to take vacations or to do business in the United States. And there's great economic opportunity in the United States. It's an export every time somebody comes to the United States, leaves their dollars here and heads back home. And we could use policies and promotional behavior that continues to make the United States an attractive destination.
Is the percentage of international travelers, has that gone to the U.S., has that gone down during the president's administration?
The U.S. share of global travel has gone down. And so when you look at where the new middle class in China is going, or the new middle class in Africa, there are lots of new travelers around the world. The U.S. is very attractive to many of them because they know New York and they know L.A. and San Francisco and Miami, these great destinations. They know the parks, but they also know Paris and Rome and London and these other places. And more, I think we're seeing folks choose some of those other destinations rather than the U.S. destinations.
And Arnie, on a personal level, I know a lot of people watching, and us here too, were concerned about your health. Yeah. You had announced that you were stage 2 pancreatic cancer. You were going to get treatment for it. Yeah. You had surgery. You look great. You're here in Davos. Give us an update on how are things?
Well, I feel great. And it's, of course, it was a literally breathtaking diagnosis when it first came in. But from the get-go, they said, we're going to do chemo and radiation and then surgery and then chemo again. And it's gone exactly the way the plan was. I had surgery in November. They were digging around in there for 7 hours, so it was not an insignificant deal. But it went well. The surgeons felt good about it. I feel good. I feel very optimistic. I've worked throughout, which is something I'm grateful for.
It's amazing that you really have not missed a beat.
And in part because I love what I'm doing, and in part because you got to lead your life.
Yeah. Great advice. We're going to leave it there. Arnie Sorensen, thank you so much.
Thank you.
It's a pleasure.
Thank you.
Thank you, Arnie. It's so great you're doing well. Thanks for joining us.
Yeah, good to see you.
All right, still ahead, MasterCard's Michael Froman and his thoughts on the Phase 1 trade deal between the U.S. and China. Up next, Morgan Stanley Vice Chairman Tom Nides, and on the best places to invest, geopolitics, and the 2020 race. Stay with us. Welcome back to Yahoo Finance's live coverage of the World Economic Forum in Davos, Switzerland. Excuse me. I'm Andy Serwer, editor-in-chief. I'm joined with Alexis Christoforous.
And we want to welcome our next guest, Tom Nides, Morgan Stanley Managing Director and Vice Chairman. Thanks so much for being here.
Thank you.
You've been to Davos now how many times?
Probably too many times. But I think I'm probably on my 10th trip.
Wow.
I'm just curious sort of how this year compares to other years in terms of just sentiment overall. Do you feel like there's a sort of optimism in the air amongst those that you're talking to? Are people more cautiously optimistic perhaps about the economy?
Yeah, listen, it's hard not to be positive about the economy. So if you walk in here, you can't, having seen what's happened in 19, I think people are generally optimistic, but I think people are cautious because I think people's view is what goes up comes down. Invariably, this is going to change. When it's going to change, it's anyone's bet. But I don't think this continues on the track it is for the next 2 years. So I think there is a general healthy bit of optimism with a good dose of anxiety.
Tom, Morgan Stanley just reported some BAFO numbers, and maybe that's a little strong, but running on all cylinders, right? Company's doing great. So let me ask you, what keeps you up at night over at Morgan Stanley? What are you guys concerned about?
Well, listen, I think as James Gorman has articulated very clearly, we have a very clear strategy, right? Half our revenues are coming from the institutional business, half of our business is coming from the wealth management business. It's a balance. It's a clear view that the investors like. They like the results. They like our mix of businesses, and I think they like the leadership that we've kind of articulated. What we always worry about is the economy. We're not any different than other companies that are sensitive to economic ups and downs. I mean, the good thing, I think, for us is that in a kind of normalized economy, I think we'll do just fine. We put out a pretty good strategic plan a couple days ago. Obviously, the earnings were good, but we understand that this is about the long term. It's quarter after quarter, year after year, but I think the real message is we have a balanced business that hopefully will be able to withstand the ups and downs of markets.
In your previous life, you were Chief of Staff to U.S. Trade Representative Mickey Cantor in the Clinton administration. So I'd like your unique perspective on the Phase 1 trade deal. Does it do enough? And are you optimistic about a Phase 2? Because we really don't have a timeline for when that might happen.
Listen, I'd rather have a deal than not a deal. I mean, it's clear that for all of us who are in the markets, having a calmness in our markets with one of our largest, if not the largest trading partner, that'd be China, is important. So I don't discount that of the importance. Do I believe we need additional reforms? Without question. Do I believe that the administration is doing a good job of trying to get them to the table? I give them credit for that. I'm not going to overplay it, and I don't think they should overplay it. This is the beginning of a long discussion during the Obama administration, which I was proud to serve in. We too have many discussions, a lot of bilateral discussions about trade deals and attempts to try to break down trade barriers, which the Chinese have done. I know you have my friend Mike Froman coming in. He probably will be as articulate as any of us as on what we accomplished in the administration. But listen, I'm happy for it. I think the markets like it, and obviously the proof is in the pudding. Exactly what it's going to come and how it's going to benefit consumers.
Tom, you and I have talked about the Democrats' prospects in November, which candidate, and I know you're a keen observer and sometimes participant in the process. And you talked about the left and how to mobilize that candidate and the more centrist candidates and what it would take for them to win. Can you talk about that a little bit?
Sure. Listen, this campaign season is about ready to get going. I think it's 12 days Iowa starts. We're going to have a robust caucus in Iowa, which then leads into New Hampshire, and then Nevada, and then South Carolina, and then ultimately to Super Tuesday. I think we're hearing from voters that they want to win. Okay? So if you're a political observer, as I am, and obviously I lean more Democratic, and if you believe that you want to win, I think the view of this is to win is going to be that people want change, but maybe not radical change. Because listen, let's face it, the economy is doing quite well. And I think given that, I think people have angst about how much change they want. So again, I think that the idea that the Democrats' energy is certainly significant. But as an observer, as I am, I think a middle-of-the-road candidate would probably have the best shot at potentially, which is going to be a very difficult camp regardless, having the best shot of ultimately winning the election in 2020.
Who would be the best person, though, to keep the bull market running and to keep the economy growing?
Listen, as we know, presidents play an important role, but they're not God. As we all know, markets go up and markets go down. Economies speed up and economies slow down. So no president, neither Democrat nor Republican, should overplay their hand. We should not feel just because the stock market's going up that everyone should get the kudos for it, and when the market goes down, they don't necessarily get the blame for it. We have to be really balanced as voters and as citizens. We have just come off and still in the middle of the best economic time we've had in a decade. This will slow down at some point. So listen, who's the right person? Who is the right president? That's for the voters to decide. But ultimately, the president probably doesn't have as much to do about the direction of the economy as the economy itself does.
All right, we'll leave it there. Tom Nides, Morgan Stanley Managing Director and Vice Chairman. Thanks so much for stopping by.
Thank you for having me. Thanks, guys.
And up next, Michael Froman from MasterCard. Don't go anywhere. Back live from Davos, Switzerland in a moment. Welcome back to our live coverage from the World Economic Forum in Davos, Switzerland. It's day one of this event, and already we're off to the races. President Trump spoke earlier today to a packed crowd, and Greta Thunberg, 17-year-old activist, Time Person of the Year, also spoke. Two very in-demand names already kicking things off here. And here to help us kick things off in this segment is Michael Froman, MasterCard Vice Chair. Great to have you here. Thanks for being here, Michael.
Thanks for having me.
I want to talk about MasterCard in a minute, but in your previous life, you were a U.S. trade representative during the Obama administration, and I'd love your take on the Phase 1 trade deal that Trump has made.
Well, look, I think de-escalation of the trade war is a positive thing. There still will be tariffs on about $350 billion of exports, and a lot of the big issues have been put off to the second phase discussion. And to me, that's really the judgment that needs to be made is what's going to help reform China when it comes to things like subsidizing state-owned enterprises and other policies that really distort international trade and have an adverse effect on us. And hopefully they'll get to it in Phase 2.
So, Michael, I'd also like to ask you about the USMCA and about both of those, the China Phase 1 and maybe Phase 2 at some point, and USMCA. Is that really going to help the U.S. economy and the U.S. investor?
Well, I think the USMCA is an improvement on the original NAFTA in many respects. I think it's very good that the Congress passed it and passed it by the bipartisan margins that it had. And it does certain things like update NAFTA to take into account the digital economy. It takes various rules that we negotiated in TPP and puts them in the new NAFTA, which I think is a positive going forward. Since so much of our economy now is based on the digital revolution, it's important to have rules in place to make sure that those businesses and the workers who work for those companies can continue to thrive.
Now, the IMF this week cut their growth forecast for both 2019 and 2020, not by much, but they did cut it yet again. What's your outlook for your own business at MasterCard in 2020? Do you see growth? And if so, where is that going to come from?
Well, we still see a lot of positive signs, particularly when it comes to consumer spending, which drives obviously a lot of our business. And our hope is that with some of these steps around USMCA and even the Phase 1 China deal, there can be an improvement in business confidence that will continue to allow the recovery to advance. It's been a long recovery. It's been 10 years, and hopefully it will continue to go on.
Hey, Michael, you know, a lot of people wonder about MasterCard and the other company that's similar to yours and see companies like Stripe and Square and saying, oh, they're going to run away with all the business. How is that not the case?
Well, I think the advent of fintech is very exciting, and there's a lot of innovation, a lot of new players in the field, a lot more competition, but I think that's healthy for the sector. We partner with everybody. We partner with Stripe, we partner with Apple Pay, we partner with Google Pay, et cetera. And so from our perspective, having more parties out there that are creating innovative ways to help that transition from cash to electronic payments is a positive.
But when you see China, which is really sort of skip credit cards, I mean, that's a different model going right to QR codes. Do the banks play there or do the card companies play there in the same way? Or is that not even a threat because it's not going to come here?
So China UnionPay is a large card company in China, but obviously Alipay and WeChat Pay have really developed a whole new and specific approach for the Chinese market. I think as they go outside of China, they're probably going to find the need to partner with others because the environment outside of China is quite a bit different than the environment inside China. And we're continuing to work with the regulators there and hope to play a more active role in that market as well.
As you always look to remain relevant as the payments industry continues to evolve, do you see some of these fintech companies that you're partnering with, do you see some of them perhaps being acquisition targets for MasterCard?
We have been active in the acquisition and taking minority positions in companies over the last few years. A couple years ago, we bought Vocalink in the United Kingdom, which is a real-time payment ACH player. We've made investments in other companies in cybersecurity and artificial intelligence. So I think there is an opportunity, and we're always looking at possible partners and possible investments.
That sounds like busy work for a USTR person now working for a credit card company, right?
It's great fun. It's a great sector. It's very dynamic. There's a lot of innovation. It's fast changing, a lot more players in the market, and it has a real impact on things like financial inclusion. So it allows us to continue to work on things like financial inclusion, bringing people into the financial system.
All right, Michael Froman, MasterCard Vice Chairman, thank you so much for joining us.
Thanks for having me.
All right, still ahead, the Chief Commercial Officer of the NYSE, John Tuttle, with his outlook for the IPO market in 2020. And later, market predictions from Guggenheim's Scott Minerd. Stay with us.
All right, welcome back. You've been watching live coverage from the World Economic Forum in Davos, Switzerland. We will take you back there in just a minute, but first, let's take a look at the U.S. markets. We're going to go to the floor of the New York Stock Exchange, where we find Yahoo Finance's Ines Ferre. Ines?
It's down about 66 points. The S&P is also lower. The NASDAQ also lower. Materials and energy are leading on the downside. The Asian markets were lower today over fears of the coronavirus and that it would affect tourism. So you're looking at some of the casino stocks which are under pressure, Las Vegas Sands, Wynn Resorts. Also, some of the airline stocks are on watch, with American down, United and Delta also lower. And just taking a look at some analyst calls, Costco, one of the better performers on the S&P 500, after being upgraded at Oppenheimer to outperform. J.B. Hunt was also upgraded to outperform at Raymond James. And on the Dow, Intel being the best right now on the Dow, the better performer, after being upgraded to hold at Jefferies. Adam?
I'll take it, Ines. Thank you. And coming up, we'll have more of our live coverage from the World Economic Forum in Davos, Switzerland. Many more big guests coming up. We'll be right back.
Welcome back to our live coverage of the World Economic Forum in Davos, Switzerland. And Alexis and I are joined now by Scott Minerd, who is Guggenheim Partners co-founder and Global Chief Investment Officer. Scott, nice to see you.
Yeah, it's very nice to be here. Thanks for having me again.
You've been concerned about the Federal Reserve extending the expansion in a way that could possibly end badly. What do you mean by that?
Well, when the Fed undertook its rate increases back in 2018, I think they didn't realize how restrictive they were being by raising rates at the same time that they were trying to shrink their balance sheet. And so I'd been concerned that at some point, something was going to break. But they seemed so committed that it looked like we were going to go into a recession. And then, of course, we got the famous December meeting where the Fed decided to begin the pivot. And they've cut rates by 3/4 of a point. And the pattern here is interesting because it looks a lot like the periods of like 1987 when the Federal Reserve, after the stock market crashed, they reduced rates by 3/4 of a point. And the market came back. And then again in 1998 during the Asian crisis, because again, the Fed did the pivot, 3/4 of a point rate cut. And of course, for people who are old enough to remember, it was all that liquidity coming out of the Fed that drove up internet stocks so high, and we had a bubble in the stock market. In 89 and 90, 88, 89, 90, after the stock market crash, it drove up real estate prices, commercial real estate, and then the banks had to be bailed out, and there was a massive credit crunch. So this pattern, the Fed has done this before. They've sought to extend the expansion by pivoting late in the expansion from their tightening cycle. And I think we're just living through the same thing again.
Yeah, I mean, does that mean things are going to go splat inevitably?
Yeah, inevitably, yes. But, it's really hard for me because I'm an old bond trader. And so, in the short run, if I were trading, especially stocks, I would be long. I mean, we're probably due for a pullback right now, but at the end of the day, over the course of the next year, stocks, I think, will be a winner. But when you look at other asset categories like corporate bonds, the amount of debt that has been accumulated because of the ultra-low interest rate policies around the world in the corporate sector is becoming very, very concerning to me.
Yeah, walk us through that, because right now there is more corporate debt than ever on the books. You are very concerned about the leveraged corporate debt market. You've said that before. Do you think that's one of the biggest headwinds for market expansion in 2020?
I think right now, as long as the Fed continues to purchase assets and the ECB and the Bank of Japan continue to purchase assets, that the forces of negative interest rates overseas are going to put a cap on rates in the United States. So I don't really see the crunch time coming until after the Federal Reserve and these central banks decide it's time to turn off the liquidity taps and let's get back to normal. And then the history of normalization isn't that good, let's face it.
If and when that happens, what is an investor to do? What can you possibly do to protect yourself if you see that could happen down the pike?
Right. Well, I think today, I would encourage people to stay away from corporate debt. I don't think you're being paid well enough. But there are other places, like taxable municipal debt is very attractive on a risk basis. And I would encourage people, if they're looking for the next year or two, to continue to stay long the stock market, perhaps even buy high yield bonds. But ultimately, there will come a time when the Federal Reserve decides it's time to raise rates again. And I forget the former chairman of the Fed who once said that expansions don't die of old age. The Federal Reserve kills them.
Right.
And so they're in the business of killing expansions. And the reason is when inflation starts to be an issue. But inflation's not
now,
it's not yet.
Right.
Well, people have been waiting for inflation for a long time, though. But I want to shift gears a little bit, Scott, and ask you about something I think you're also concerned about, which is populism and the rise of populism. And why is that a concern? Wealth and income inequality causing that, and what are the implications for markets?
Well, look, the rise of populism is the direct result of the income and wealth inequality in the United States. I mean, we've all heard the statistics about, how the top 10% control, 95% of all the wealth. We also know that the difference between management salaries and in normal employees is that has expanded. So when that happens historically, that causes a lot of social tension. And ultimately, through the ballot box, the public will try to get their way. Now, I will say that President Trump this morning in his speech pointed out the fact, and he is right, that for the first time in a number of years, over the last 2 or 3 years or so, we've actually started to see wages rise for low-wage employees, and that the income gap is closing. The question in my mind is, will we make enough progress soon enough? Because when the American election comes up, at some point you could envision that someone like Bernie Sanders or Elizabeth Warren, who has not very much in favor of free market activity, could possibly derail a lot of the good progress we've made over the last 30 years.
I want to talk about Larry Fink of BlackRock this past week, talking about climate change. He said it's fundamentally reshaping the investment landscape. Would you agree with that?
Well, I agree with Larry in that he is right. The thing I'm disturbed about is the fact that while there's an attempt on the investment side to try to do environmentally, socially responsible investing, that the criteria is not very well established. And so, for instance, let me give you an example, right? Energy companies that are creating fossil fuels, a lot of people have labeled them as bad. But the biggest consumer of electricity in the world today are data centers. So who's more guilty in this chain? Is it right? Is it the institution that's providing the energy, or is it the institution that's demanding the energy? So my conclusion on this is that until policymakers put in place the incentives, which basically have all stakeholders have it be in their economic best interest to start changing some of these patterns. For instance, like a carbon tax. People that produce a lot of carbon, you pay a lot of tax. Of course, that'll drive electricity rates up, which means data centers will have to pay higher rates.
Which
but
means
of course,
we'll have to pay maybe.
Ultimately.
It could be
Exactly.
inflationary, looking for that, right?
That's right. But yet at the same time, today it is cheaper to generate a kilowatt of electricity by solar cell than it is by any conventional fossil fuel process. So the utilities have been slow to change because they see their business model getting threatened. So cogeneration, where we can all sit around and sell electricity to each other, is a threatening thing to them. And so they're trying to hang on to their legacy assets. So again, the right set of incentives to get the transition out of the utility industry that's necessary, if it's in their economic best interest. I will say this, unless we act quickly, the possibility of reaching the Sustainable Development Goals by the 2030, I don't think it's possible. And actually, at the current pace that we're going on improvement, we should expect to get there by the end of the century. If there truly is a tipping point out there, a century away or 80 years away is a little bit too long.
Well, Greta Thunberg got on the crowd earlier today when she said no progress has been made on this front in the past 2 years that I've been out there talking about the environment. So a conversation that will continue. Scott Minerd of Guggenheim Partners, thanks so much.
Thanks for having me.
Up next, the Chief Commercial Officer of the NYSE, John Tuttle's going to join us to talk about a bunch of things, including his outlook for the IPO market in the new year. Stay with us. Welcome back to our live coverage of the World Economic Forum, 50th anniversary of this forum, by the way, in Davos, Switzerland. And joining us now is John Tuttle. He is vice chairman of the New York Stock Exchange. We see you in New York. We see you in Switzerland. Good to have you here.
Great to be here.
I've so much talk about what's the IPO market going to do this year? What unicorn is going to go public this year? What exchange are they going to go public on? Just from your perch at the NYSE, what does the pipeline look like for IPOs this year?
Taking a step back to last year when we were in Davos, we weren't even having IPOs. Remember, the government was shut down.
Right.
I believe we had one IPO in the first quarter of last year.
I remember that conversation we had about that.
Exactly.
Because they needed time to prepare. You can't just flip a switch.
Right, the filings and all that. Right, and then towards the tail end of the year, you started to see that correction in the private markets slow down the number of companies that were looking to go to the public markets. So as we look out to this year, we're looking at a healthy IPO market, at least for the first half of the year. If you look at the deal pipeline, there are companies from across geographies, across industries that are looking to come to market starting as soon as this and next week.
So John, is it a different environment now? Are we sort of post-unicornish after some of the, tepid aftermarket performance of the big names and the WeWork unfolding debacle perhaps still? Is it a different time now?
I believe it is, and for a couple of reasons. One is that investors are focusing more on a sustainable pathway to profitability. They're looking at other metrics aside from rapid top-line growth when thinking about valuing and investing in companies. The second is that even the tone of the dialogue here at Davos is shifting. And so in years past, whether it be in Davos, in Silicon Valley, in New York, everybody talked about the burdens of the public markets and why you don't want to be a public company. And now you're hearing more and more about the benefits of being a publicly traded company, both for companies from the ability to access capital to fuel growth and gain liquidity for your investors and shareholders, but even with the theme of Davos this year in stakeholder capitalism, which I would argue is not a new phenomenon, but it's spreading and saying, how can the public markets and public companies benefit society as a whole and allow for more inclusive economic growth?
I think you just asked yourself that question. I'm curious, is there a plan set in place there with Stacey Cunningham as president and you as vice chair that how do you plan to do that and to sort of get the message out that capitalism really isn't a dirty word?
No, I think that is exactly what we need to do, is continue to get the word out about the benefits of the public markets, both for the company and some of the benefits I spoke about earlier, but the financial and governance discipline it places on companies as well. And if you think about just NYSE-listed companies, employ 45 million people directly and tens of millions more indirectly. And the ability for companies to access capital to fuel that growth is a good thing for society more broadly. And also allowing investors, whether they be institutional or individual investors, the ability to participate in this growth and earlier on in their growth cycle is a message we're getting out there.
John, I want to ask you about China, and there's sort of at least two tracks here. One, of course, is the administration doing a little saber rattling when it comes to Chinese companies listing in the U.S., number one. Number two, also the opening up of the exchanges in China and the liberalization of rules in Hong Kong and in the mainland. So what is your take on both of those?
So China is a very interesting marketplace for us. It's been an interesting market for over 30 years where we've been bringing companies from China to the NYSE. And if you look at the IPOs from outside the United States taking place on our market, number one on that list is still China, in spite of everything going on in Washington, D.C. We expect to see that continue. Obviously, China and Hong Kong want to do the most they can to make their capital markets more competitive with the United States. But if you look at the breadth and depth of capital markets, the U.S. markets are unmatched. And so you're still going to see companies, despite broader trade and political rhetoric taking place, seek to come to the U.S. markets.
Quickly got to ask, are we going to see more direct listings, especially from some of the larger tech companies?
Oh, I would love it. So we obviously helped pioneer the direct listing with Spotify.
And
we had Slack. And so we expect in 2020 anywhere from 4 to 6 companies to realistically take that direct listing path. And you may have seen that we filed recently to change our rules at the exchange and work with the SEC to get approval on those changes to broaden the universe of companies that would be eligible for a direct listing and to allow for a potential capital raise as part of a direct listing, which would be a new product offering and could transform the marketplace.
Gets interesting. All
it
right.
Does. John Tuttle, Vice Chairman of the New York Stock Exchange, thanks so much for joining us.
Thanks for having me.
Thanks.
And that concludes our programming here today, live from Davos, Switzerland at the World Economic Forum. I'm Andy Serwer, editor-in-chief of Yahoo Finance, along with my colleague, Alexis Christoforous. Have a wonderful day.
See you tomorrow. It is 11 a.m. here in New York City. We're 1.5 hours into the trading day. Stocks are falling today modestly, but nonetheless, they are lower. The economic world descends on Davos, Switzerland, as President Trump kicks things off. Activist Greta Thunberg scolds the world's elite for not acting on climate change. We'll take you to the World Economic Forum in Switzerland just ahead. On high alert, concerns over a possible pandemic grow as a rapidly spreading pneumonia-like virus that has already killed several and sickened over 200 people spreads in Asia. And Tesla fights back, why the automaker is slamming a petition sent to federal regulators that's pushing for the recall of over 500,000 vehicles. Welcome to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. We want to head to the floor of the New York Stock Exchange, where Yahoo Finance's Inez Ferrer is standing by, and we're looking at shares of Costco. Inez?
Adam, and Costco is seeing a bit of a pop. This is after being upgraded at Oppenheimer to outperform with a price target increase to $335 from $300. Also, Oppenheimer picking it as its top pick, with the analyst note citing an attractive valuation and also top-line trends that come above its peers. And meanwhile, we're also looking at J.B. Hunt. This is after J.B. Hunt was raised to outperform at Raymond James with a price target of $130. And then just taking a look at the Dow, taking a look at Intel, that's the best performer on the Dow today, despite the fact that the Dow is down about 100 points. Intel is the best performer, up more than 1% after being upgraded to a hold at Jefferies. In fact, today, Intel touching a 52-week high, and Intel will be reporting earnings on Thursday. Adam, Julie?
We look forward to that, Inez. Thank you. Well, one factor putting pressure on global markets is that a deadly virus emanating from China, that's bringing this year's global risk rally to a halt, or at least a pause. News of the virus has hammered Asian equities and helped drag European and U.S. stocks lower as well. With us to discuss is Yahoo Finance's Anjali Khemlani, and we also want to bring in our panel. Yahoo Finance's Akiko Fujita and Rick Newman are with us as well. Anjali, let's start with you and the sort of medical nitty-gritty here. We've seen other viruses come out of Asia. What distinguishes this one, and how dangerous is it?
Yeah, so what's distinguishing this one is that they have confirmed that it is easy to pass from human to human, and that it's an airborne, like you can, if you're stuck in really crowded places, you can catch it pretty easily. And it's really important right now because it's the upcoming Chinese Lunar New Year. And so that's where a lot of the concern is coming from, is that this is the time of year where people travel a lot, whether it's abroad or to family, within China. And so that's where a lot of concern is coming from, is what will happen. This is also reminiscent of the SARS outbreak, back there. So we're looking at, what it's going to affect. Definitely travel, luxury goods are really getting hit as we look.
Anjali brought up the fact that this is similar to SARS, but in the reports we're getting from the physicians in China, this is less lethal than SARS, even though 6 people have unfortunately passed away from this. So why would markets sell off?
Well, I think it's because of what you mentioned. It's when you think about the Asian, China, right? It's so close within proximity. This is the largest migration that happens every single year. When we talk about Lunar New Year, I think that's a big concern. If you already think about what sort of the casualties, so to speak, since we have already learned about this, this has the potential to spread at a much more rapid rate, even if it's not as lethal.
It's also an unknown.
Right.
So how bad is it going to get? Will it remain contained? This doesn't. This could affect commerce. It could for sure affect trade flows. But what's probably going to happen is we will get our hands around it. We'll know how contained it is or how severe it is, and markets will recover just as they did from the SARS outbreak back in 2003.
To that point, what did physicians and the medical community do last time? Because SARS was eventually contained. We also had various avian flus. So were there medications found that treated those? Did people just, were they quarantined? How did they address it?
One of the things to remember too, actually, is that, right now there isn't that much known about it, to the point of what Rick was just saying, is that we're actually just waiting to see what the medical community is going to in fact do and say about it. The World Health Organization is meeting to decide, whether or not this is going to be considered an international crisis. I know the stocks did in fact respond. When you look at, especially for the casinos, Wynn and Sands were especially affected because they rely heavily on Macau. And so that is something that, everyone's keeping an eye on. So there's a lot of information still being gathered. And so I think it just remains to be seen.
All right, well, we're going to keep our eyes on that, but the world is also watching what's happening in Davos, where world leaders gather to discuss the top issues around the globe. President Trump was there and announced that the U.S. will join the 1 Trillion Trees initiative launched at the World Economic Forum in an effort to combat climate change.
We will continue to show strong leadership in restoring, growing, and better managing our trees and our forests. This is not a time for pessimism. This is a time for optimism. Fear and doubt is not a good thought process, because this is a time for tremendous hope and joy and optimism and action. But to embrace the possibilities of tomorrow, we must reject the perennial prophets of doom and their predictions of the apocalypse.
Brian Saza, Yahoo Finance's editor-at-large and co-host of The First Trade, is in Davos. Your thoughts on the comments from President Trump?
Adam, good to hear you. Yes, so that line, which I would compare it to throwing a piece of red meat into a lion's den, got some of the biggest applause out of President Trump's overall 30-minute speech at the event. Now, what's unclear is what the U.S. will specifically be doing to help this $1.2 trillion initiative, which is designed to reduce, the World Economic Forum came out with this a year or so ago, to reduce carbon emissions or to neutralize them. What is unclear is on what the U.S. will do to drive that initiative. What do consumers do? Go out to Home Depot and buy a tree and plant it in their yard and they get a rebate? Unclear. I'm sure more details to come on that front.
That seems a little thin in terms of action if people are just going to be planting trees on their own in their yards, Brian. I don't know. But certainly, perhaps my skepticism is not alone. Environmental activist Greta Thunberg was there as well. She took to the stage, and she was perhaps who the president was giving a bit of a backhanded, unnamed swipe at when he talked about the prophets of doom, because she was much less sanguine about the actions that the U.S. and others have been taking.
Yeah, Julie, Greta Thunberg was definitely in the zone this morning. I was able to tweet a photo of her. She gave 2 speeches today, and she essentially stuck to her message, what we've heard from her in the past. Basically, people need to step up their game on the sustainability front.
The climate and environment is a hot topic right now, and a lot thanks to young people pushing. But of course, if you see it from another perspective, pretty much nothing has been done since the global emissions of CO2 has not reduced. And that is, of course, what we are trying to achieve, among other things. It will require much more than this. This is just the very beginning.
Yep. So there you have Greta Thunberg certainly coming out in full effect. But I can tell you, Adam and Julie, in a lot of these panels, and sustainability is not just something that a lot of executives are saying for the sake of saying it out in a public forum. I think a lot of these executives are starting to really think about how they could do better jobs on this across the board. And I caught up to PayPal's CEO, Dan Schulman. He has been a proponent of really focusing on sustainability efforts, and he's done a good job. And a lot of other executives I talked to are certainly trying to step up their game.
Yeah, the ship seems to finally be turning a little bit. Thank you so much, Brian. Look forward to continued coverage there. Davos is always so interesting for the disconnects, right? Yeah. You have the disconnect between all of these CEOs talking about what they're doing on climate, and legitimately many of them have started to do things, but then Greta saying you're not doing enough. You have the perennial disconnect between all of these rich folks, powerful people gathered there, and the sort of rest of the world. I mean, what do you make of it?
I mean, I am a cynic when it comes to Davos, admittedly, as somebody who has attended, and I just think, you know, we have to understand why it's a good thing that companies are finally talking about it, and I don't think we should dismiss that. But there's a reason behind it, right? It's because the governments haven't taken action.
Well, and it's because their customers are pushing them to as well. It's
exactly.
Not because
and
they're
so
just doing
action now is better than nothing.
Yeah.
But to your point, to have this conversation in the mountains of Switzerland.
Right, when you've flown in on private jets.
When you flow in on private jets, to me, seems to be a bit disconnected from what's actually happening on the ground.
If there is a crisis, which most people say there is, her generation is saying, hey, you've got to do more. And what she said specifically was not plant trees. You know, you've got to divest today, divest from all fossil fuel. That just isn't going to happen.
Yeah, there's a gap between both sides here, and I think, we can debate whether it's a crisis or not. It's clearly a problem that we need to deal with. And to me, planting, so this campaign is 1 trillion trees, planting 1 trillion trees, or saving 1 trillion trees by the year 2050. This seems, for Trump to say this, just sounds like a total cop-out, because what is Trump's climate policy? Drill more, more coal, get more coal, U.S. coal burned elsewhere in the world, and ship U.S. carbon energy overseas. I mean, that is Trump's climate, that is his whole climate plan.
But the market is responding to that plan, and that, coal and mining jobs have fallen, actually, when you look at what's happening there. Demand for coal is falling.
Right, so Trump's climate plan, or his energy plan, doesn't even make economic sense, because the world doesn't want coal, or they don't want more of it anyway. So I think for Trump to say, we're going to join this tree thing, so that, to my mind, that suggests that right after Infrastructure Week in Washington, we're going to have Tree Week. And that's going to be it. Trump, let's be honest, Trump has no plan for dealing with climate change or global warming. The Republicans in Congress are sort of starting to talk about it, but they're rolling out these ideas that have no meat whatsoever. Meat would be, a carbon tax.
Well, they did that 8 years ago. They tried. Republicans looked at a carbon tax 8 years ago.
I know. Well, it has never happened, and it's a very sensible approach, along with some other things. The Democrats on their side have the Green New Deal, which is this giant grab bag of sort of implausible political things, like the government's going to take over the electrical grid. Could somebody come? That's why CEOs are doing a little something anyway, because nobody else can. Here in the United States.
Let's talk about Tesla, because there's something, maybe electric cars, right? It's beating back claims that all 3 models of its electric vehicles could unexpectedly accelerate. Remember, what was the Audi 5000? Anyway, could unexpectedly accelerate without the driver taking action. The company, helmed by Elon Musk, issued a statement calling the claims false and added that a stock short seller is behind it. Now, the National Highway Traffic Safety Administration has opened an inquiry into those claims. With us to discuss this is Yahoo Finance's Prasad Subramanian, and I bring up ancient history with the 5000. They never actually figured out whether the car was accelerating on its own in those cases 20 plus years ago?
You know, I haven't driven an Audi 5000. Rick, maybe you have.
I have driven one way back in the day. It didn't unintentionally accelerate.
Right. So anyway, back to this story. So Tesla is sort of responding to this petition that had about 127 complaints that claim 110 crashes. You read part of that statement, that what they said about how they think it's completely false. They also said that we investigate every single incident where the driver alleges to us to have used, to us that their vehicle accelerated contrary to their input. And in every case where we had vehicle's data, we confirmed the car operated as designed. Now, you mentioned that guy who, his name is Brian Sparks, the guy who brought the petition. He told CNBC that he is a Tesla short seller, so that is true. But this is still early days. NHTSA gets the review right now. They go over it, and after they technical review, they say, do we want to grant a probe or not? So it's still very early yet.
There was another relevant incident here where Toyota had this problem with some Lexus vehicles. Right? And yeah, there were two things. So there was a mat that could come loose and actually get pinned up against the pedal. So that was a legitimate problem. But they also had this problem in Lexuses, and I covered that when it happened. It was about a decade ago. And the outcome was it was a driver's fault. And what happened was you got one report of this. There was a high-speed death where the person couldn't figure out what was going on. I think it was that floor mat. But then people hear this in the news and they start saying, oh, I had the same problem. Yeah. And then Toyota got stuck with this problem, was that they investigated, the government investigated. They found it was essentially driver error every time. But then the company can't come out and say our drivers are stupid. They have to kind of eat it and find a way to just resolve it somehow.
Can I just say the stock is up 6.5% today.
On something else,
So if you are a short seller in the stock, it has not been an easy road for you, right? Because you are getting squeezed and squeezed and squeezed, which has probably also fed the continued upside that we have seen in those shares.
But key to this whole thing, and I'm no mechanic, the cars I've worked on are nuts, they're horrid, but is Tesla drive-by-wire, meaning that See, that's different than older, like the Lexus and the Audi, where you actually had a mechanical.
So basically, most older cars where you push the pedal,
you're actually a cable's pulling
cables, hydraulic lines, whatever would actually.
So add fuel into a carburetor or into the
open
system.
the intake, put gas in the car, engine goes revs faster. Now it's like you push the pedal, it tells the computer to open the choke, to open put more fuel injection, more gas in the engine, then it goes all precise movements via computer, and you're touching the gas pedal. So now it's about they can see in the car what is actually happening. Why is that valve opening? Why is it not? Was there an actual input pushed to it? As opposed to with the pedal, you don't know. It could have happened.
That data also is probably stored in the vehicle or in this vehicle's computer, right?
So it tells, for every case that we have the data for, there was no unintended acceleration that we have the data for. So is the data in the cloud or is it in the car? At least the car, for sure.
Well, it starts in the car, I think, right? And then it might end up in the cloud at Tesla.
Yeah.
All right.
So anyway.
Coming up, a different kind of vehicle. Uber tests a new feature which could give drivers control over fares. We've got the details. Plus, we'll continue our coverage of the World Economic Forum in Davos, Switzerland. You don't want to miss it.
We got stocks under a little bit of pressure right now. Welcome back to On the Move. I'm Jared Blickery. Dow is down 57 points, or about 0.2%. S&P 500 down 13 basis points, and the Nasdaq is in the green by just 1 basis point. Kind of a choppy day overall. We're going to get into bond yields in a second. Those have some bearing on what's happening. But here's the intraday price action. We gapped down just a little bit to about the 3320 level in the S&P 500. Made new session lows shortly after 10 a.m. and now rallying just a bit. Overall, like I said, not too much action in the majors. Let's take a look at the CBOE Volatility Index. Even that is not responding that much. We're still below 13. We've been in this 12 to 13 range for several sessions right now. Looking at the 10-year T-note yield, bond yield saying, well, that is down 7 basis points. That's the biggest drop that we've had since about the beginning of the year. And this portends some of that consolidation that we've been seeing and tracking here. So here's a one-year outlook. And we have this consolidation going back to August of last year, and we see it's finally breaking down below this. And now if there's continuation off of this, and it could be a one-off, if there's continuation, we could go back and test those lows, maybe even below 1.4%. That would be something to see. Here is the Dow Jones heat map for the day. We can see Apple under a little bit of pressure, but not before setting a record high, along with Microsoft and Visa. Microsoft up 0.5%, Visa up nearly 1.5%, and Intel, for its part, up about 2%. Let's check out the IPOs, because we do have some action here. Uber's up 5%, and Beyond Meat up 12%. We'll be back in a minute.
Okay, we are 286 days away from the presidential election, and the question of who will be the Democratic candidate to run against President Trump is on the minds of a lot of voters. Sheila Bair, former chair of the FDIC, is one of them. She's here to share her thoughts. And your op-ed, your column today in the Washington Post, I want to pull a quote, because I wanted to hear this one. I share Democrats' concern that our system is rigged to favor the wealthy and powerful over working families. I'm tired of a loophole-ridden tax code that advantages investors over workers. Yeah. So which Democrat do you think can address that?
Well, the good news is all of them, to one degree or another, want to tackle that now, which is a sea change. I mean, in 2016, Hillary Clinton was getting plaudits just for trying to get rid of carried interest, which is a kind of a subset of this broader problem we have, that capital gains get much more favorable tax treatment than earned income. So Biden's proposing getting rid of it for income earners above $1 million. I think Sanders and Warren just want to get rid of it pretty much completely. And it's an interesting thing about that. It was Republicans, actually, under Ronald Reagan, who equalized the tax rates between earned income and investment income in the 1986 Tax Reform Act, and it was the Clinton administration who championed putting it back in. Just to underscore that this is kind of a bipartisan problem, and both parties really should be trying to tackle it to fix it.
On tax policy overall, are there any of the Democrats that you think stand out as being the most rational?
On tax policy, I think Biden probably has the most sophisticated understanding of the art of the doable, and of course that's his weakness with some Democrat, primary voters, that they see him as incrementalist. But I think he's got some pretty significant, for instance, getting rid of stepped-up basis for inherited wealth. I think there's some pretty aggressive things that would have been unthinkable 4 years ago.
I have two questions. First is, what do you think of the wealth tax, which is just tax wealth rather than income? Kind of hard to do.
Right.
But then second, financial transactions tax, which sounds, I think Bernie Sanders favors this. It sounds like it's a wee little thing, but then you have the Investment Company Institute and the industry saying, no, this would really hurt ordinary savers. So wealth tax.
So I think a wealth tax in concept is absolutely right. I mean, that's where the money is. So some of a lot of that op-ed was about experience. So just as an example, the AOC came out with a 70%, tax on earned income. That's not where the money is, right? She's just taxing people like me on that. The money is in wealth. And so you need to do that through investment income, equalizing those rates, and tackling the wealth tax directly. It polls very well. Even a majority of Republicans like it. I think it is hard. It will be hard to enforce. But there again, somebody like Elizabeth Warren will have the political will to get it done. So frequently you find people are out there throwing these ideas out. When a push comes to shove, will they stand up against all the lobbyists looking for this little loophole on that, which is exactly what happened in Europe. They point to Europe as being ineffective. So I kind of think Elizabeth would have the spine to make it meaningful and enforceable.
Financial transaction tax?
So I think that is the consequences of that is overblown as well. I think I'm probably the oldest person here, but we used to have a stock transfer tax. Actually, I think we got rid of it in the mid 1960s. The world wasn't terrible with it or without it. So I think a small tax on financial transactions would not have any kind of a significant impact. It's a good way to raise money, and to the extent it makes it a little more expensive to do speculative, frequent trading. I don't think that's a bad result either. No.
I want to talk about something else you've been very vocal about, which is the deregulation when it comes to the banks. And you were one of the regulators who sort of sounded the alarm on the housing crisis. Right. When you look at what's in place right now, how comfortable are you with the guardrails that are in place? Essentially, if we were to see another significant downturn, are we in a spot where the regulation in place can guide it?
So I think the system is still fragile, and I think the mindset with the financial regulators right now, the bank regulators at least, is going in the wrong direction. It's loosening, under the guise of simplifying. They really are loosening those guardrails for a system that I still think is pretty fragile. And that was another point I made in the op-ed, is that experience matters. And I was a very big admirer of President Obama. But I think on financial reform, we basically ended up with incremental policies. So we basically still have the same unstable system we had before the crisis. A little more capital, a little better liquidity, but it's still pretty much the same system. And importantly, without fundamental change, you get this relentless lobbying attack now because the big banks are just as big and powerful as ever, which is, again, I think with Elizabeth Warren's, this is a key theme of her campaign, is to attack the power structures. And for banks specifically, she would want to restore Glass-Steagall and modern-day Glass-Steagall and break up the big banks. But that's really what you have to do to get fundamental change, because the people who benefit from the status quo are going to keep lobbying for the status quo and fighting any change to the status quo until you actually tackle that basic problem of concentration of power. So in that way, she's a little bit more like Teddy than Franklin Roosevelt in terms of her message, but that doesn't cost anything. That's more antitrust and just restoring some common sense rules about separating investment banking from commercial banking, which probably never should have gotten rid of. So I do think that would, she in terms of financial stability is absolutely the best candidate. And no, I don't feel good about the direction we're in now.
Elizabeth Warren actually referred to some of those people as bonus babies.
Bonus babies.
Remember that?
Oh, I sure do, yep.
Sheila Bair is the former FDIC chair, and it's always good to see you. Thanks for being here.
Nice to see you.
Thanks
for having me. Well, Uber's in the news today. According to a Wall Street Journal report, the company is testing a feature allowing some California drivers to set their own fares. In some cases, the drivers can charge up to 5 times the normal amount that Uber sets. Yahoo Finance's Melody Hom joins us from Playa Vista, California with more. So how exactly would this work, Melody?
Yeah, and we need to make very clear that this is a very limited beta test, and we're talking about 3 specific airports that drivers in California would be able to up that base fare up to 5 times: Santa Barbara, Palm Springs, and Sacramento. And as you can imagine, there may be a lot more backlash coming with a lot of drivers, very freely and with their discretion upping the price for customers, but then from the customer side of things, they inevitably would then voice their concerns to Uber, the company, right? So this is all in light of the AB5 passage here in California, which essentially puts pressure on companies like Uber, Postmates, TaskRabbit to essentially treat their employees like employees rather than the contractors that they have been for the last 10 years. So we can anticipate that a lot of these drivers, according to Uber, they will end up being able to have the luxury to lower prices when surge pricing is in effect as well. Ultimately, I do not imagine that would be the scenario with a lot of these drivers gaining control. We'll anticipate to see how this works out over the next couple of months.
All right, then we have Uber selling its Indian Uber Eats to rival Zomato in a $172 million deal. How big is this?
Yeah, so as we know, Uber has been doing pretty well from the ride-sharing perspective in India. However, if you think about the way that food is delivered in India, most of them, as you can see here, are on motorcycles. So it's not a 1-2 sort of punch scenario. Uber has really struggled to make a lot of headway in India. They had about 3% of the market, whereas Zomato and Swiggy, the two leaders there, had about 80% together. So now Uber is getting 10% of Zomato, and ultimately, I think Dara Khosrowshahi has said in multiple interviews over the last couple of months that if he's not the number 1 or number 2 player in a given market, they will exit. So this is kind of just a continuation of that strategy. As we know, his predecessor, Travis Kalanick, was very much more intent on trying to make headway. Take China, for example, but ultimately I think Dara's strategy will pay off, because what's the point of continuing to incur losses if they would rather have an exchange and perhaps have a bigger stake in a company, even with that 10% share in Zomato, that makes them a bigger player than what they had been over the last couple of years.
All right, we'll see. Thanks, Melody. Before we go to break, take a look at shares of Beyond Meat. Those shares have been jumping on the news that Starbucks is going to explore meat alternatives in its enormous network of cafes. So obviously, if Beyond Meat got that contract, could be good news for the company. And coming up, we're going to bring you more coverage from the World Economic Forum in Davos, Switzerland, including an interview with Borge Brenda. He is president of the WEF. Plus, before we go to break, take a look at some of the losers on the Dow today.
Okay, we have passed 11:30 here in New York City. We're 2 hours into the trading day. Stocks a little bit mixed here. NASDAQ has gone positive. We're keeping an eye on the other two indexes. Take a look at what's happening with the 10-year Treasury yield. It was falling this morning. It continues down 1.77%. The great American comeback. President Trump kicks things off in Davos with a touch of patriotism, but how was it perceived? More from Switzerland as the commander-in-chief kicks off the World Economic Forum. Protecting you online, the FBI makes a major bust, shutting down a website that was selling user information, taking in over 10,000 data breaches. And streaming trouble, how growing competition could have a big impact on Netflix's latest earnings report. Welcome back to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for staying with us. Well, business leaders from around the world are gathering in Davos, Switzerland, as they do each year at the World Economic Forum. Brian Sozzi had the chance to sit down with the person behind the scenes at the event.
Joining me now is Borge Brende, the president of the World Economic Forum. Thank you for joining Yahoo Finance.
Thank you for inviting me.
So, Borge, this is the 50th anniversary of the World Economic Forum. Where do you think corporate America would be if this event didn't exist?
I hope that corporate America also feels that the World Economic Forum is, of course, updating them on what is happening in the world. It's easier to decipher, but also through the engagement at the World Economic Forum, that is now the international organization for public-private cooperation. Corporations will then show that they have, of course, a responsibility towards their stakeholders, their shareholders, but they also have a much broader responsibility to the employees, to society at large, etc.
Klaus Schwab, the founder of this event, what he has achieved here is very remarkable. What has he meant to the organization?
Thank you. Klaus Schwab was the founder, and he's still the chairman of the organization. And what was so unique was that Klaus Schwab, when he started the organization back in 1972, said that companies that really want to have a big footprint also have to care about society, environment, but also inclusive growth and jobs. And I think he's proven so right, even more so when we move from a kind of capitalism to talentism. A company is not better than the talent that you have on board. And I think people would like to work for companies that also, of course, are profitable, but also contribute in a good way when it comes to gender, inclusion, the climate, environment. Then you can recruit the best people.
What are the big themes here at the World Economic Forum this year? And it's a founding mission of Mr. Schwab, is stakeholder capitalism. Why do you think companies are so slow to adopt this? Is it the profit impact that they would feel because of this?
I think there is a big difference between companies. Some companies maybe are slower than others, but some companies are even more proactive than governments. I feel that companies know in moving into a more renewable society, into a society where women and men have the same rights and all this, companies sometimes are more dynamic and progressive than governments. I think governments also can sometimes learn from the companies and vice versa.
Which companies stick out to you as doing things right?
I have to be careful in picking one concrete company, but I think companies in the tech sector is very much relying on the best talent. And those companies can only recruit people if they feel that they're part of something they're passionate about. They can choose between many employers, and I think in Silicon Valley there is a lot of very progressive companies. Of course, then you get, of course, a discussion about social media, you get the discussion about taxes and all this. So it is it's a nuanced picture.
Mm-hmm. Which do you feel as though governments need to get involved here to force some of this change around stakeholder capitalism?
Indeed, governments have to take broader responsibility when it comes to also addressing the national tools that are available when it comes to, for example, inclusive growth. We have seen that overall, the last 2 decades, we've never seen so many people globally being lifted out of extreme poverty, maybe 2 billion people. But we have seen in some developed industrialized countries, we have seen that differences have been growing. And there, governments do have tools to address this: education, upskilling, reskilling, smart taxes, infrastructure. So governments cannot just say that this is happening regardless of us.
One of the biggest read so far to me from the event is the World Economic Forum Global Risk Report, and it was striking, a lot of the finding in there. Most importantly, economic and political polarization are on the rise this year. How do we stop that?
That's a good question. It's true that in the risk report, the people that filled out the survey and was part of the survey, these are world leaders and company leaders, but also academics, say that the threat or the risk they're most concerned about this year is then polarization between nations, but also internal polarization in many countries where we see strikes and people are not happy. So I think that de-escalation of polarization between nations, not supporting proxy conflicts is crucial. I think a prerequisite for continued economic growth to avoid a synchronized slowdown in the global economy is that world leaders also come together and say, trade, smart trade is a good thing. Let's make deals. Let's continue with win-win thinking. Don't then have the thinking of beggar thy neighbor, but do prosper your neighbor instead.
The Trump administration is on the ground all week at the World Economic Forum. As you look back and you reflect on the report, on the latest readings, do you feel as though the administration has caused some of these risks?
So we were happy to welcome President Trump here at our annual meeting. We have 55 head of states and governments, but the U.S. president, representing the largest economy in the world, is an important guest. We are also pleased that many secretaries from the cabinet is joining him. I think there will be, of course, questions also to the U.S. administration on some of its policies. But at the same time, I know a lot of business leaders want to know more about the trade deal, the first phase that was signed the other day in Washington, D.C. Will there be a next phase? What can we expect from the Trump administration if the economy slows down also globally and maybe sooner or later also in the U.S.?
Mm-hmm. Lastly, on the trade deal, you mentioned the trade deal. When you talk to a lot of these business leaders, do you feel as though the trade deal will lift some of the global uncertainty we've been talking about for the past, let's say, 2 years?
I think the market has reacted very positively when it comes to the fact that the two largest economies in the world, China and the U.S., have now agreed at least not to escalate further. That is really what this deal is about. And U.S.-China is almost 50% of the global GDP. So it does matter that these two countries see eye to eye. I think there is a lot of interest now. What will the next steps be? Is there going to be a decoupling? Are there going to be two systems? Or are these two nations going to find a new way to collaborate with more transparency?
Do you think they will?
I hope so.
Yeah. Borge Brende, thank you for joining Yahoo Finance.
Thank you for inviting me.
Coming up, Mexican soldiers stop a 4,000-person caravan trying to make its way to the United States. Plus, disgraced attorney Michael Avenatti is transferred to New York City and locked up in the same cell that once housed drug lord El Chapo. Mexico's National Guard stopped an estimated 4,000 Honduran migrants who are part of a caravan trying to reach the United States. 4,000 people left Honduras last week, crossed into Guatemala, but were stopped at the border with Mexico. Now, several hundred of those people crossed a river into Mexico, where the armed soldiers actually stopped them. Michael Avenatti, the lawyer who once represented porn star Stormy Daniels, was transferred from California to a jail holding center in New York City. Jail officers confirm Avenatti is being held in the same cell that once held drug lord El Chapo. Avenatti is being held without bail on charges he tried to extort money from Nike. The FBI seized the website WeLeakInfo.com. The Department of Justice says the site sold personal information illegally obtained in over 10,000 data breaches containing more than 12 billion indexed records, which included names, email addresses, usernames, phone numbers, and passwords for online accounts. Two 22-year-old suspects linked to the site were arrested in Europe. Princess Cruises Pacific Princess set sail Monday evening for a 111-day around-the-world voyage. The sold-out 4-month trip includes 670 guests and 375 crew members. The ship will dock at 38 ports and 26 countries on 5 continents. Passengers paid $23,000 each for tickets for that cruise. No word if Julie is the cruise director. Remember that show?
Of
Julie
course.
McCoy.
I thought you meant I was the cruise director.
I did not get it. I'm just laughing at Rick's
Julie
response.
McCoy. Oh my God.
And then Gopher, was it Gopher? No, it was the guy, Isaac, who would.
Yeah,
Bartender.
Isaac was the bartender.
Yeah.
All right, despite the political turmoil over Brexit, the employment rate in the UK hit a record high in 2019. It came in at 76.3%. Yahoo Finance's Tom Belger joins us from London with more. What's behind that uptick, especially given the specter of Brexit?
Yeah, indeed. Employment just keeps on growing in the UK. It's now at levels not seen since at least the 1970s when records began. And that's pretty remarkable, as you say, when Brexit's been a hammer blow to business confidence and economic growth has been pretty poor. It's taken many economists by surprise, certainly. But the funny thing is, partly that Brexit hit to confidence may actually explain some of this jobs boom. Investment since the referendum has nosedived. A lot of firms have been scared and uncertain about investing in costly longer-term projects like technology or equipment. What analysts say they've done instead to meet their short-term needs is hire staff. Britain's flexible labour market means they're betting that it would be easier to lay off staff if things get tough than it will be to reverse some of those projects. That's not the whole story. We've also seen a rise of the female labour force as the state pension age has risen for women. As for interest rates, with the bank set to make a decision next week, this probably means that this has slightly lowered expectations of a cut next week. And the pound rose certainly on this news. But to be honest, this data alone, it's probably not going to move the dial significantly. For one, as I was saying, employment seems to be less and less clearly a sign of the health of the economy. And secondly, this data was before the election, and there have been signs in business and consumer confidence of a bit of a Boris bounce since the election. So that's what the bank will be watching in survey data next week.
All right, thank you. Netflix earnings are out after the bell today. Wall Street expects earnings per share to come in at 75 cents with revenue of $5.45 billion. Our next guest thinks Netflix is highly overvalued and a serious risk to shareholders. David Traynor, CEO of New Constructs, joins us from Nashville, Tennessee. Make the case, because we know that the streaming wars are underway, but Netflix seems to be in the lead. Why do you seem pessimistic on them?
They're in the lead for really only one measure only, the first mover advantage in terms of number of subscribers. But when it comes to profits, they're really far behind. I mean, they are burning around $4 billion in cash every year. And the recent announcement that they're going to spend $17+ billion on content means that cash burn is going to continue. The debt load is going to continue to rise. And you know, we've been saying, and we've been wrong for a long time about Netflix, it's continued to go up, but we've been saying that the competition is coming. The margins are suspect and continue to be suspect. And looking at subscriber growth alone is not enough to understand the whole story. And the stock's priced as if it's going to be a bigger and more profitable business than Disney. And yet, look, Netflix doesn't make any money. They haven't shown any signs of being able to make money. In fact, they're going to double down on the spending. And we think it's all going to eventually end pretty badly for equity investors.
Well, I guess the question is eventually when, right? As you say, you've had this position for a while, and you're not the only one. I mean, I've been hearing this argument about Netflix for years now, the cash burn, the dire cash burn argument, right? So what's the catalyst for other people to realize what you're saying, and what's going to be the tipping point?
I mean, that's a great question. If we could predict that, we'd be doing this meeting on my private jet, right? I do think the stakes are higher and higher now. I think it's more and more obvious with Disney Plus and with the Peacock product and more products coming online that are priced at or below what Netflix charges. Think about Netflix built all of sort of their aura and their prestige in a world where they had zero competition. And we've been saying for a long time competition was inevitable. And we heard from a lot of other big firms how they were planning to provide competition, because I think where Netflix went wrong is that their stock price was so successful and their market value got so high that the buy versus build decision for all the potential buyers of Netflix became, well, we're going to build on our own because the stock's just too expensive. And so Netflix is sort of going to be left on an island where they're really sort of a one-trick pony in that they provide streaming content. And so far, no one's really able to monetize streaming content in a way that can create a sustainable business model.
Well, we're talking about competition within the space, but largely in the U.S. I mean, Netflix has more growth outside of the U.S. at this point. There's a reason why they released those numbers back in December, right, in terms of the international growth. So how do you assess that when you consider even the likes of even somebody like a Comcast, even Apple TV Plus? I mean, they're at some point going to have to look outside of the U.S. for growth with the market so saturated.
Yeah, no, I think it's good that Netflix has gotten into international markets. Their margins there just now turned slightly positive. We know the overall business is still highly negative, sort of free cash flow margins. And so, but again, what's going to keep Disney or CBS or NBC or Apple from also going international?
But doesn't as those streaming sites look to international, though, their cash burn is going to increase too, right? I mean, isn't Netflix sort of just pointing to the trend that others are going to follow?
Yeah, but these other firms have made big money in content over the past, right? So if you take out the Fox acquisition, Disney's generating around $20 billion in free cash flow over the prior 5 years, right? That's a war chest they can use to go into new markets. Netflix has been a really pretty big cash burn for most of the last 10 years. And so at some point, and I don't see how that ever stops. Like the big advantage that these other platforms have is that they have a proven track record of making money because they have better ways, better channels for monetizing content. Think about Disney and all its other businesses. Those are effectively content monetization platforms and channels that Netflix just doesn't have.
Yeah.
They don't have and Netflix doesn't have the cachet either. Every sort of new product that Netflix builds, they've got to build that from scratch, which is a lot more expensive than doing 10 more Spider-Mans and Marvel movies.
Right, and they don't have that diversified cash flow, to your point. David Traynor, CEO of New Constructs. Netflix out after the close of trading, and to your point, for now it trades on the subscriber numbers. For the fourth quarter, the estimate is that they will see an increase of 7.65 million of them. Thanks.
Thank you.
Coming up, Joe Biden versus Bernie Sanders. The latest is the two battle it out on Social Security. Plus, the crisis continues for Boeing, why the company is looking to borrow $10 billion. We'll have the details. Let's take a look at some trending tickers from YahooFinance.com. Let's start with Tesla. The shares are up almost 6.5%. We've been talking about the push to have the NHTSA, I should say, look into the reports of unintended acceleration, but the stock is higher today. That's after a call from New Street Research. Pierre Ferragu is the analyst over there. He raised his price target on Tesla to $800 from $530. He said when he put his rating in place in May 2018, he was looking for improvements in cost, range, and performance. He says those have all come to fruition. So now he's bumping up the price target, and the shares have been on a tear really over the past several months. So you can see up about 80% over the past year. So we're watching that stock. We also continue to watch China shares that are listed here in the U.S. Alibaba is one of them that is heading lower after these increasing reports of that coronavirus there and the person-to-person transmissions that have been reported. So those shares down 2.5%. We'll have much more on the markets in a few. Adam?
Akiko, you're looking at Venezuela with Pompeo meeting with Juan Guaido in Colombia.
Yeah, there's been a number of moving pieces in Venezuela over the last few weeks. Secretary Pompeo met with Juan Guaido on the sidelines of this terrorism conference in Colombia, sort of hinted that additional sanctions could be coming, whether that was on Venezuela or the likes of Russia, which has been seen as propping up the Venezuelan economy. That's a big question. But I think what I've been watching is these moves that Nicolas Maduro has made over the last few weeks. One, pushing out Juan Guaido, essentially tapping his own assembly leader. That sort of sets the stage for him to make changes on the investments, foreign investments into Venezuelan oil fields. Right now, because of the laws that Hugo Chavez said, that is not allowed. They don't get to take a big stake in joint venture. If Maduro can get those foreign investments flowing again into oil, that to me suggests that maybe he can hang on a little longer. Chinese and the Russians.
But the Chinese have they owe a great deal of debt to the Chinese, who essentially hold the deeds, I would guess, to the oil infrastructure at this point, don't they?
Well, they do, but what Venezuela is looking for is to rebuild those oil fields, right? If he can get the foreign investments flowing again, and Russia, I think, is the key one to look for, that could sort of pave the way for Maduro maybe to hang on a little longer. I think, we should be watching for the U.S. whether they impose additional sanctions moving forward. And by the way, Juan Guaido also heading to Davos after this meeting. So
they better hurry while the world still needs oil.
Yeah, well, that's the other thing.
I mean, we're all kind of slowly moving away from it.
And Rick, you're looking at, I can tell from the dolls in front of you that you're looking at something going on with Bernie Sanders and
yes,
Joe Biden.
we have a new fight in the Democratic Party. So Bernie Sanders says, Joe Biden wants to cut Social Security. And Joe Biden says, fake news, man. So they're kind of poking each other in the eye over this. And here's what's really going on. Joe Biden, in the past, has said we do need entitlement reform because Social Security and Medicare are devouring more and more of the federal budget. And Bernie Sanders interprets that as Joe Biden saying he wants to cut your Social Security. Joe Biden has not said he wants to cut your Social Security, but he has said in the past we need to get our arms around this because Social Security is going to start costing more than it takes in new taxes either this year or next. I mean, it's a problem that has to be addressed.
But one of the reforms could be, whether it's from either of them, raising the cap when you pay Social Security.
That seems inevitable, frankly. Yeah. I mean, I don't know how any politician can say that's not going to happen because we're not going to say, seniors, you're out of luck. That's not going to go over with voters. So we're going to, the cap is now you pay Social Security taxes on 137, your first 137. I think that goes up on a cost of living basis, but the cap is going to go up. But at the same time, Bernie Sanders and Elizabeth Warren want to actually increase Social Security payments with, more taxes on the wealthy. I don't think that's going to fly either. I think voters should know a rational approach to this problem is to say we're going to have to do something to stabilize Social Security in coming years, and to just say we're going to give everybody more and it's going to come magically from somewhere is not legit.
All right, Rick Newman, thanks for being here. Coming up, Trump targeted the Fed in his address at Davos. We'll break down his comments. Plus, before we go to break, let's take a look at some of the winners in the Dow right now.
right, a little bit after 12 o'clock in New York City, 2.5 hours into the trading day, stocks are trading down at this point. Also, we've been watching oil fall. Oil, West Texas Intermediate crude falling $58.29 a barrel. The economic world descends on Davos, Switzerland. President Trump kicked things off and uses part of his time to go after the Fed. We're going to take you to the World Economic Forum there in just ahead. On high alert, concern over a possible pandemic grow as a rapidly spreading pneumonia-like virus that has already killed several and sickened over 200 people spreads across Asia. And costly issues. Boeing is reportedly in talks with banks to borrow billions of dollars amid the ongoing fallout from the 737 MAX crisis. Welcome back to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for being with us. Well, Starbucks announcing it will add a plant-based menu, more options to its offerings. Inez Ferrer is on the floor of the New York Stock Exchange with the stock reaction, not just for Starbucks, by the way. Inez?
That's right, for Beyond Meat as well, Julie. Well, CEO Kevin Johnson made these comments about Starbucks in a letter to shareholders and its partners, also talking about some other goals, including reusable packages and also reducing the amount of waste that goes to landfills by the year 2020. But certainly what's garnered a lot of attention is Starbucks announcing that it will expand its menu options for some plant-based products. Now, it didn't give any details as to when or what kind of products or which will be the supplier. But if you take a look at Beyond Meat stock is up around 13% today. And this stock has really been on a tear since the beginning of January, up more than 60% based on some positive headlines over the last few weeks. You had McDonald's that said that it was going to be expanding its testing of its Beyond Meat burger at some of its restaurants in Canada. You also had Beyond Meat announcing its deepening of its relationship, expanding its relationship with one of its suppliers to make sure that there's no shortages. And also, and Beyond Meat has been deepening its relationship with Dunkin' Brands. Remember that Dunkin' Donuts offers one of their Beyond Meat sausage sandwiches as well. So you're looking at Beyond Meat today that's seeing a pop on the heels of this Starbucks news.
Inez, thank you. In his address at Davos this morning, President Trump once again taking aim at the Fed.
The Fed has raised rates too fast and lowered them too slowly. And even now, as the United States is by far the strongest economic power in the world, it's not even close. It was going to be close, but a lot of good things happened to us and some not so good things happened to certain other places. They're forced to compete, and we compete with nations that are getting negative rates, something very new, meaning they get paid to borrow money, something that I could get used to very quickly.
Let's introduce today's panel to get their reaction on all of this. Still here this hour is Akiko Fujita. Also joining us is Jim Awad, Clearstead Advisors Senior Managing Director. And to help us understand, to dig into what we can expect from the Federal Reserve's policy this year, John Augustine, Huntington Private Bank CIO. And John, clearly, the president's still at odds with Fed policy. You point out that all of us should get ready that 2% yield on the 10-year is the new 3. What does that really mean going forward?
Well, what that means is rates stay lower longer in our view, at our shop. And arguably what it means is the Fed's back on hold. They're going to keep short-term rates around 1.5%. And now the onus is probably on the ECB to see if they start to bring them up as we go through the year. They have the availability to.
What are the implications then for yield and return-seeking behavior? Obviously, rates have already been low, below 2% for a lot of the last year, and we've seen people look for risk because that's where they're getting a return on their investment. Are we going to continue to see that?
Right. It's still a search for yield world, so to speak. It's still somewhat of an equity-biased world with those yields now below inflation again. Now, that's something that wasn't happening a year ago. Real yields were positive, real yields are negative. Yield curve is normalized. Good environment for equities.
I want to just pick up on what you said earlier, that you think that the onus is now on the ECB. I mean, what is the case for the ECB to start tightening a bit after they essentially put that on hold? They did the handoff from Mario Draghi to Christine Lagarde. They haven't indicated that they're going to start. Are you starting to see the numbers point in that direction?
It's more the narrative we saw in Europe coming out of the second half of last year, that maybe negative yields has not worked the way we wanted it to. And that now, what will Christine Lagarde say? Will she have a different view, a different path? That's something that's on our mind. We saw Sweden kind of blink at negative interest rates a month ago or so. Will the ECB come to a path to getting normalized or more positive rates? We think that's something beyond the market's mind.
Yeah, and I think one thing that they've learned is that it's detrimental to the banking system and not healthy for their financial system. So you're probably going to get a handoff to more fiscal policy as opposed to monetary policy. I think most central bankers feel they've sort of reached the limit of what they can do, and they want to stand pat and support the economies, but something different has to take us to a next leg of stimulus where stimulus is needed.
So we're not exactly talking about a move on the interest rate so much as it is support from the fiscal side.
Potentially, at least no more negative on the interest rate. Is there a path to positive on the interest rates? That's what will be on the market's mind as we move further into the year.
But this drop in interest rates, it helped propel markets. The multiples are now, about 19x? But now we have to turn our attention, if you're an investor, as you point out, to real earnings.
Right.
And what do you expect going forward? Because we're not going to get that wind in the back of our sails.
Well, number one, it turned housing second half of last year. Now it's positive for the U.S. economy. So that's good for the economy. Now earnings. So we get a little bit steeper yield curve in the States. That's more supportive of the banks, the financial sector. We don't think it's a headwind for companies borrowing money or individuals borrowing money yet. So it's probably neutral at this time. The area we like about interest rates, short term, the bond market and the Fed are in sync, around 1.5%. They haven't been in sync for years. That's arguably good news.
How long can they stay in sync, just quickly?
For the rest of this year, we suspect Fed stays on hold, inflation stays relatively low.
Let's hope the Fed is listening. John Augustine, CIO of Huntington Private Bank, good to have you here.
Thank you. John. Well, turning now to China, a factor putting pressure on global markets today is that deadly virus emanating from China. It's bringing this year's global risk rally to a pause for the moment. News of the virus has hammered Asian equities. It helped drag European stocks lower. Let's talk a little bit more about this, because we have seen situations like this before. We saw it with SARS. We saw it with various versions of the avian flu, and it's hitting at a particularly vulnerable time because it's going into Lunar New Year.
Yeah, well, this is, I put in the category of a black swan, that it's an extraordinary event that came out of nowhere, that's unpredictable. And my experience is someday this will be wrong. A black swan can evaporate the world economies. But usually from a fundamental investment point of view, it pays to assume the world is going to go on as normal, that we will power through this, and on the margin will impact economic activities moderately to the downside, but that we'll get through this, and you invest based on the fundamentals that we know now, not what they could be based on something we can't predict.
Yeah, but human nature is to get worried and then to react against your best interests. But we've seen, as we've looked in the past, they have been able to contain and get on top of these kinds of things, as with SARS. That would be hopefully the expectation with this.
Well, that is the expectation. That's the hope. But what we were talking about earlier, I think, is the uncertainty as well, right? In terms of what would make investors nervous. I mean, I'm wondering, still in this very early phase, are we going to continue to see sort of Asian equities under pressure? Is this sort of a global concern that's going to arise?
Well, it depends on the incoming news. I mean, if it multiplies and we start to see people in San Francisco and in the United States, we went through this with SARS for a while. But we live in a wonderful world of science and medicine. And my best prediction, again, you don't know, your best prediction is that they will get it under control before it becomes too significant in terms of the worldwide economies and health. And we'll get back to worrying about the U.S. economy and profits and interest rates and the usual stuff that we worry about. I think at the end of the year, when they close the books on 2020, I don't think it'll be this pandemic that will be the driving factor behind market action.
No, but it could actually be Boeing, because there's a lot of worry about that. Reportedly in talks with banks and looking to borrow $10 billion as it faces mounting costs after 2 fatal crashes and the grounding of the company's 737 MAX aircraft. Joining us with more is Alexis Keenan, and they've got, $6 billion lined up? What's going on here? They need this money.
Yeah, Adam. So CNBC and Reuters both reporting that the company might even exceed that $10 billion loan number. Even at $10 billion, that would be actually double of what analysts had been projecting, and that is that the company would be looking in the first quarter to issue about $5 billion in debt. Now, the loan, if it does go through in full as at that $10 billion level, it's said not to raise really liquidity concerns, but it would be on top of a twofold increase in the company's revolving credit. That's $9.5 billion that it took on in October. Now, Boeing has already secured, according to the reports, that $6 billion that you mentioned for the new financing coming from Citigroup, Bank of America Merrill Lynch, Wells Fargo, and JP Morgan. Now, the loan is said to have what's called a delayed draw structure that would mature in 2 years, though the terms that would govern both the rate that Boeing would get on that loan as well as any additional conditions that the banks would be putting on it have not been disclosed. I did reach out to Boeing. They are not commenting on the reported loan at this time. Also today, the New York Times is out with a report that draws similarities between a 2009 Turkish Airlines crash in Amsterdam that killed all 9 passengers and crew on board. According to this report, a review of previously confidential documents shows that design shortcomings on the plane that was a 737, not a 737 MAX, but a predecessor to the MAX. They say that reports were buried and that a single sensor problem, like with the 737 MAX, actually created a misfire unknown to pilots. The report claims that there was resistance by Boeing to fully disclose this problem and that instead they rested blame primarily on pilots. In response to that report, Boeing tells Yahoo Finance that on comparisons between Turkish Flight 1951 and the 2 MAX accidents, these accidents involved fundamentally different system inputs and phases of flight. The DSB conducted the investigation in accordance with the guidelines. The U.S. NTSB appointed technical advisors from Boeing, which is the standard process, they said. Adam and Julie?
Thanks, Alexis. Appreciate it. Let's talk with the panel more about this.
Yeah.
I think it, from a layman's perspective, I am no flight engineer, it seems like there is continues to be a fundamental disconnect from all of these reports we're getting on Boeing and how the stock has been trading. I get it's a duopoly. I get it's a huge company. I don't get why it's trading this way.
The market is assuming exactly what you said, that they will get through these problems, that everybody's rooting for them, that the government is rooting for them, obviously their employees, that it is a duopoly, and that they will manage their way through this. Of course, the risk is that that's not true. We all remember, and I'm not suggesting this, but we all remember great companies like Polaroid and Kodak and that started to stumble and continue to stumble. I don't think that's the case here, but you have to say the risk is that the news stays worse than expected for longer than expected.
Right. And how much is it going to cost them in the end if they're already taking out a $10 billion loan?
Right. I mean, I personally wouldn't. My worst investment mistakes have been buying value stocks that ended up getting cheaper because the problems were worse than you expected. I would make 2 guesstimates at this point. The first is that it's too early to buy Boeing stock, but the second is that the damage to Boeing will not spread materially to the rest of the economy, that they will keep enough liquidity to work their way through it, but that it'll be a suppressant on economic growth, probably for the first half of the year.
They're saying about 0.5%, but then there was the story over the weekend that some of Boeing's partners are now asking them, rebadge this plane. Yep. No one wants to get on a 737 MAX. Even if it gets approval, they're saying possibly March, maybe April. Boeing's going to have to do something. I mean, they can't redesign it.
Yeah, there's like the one hand where they have to figure out the mechanics of all of this so they can get back in the air. And then there's the big PR marketing campaign that needs to follow, right? Just to sort of reassure those who are getting on the plane. I mean, I wonder if this gets bad enough, do you see a scenario where the government steps in a way that is similar to what we've seen in the past with, for example, the big 3 in Detroit? You know, I mean,
too big to fail. You're not there yet.
We're not there yet.
You're not there yet. You could get there. I mean, there's a scenario if you started to get serious bond downgrades and the bonds started to trade at a discount. The free market works incredibly well, and the stock would start to tell you that. So it's possible, but I don't think you're anywhere near that yet. But if you got there, I do think that that's a viable scenario. They're not going to let Boeing go out of business. They would recapitalize it in some way that would hurt both the bondholders and the stockholders, and protect the much of the employees, and the country would go on. But I want to emphasize you're probably months away from that if that's the scenario.
Fascinating column too talked about they need to get the board. You know, they moved headquarters to Chicago. Needs to get back to Seattle or back to the Seattle area so that they're literally with the engineers and talking one-on-one. But all right, coming up, the Senate resumes the impeachment trial of President Trump 1 p.m. today. We'll get the details from Washington right after this. Plus, before we go to break, let's take a look at shares of Beyond Meat. They are trading higher. That's after Starbucks announced they could be exploring meat alternatives in their shops.
Welcome back to On the Move. I'm Jared Blickery. We got the Dow still underwater here, but not by much, down 33 points or 11 basis points. S&P 500 down only 6 basis points. Here's the intraday price action. We can see after making the session low, after about 10 a.m., we've climbed back almost to the unchanged. NASDAQ Composite is slightly in the green right now, and the Russell 2000 really underwater. The yield curve is contracting. We have the 10-year T-note yield, which is right here. That is down by now 6 basis points, had been down by 7 basis points, so we want to keep an eye on that. Also going to look at the U.S. dollar index that is pairing losses right now. That's after Friday's rather steep gain, so we want to keep an eye on this. Looks like it might want to break to the upside here. Also going to check out WTI crude oil. That is down by only 1/3%, had been down by much more earlier. Kind of a rocky session over the last few days in the electronic market. We're watching that as well. And then gold futures, those are down by about 21 basis points. We're going to look at the NASDAQ 100 heat map quickly here, and we can see that Apple is underwater after reaching a record high. Microsoft, though, is in the green, record high there as well. Alphabet up 16 basis points, Amazon up about 40. Intel doing very well today. That's up over 2%. And Costco, record high, 2.5%. Over the last year, up 46%. We'll be right back in a minute.
As the elite meet at the World Economic Forum underway in Davos, discussions about central banks and GDP growth are in focus. Our next guest says as we look toward the next decade, economists need to consider how we measure GDP and whether factors such as non-financial wealth and the environment need to be taken into account when determining the overall health of economies. Joining us now is Paul Grunwald, SP Global Ratings Chief Economist. Good to have you here.
Good morning.
So in context, take us back to, Macro 101. When we're talking GDP, the formulas that we use were developed, 80 years ago?
After the Second World War, right? And they were supposed to measure market-based transactions, goods and services traded on markets, and they do a pretty good job of that. But as you mentioned, they miss a number of things. Off-market transactions are one. And the other thing is they don't really account for how things evolve over time, the so-called stocks, whether that's a physical capital stock, a human capital stock, or the environment. And that's the big thing right now.
Right. It is the big thing with the whole idea of stakeholder capitalism really becoming much more part of the discussion. How close, though, are we to a measure like you're describing becoming, GDP is the standard, right?
Right.
How close are we to an actual measure that people
Well, that's
use?
the rub, right? Because the reason we put so much weight on GDP is we can measure market prices, so we can generate GDP, which is based on market transactions. Once we go off the market, we need some sort of shadow price or some other thing that's not readily available, and then you've got a whole new set of challenges around getting the data. Carbon pricing is a good one. How are we going to score environmental trade-offs, right? What are we going to do now if that has a positive or negative impact on the future? How do we make those decisions? If we can't measure it, that's tricky. So that's the big push right now.
Well, the debate around GDP is also because it doesn't necessarily reflect what's happening today. What would you say are the fundamental shifts that have happened within the economy that need to be accounted for when looking at what the formula should be?
Well, a couple of things. One is the capital stock has moved from being physical to more intellectual and mental. We don't capture that very well. The usual stuff that economists focus on, externalities. So a firm produces stuff and they sell it into the market, but they pollute the environment at the same time. We don't kind of ding them for that one, right? Because it doesn't get picked up. So all that, the more holistic measure of activity, I think, is what we're going for.
Is anybody creating sort of tentative models that we can start to experiment with, or is it just a concept at this
Well,
point?
a bunch of governments, the New Zealand government's been pushing this. Some of the European governments have been pushing this. Us as a firm, we're trying to measure environmental trade-offs, environmental scoring on credits, et cetera. So there's a lot of different actors doing that. But as you said, we've had GDP around for 7 or 8 decades. We're comfortable with that. We know how to measure it. And if we're going to the trickier space, that's going to take time before we converge on, I guess, a set of standards and measures.
One of the other big themes that you're watching as we go into the next decade is the idea of whether we will see more divergence from emerging economies. In other words, is China going to choose a path of inclusion with the global economy, which has meant speedy growth for it, or is it going to continue to sort of break away, which might mean slower growth? And maybe not only China, but India and other economies are going to be faced.
No, that's right. I mean, we get the questions, we're starting a new decade, what's the delta for the decade? And the mature economies are going to do their thing, right? The US is going to be a 2-ish economy, plus or minus. Europe's going to be 1.25, 1.5 forever. There's a much bigger question mark around the path for China, and I would say maybe a couple of decades behind that, the path for India. China, as you noted, has done extremely well integrating into the global economy and sort of, gaining through trade and technology and moving up the value chain. And now we're in a tense period. Is China going to remain engaged, or are they going to pull back and do a more sort of self-contained model where some of those benefits would slow down? That's a big question over the next decade.
Well, why would you ask that question? Simply because everything they seem to be doing indicates the opposite, the Belt and Road Initiative, for instance.
Right, the Belt and Road is kind of expanding their sphere of influence, but if we think of technology, for example, as the driver of Chinese growth over the next decade, and we've got the tension with the US, and maybe they want to do China 2025, do it a bit more domestically, but on a slower path, that's going to have a measurable impact on Chinese growth over the next decade. I mean, China's not going to disengage. It's a question of whether they, step back a notch and do more on their own and less in an integrated way. Let's remember the leading economies who are supplying China with the technology are the US, Germany, Japan, and South Korea, if you sort of move back through the tech value chain. And those are the ones that China needs to remain engaged with on the tech front.
All right, Paul Grunwald, SP Global Ratings Chief Economist. Good to have you here.
My pleasure.
Thanks, Paul. Well, let's go to Washington, D.C. now. That's where the Senate impeachment trial of President Trump is scheduled to begin. Joining us now with more is Jessica Smith. So, Jess, what should we expect from today's session? We've heard from Mitch McConnell that it's going to be a quickie.
Right. The session today will get started at 1 o'clock this afternoon. First up, we'll be debating and voting on the rules of this trial. Majority Leader Mitch McConnell released a resolution outlining those rules. Each side would get 24 hours divided over 2 days to make their opening arguments. Since the trial does get started at 1 p.m. every day, that means these proceedings could go late into the overnight hours. Then after the opening arguments, there will be 16 hours of questions, and then the Senate could vote on witnesses and documents. Democratic lawmakers have been slamming these rules all day long. House impeachment manager Adam Schiff says the rules make it impossible to have a fair trial, and he asked why McConnell would want to structure the trial this way. Let's watch.
Is this about hiding the evidence from the American people with late night sessions? Is this about just trying to get it over with? Because that should not be the motivation here. Senator McConnell has taken the same oath as every other senator in that chamber, and that is to do impartial justice, not to try to skew the process in such a way where the House is not permitted to put its evidence before the American people.
Senate Minority Leader Chuck Schumer says he will be putting forward amendments today as the Senate considers this resolution. So that will be dealing with witnesses and documents. President Trump, of course, is at Davos as his impeachment trial begins in earnest. The White House press secretary says that he'll be briefed by staff periodically throughout the day. Adam and Julie.
Thanks, Jess. Appreciate it. Coming up, paging Dr. Tech. A new report says hospitals are giving names like Microsoft and Amazon access to your medical records. Plus, Starbucks takes on climate change, the company's new plan for sustainability. It's about 12:30 here in New York City, about 3 hours into the trading day, and stocks are now mixed. The Nasdaq popping into the green as the S&P is very little change to the downside. The great American comeback. President Trump kicks things off in Davos with a touch of patriotism, but how was it received? We'll have more from Switzerland as the commander-in-chief kicks off the World Economic Forum. Privacy concerns. A new report says hospitals give big names like Microsoft and Amazon access to your medical records. And brewing up change. Starbucks CEO Kevin Johnson makes big plans for the company to try to take on climate change. Welcome back to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. Business leaders around the world are gathering in Davos, Switzerland. Each year at the World Economic Forum, Yahoo Finance's Alexis Christoforous sat down with one of them.
The global communications firm Edelman is out with its 20th anniversary Trust Barometer, and here to talk about that is the CEO of Edelman, Richard Edelman himself. It's great to have you here. Thanks for being with us.
Great to be here.
Lots to dig into here, and I guess one of the big takeaways is that more than half of the people you surveyed, half of the 34,000 people you surveyed, believe capitalism in its current form does more harm than good in the world. How is that?
So fears have eclipsed hope. And the fears include downward economic mobility and a loss of social status. Literally 83% of people told us they're afraid of losing their job in the next decade to automation, globalization, or immigrants. And there's a real sense of unfairness. The mass class divide is the largest we've ever seen. And it's in countries we've never seen it in before. So happy Canada and Germany, Saudi Arabia has a 21-point gap between the elites and the mass population. So these are all signals that the system isn't working for most people.
And right, this is a global look because you surveyed people through 28 different countries. Yeah. And another trend you saw here is that people are trusting business more than they are other institutions. And I'm curious why that is.
So it's the first time that business is the most trusted institution in the world. We've done this survey starting after the battle in Seattle in 1999. And so NGOs have always been top of the charts. Business has done this because you start to see action, not words. It's not just social responsibility, it's changing how business is done. And so you see examples of Microsoft with Satya Nadella, or Doug McMillon at Walmart, or Unilever making a big commitment on cutting back virgin plastics, and Alan Jobe out front making that very important pledge. So that's the change.
Very recently, of course, Larry Fink of BlackRock announcing they're going to look at more environmentally sustainable type investments and dump some of the investments they have that are harming the environment.
Well, it's very consistent with what the Business Roundtable agreed in August. 185 American companies have signed on to actually make stakeholder, not shareholder, the first thing. And Fink's very passionate missive yesterday was very clear about the risk of environment and to companies and to cities, and that it's a new level of risk for his investments, and he's going to have funds that are very clearly targeted to this new mentality of consumers and employees.
Back to the idea of capitalism as it stands needing to change. You've got Mark Benioff, co-CEO of Salesforce, Ray Dalio, the big hedge fund guy, coming out publicly recently and saying it has to be a more fair system. So it seems as though that's seeping into the public attitude.
I think that's correct. The idea somehow that business is competent isn't enough. It also has to have ethical behavior. And we've actually found in our research that only a quarter of trust is conferred by your ability to do your job. It's now 3/4 tied to, are you sustainable? Are you an ethical employer? Are you, one way or another, involved in job retraining and paying fair wages? These are new demands on business.
Which companies do you think have done a good job of that?
Starbucks taking out straws from the cups. Kevin Johnson, the CEO, also committing to hiring veterans and opportunity youth. Unilever making, again, a commitment to sustainability. Walmart. And these companies have really led in category and changed the rest of the way that business looks at the world.
Getting back to the way people now seem to be trusting business more than any other institution. More and more, they're also expecting a lot from their company's CEOs to sort of lead the way in terms of change.
A stunning 92% of people told us, I want CEOs to speak up on the issues of the day, from LGBT to privacy to sustainability. And 75% said CEOs should lead their companies and not wait for government on these key issues. So move ahead. So actually, the reason for this is that trust has actually become local. That, in fact, it used to be in the Moses model from the mountain down. Then it moved 10 years ago because of the rise of social platforms to horizontal, to peer-to-peer. Now, in the last year or two, it's moved to local. People close to me, a person like myself, a fellow employee, colleague, and my CEO. So my employer is 20 points higher than business in general.
You touched earlier on 83% of respondents saying they actually fear losing their jobs. I found this surprising, especially, at least I can speak for us here in America. We've got low unemployment at a 50-year low. We've got a booming stock market, a strong economy. What are some of the reasons why people are afraid about losing their jobs?
It's a trust paradox. You know, for the prior, 15, 18 years, we saw that the model that was proposed in the early 90s about upward economic mobility and tied to a strong legal system was the determinant of trust. So rising GNP more or less indicated that a country would be trusting. It's now no longer that. In fact, we see for the first time that it's tied to income inequality. And the big gap in trust for institutions is for government. If there's high inequality, there's low trust in government. And that's because government is seen as just being unable or unwilling to fix it. And so why are people concerned about job loss? They're concerned because they go into their CVS store and they see a place with no clerks. And they're foreshadowing a change in the retail environment and also in financial services where jobs are definitely going to be replaced by machines. And so are we going to retrain? This is the existential question of the next decade for business. Retraining is a necessity if 40% of the jobs, according to McKinsey, are going to be shifted one way or another because of the Fourth Industrial Revolution. We have a responsibility, both moral and practical, to retrain people.
This is your 20th year doing this, right? Kind of went by like a blink. You're right, 20 years ago, and I'm sure you've seen lots of trends during that time. What are some of the big takeaways for you?
So the most important trends are dispersion of authority, that you move from a top-down model of government officials and CEOs towards a more dispersed, individuals, peers. Then we also saw a real rise of business, decline of government since the last decade because of the impasse in Washington, impasse in Brussels over Greek debt, et cetera. And lastly, we saw the battle for truth, which has a lot to do with your business. 75% of people actually feel that they don't get quality information anymore. They're worried about fake news, and they feel as if the media has become politicized and that opinion and fact are too combined. And so the media becomes an essential partner in the future 10 years if we're going to have quality decisions.
You think there's reason to be optimistic about the next 20 years of this barometer, this trust barometer of yours?
I do. I feel that business is the catalyst for change. It can't do it on its own, but business definitely has the bit between its teeth and is dragging the sled and recognizing that in the future, prosperity is only going to work if it works for all. And that there is going to have to be operational change, not cosmetic change.
And an overwhelming number of people looking to the CEO to make that charge. Richard Edelman, thanks so much for these insights. We appreciate it.
Thanks for having me.
Oh, before we go to break, let's take a look at shares of Beyond Meat. Those shares are going up after Starbucks announced it's going to be looking into meatless options at its cafes. Plus, fighting the wage gap, why the battle between genders is said to fuel a, quote, sexist economy.
Let's take a look at the top trending stories on Yahoo Finance right now. The state of California could soon list acetaminophen as a dangerous carcinogen. Now, that drug can be found in hundreds of popular over-the-counter medications like Tylenol and Sudafed, but state regulators claim it can potentially cause cancer. If proven to be true, the decision to list the drug as a toxic chemical could have widespread repercussions for the pharmaceutical industry. Starbucks is looking to tackle climate change. On Tuesday, CEO Kevin Johnson outlined a plan for the coffee giant to become more environmentally sustainable. In a company-wide letter, Johnson says he's committed to, and this is a quote, become resource positive and give more than we take from the planet. His plans to take action include expanding plant-based menu options, using reusable packaging, and investing in more agriculture practices. Shares of Beyond Meat are in the green following that announcement. And today is National Hugging Day. According to a doctor at Cleveland Clinic Children's Hospital, when you hug a child, it not only regulates their emotions, but can help with their brain development. Research also shows that receiving a hug releases a chemical in our brain to make us feel good. So make sure you hug someone today.
According to a Wall Street Journal report, Amazon, Microsoft, and IBM have been granted access to the health records of millions of patients. But what role do privacy laws play in enabling the role of hospitals as gatekeepers of such personal data? Angelique Kamlani joins us now with more. I mean, there are privacy laws, and frequently, even to get my own documents from my own doctor, I have to sign something.
Absolutely. And that's actually one of the key issues that has been sort of bubbling to the surface, because a lot of people didn't really pay attention to the fact that there are, in fact, many third parties that do have access to your patient information, whether it's on the back end, with the management services, cloud services, or when you're talking about digital startups and their pilot programs with these companies. So granted, a lot of it does follow a HIPAA rules, which, does specify that it does have to be kept sort of de-identified, but what these relationships are ruled by a different sort of rule that doesn't have like any solid backing to it. It's part of HIPAA, but it says that it's up to the businesses talking to each other to define that relationship.
Okay, but let me cut to the chase on the privacy issue.
Mm-hmm.
However they get it, am I protected by HIPAA, or can, say, Google, whoever's got it, then sell to potential advertisers?
That part is blocked. What it isn't blocking is whether or not they can optimize their services based on the information. So the way that they're collecting this data from these health systems, that can then direct them to develop a better product for said health systems.
Yeah. I mean, it seems like what you're doing is you're taking technology and making the world a safer, more efficient way to deliver medical care. So I understand the privacy issues, but to me it sounds like it's a good thing that you have more transparency in medical information and technology. That would be my personal
I think the thing that's been shocking is that it's been companies that you associate as just part of the tech world, right? So people aren't used to the idea of Google having access or Amazon having access, knowing what they do with advertising and knowing what they do with your personal information.
But so it's not clear to me from what you're saying if they do in fact have your names. You said that there's no identifying information.
That was for the relationship. So yes,
right.
For the cloud services that they're providing health systems, yes, they do have your name.
Yeah, so that's...
And they can link it to the data within different sources.
That's protected under HIPAA.
So it can't be sold to an advertiser.
It can't be sold, correct. It just can be used internally for them to...
Brave new world. 4Front Ventures is a publicly traded USMSO or multi-state cannabis operator that currently owns and operates as well as manages 6 cultivation and extraction facilities. Chris Crane is the president of 4Front Ventures and joins us now via Skype from Chicago to discuss where he sees the cannabis industry going in 2020. And one of the things that I read about you is you predict places like New York, New Jersey, the states that failed to legalize recreational use last year, probably will get around to it this year?
Well, some of them will probably get around to it this year. It's hard to say definitively that they all will. But, Illinois last year became the first state in the country to legalize via the legislature. And I think that's going to provide a lot of political cover to other states that have been considering doing this, but didn't necessarily want to be the first. And so I would look at states like New York, Connecticut, Rhode Island, New Mexico, Vermont, all of which are looking seriously at some sort of legalization bills this year.
Chris, last year was a really tough one for publicly traded cannabis companies by and large. What happened? What do you think the transition what transition occurred in the industry that made it really tough? Because a lot of people were betting on these stocks. And what do you think now happens, including with your company in 2020?
Well, I think a lot of what happened was that these valuations were largely driven by speculation over who was going to be the largest cannabis companies. So these valuations were driven by who held the most licenses and in what states, particularly what limited license states, were those licenses in. And what we saw last year, I think, was a shift to more traditional valuation metrics. Investors started looking at which companies are actually hitting their targets, which companies are driving most revenue, and which companies are on the fastest road to becoming profitable. And the reality was the valuations that most of these companies had were a little bit out of whack with where their revenue and where their profits were. And so we've seen a bit of a reversion to the mean. The good news is we have actually started to see an increase in these stocks over the last couple of weeks. We're starting to see some good numbers come out of a lot of these companies as the investment markets start to realize, which companies are really built on a foundation of operational excellence and which may have just been built on hype.
Are there, at the state level, are there any organized political or lobbying groups working against legalization?
Well, of course, there's Project Sam and Kevin Sabet. They're certainly the most vocal out there today. Thankfully, I think there are more organized efforts working in favor of it these days. That certainly wasn't the case 10, 20 years ago when I first got involved in this issue. But the political calculus has really shifted on this. And it really, in most of these states, even in all the ones, and most of the ones where it didn't pass last year, the question is not really whether to legalize. There's consensus in virtually all of these states on the fact that they should legalize. The question now is over the details and how to legalize. And that's where these bills got caught up last year, and I think where many of them are going to find consensus this year.
What's your outlook on the federal effort it's considered a Schedule 1, recreational marijuana, THC, Schedule 1 drug. What's the effort to remove that? Because that would clear up some of this clutter and confusion over all the different state regulations, wouldn't it?
Sure. Well, the answer here is descheduling. It's taking cannabis out of the Controlled Substances Act and regulating it at the federal level, similar to the way that we do with alcohol and tobacco, neither of which are governed by the CSA. And so there are movements afoot in Congress, predominantly with the MORE Act, which has been marked up through committee in the House and is awaiting a hearing on the House floor, which would deschedule cannabis. And in the meantime, there are things that we can do to help alleviate some of these issues, in particular, passing the Safe Banking Act, which has already passed through the House and is currently pending in the Senate Banking Committee, which would allow banks to do business with cannabis businesses like they do with any other businesses out there, and would be a real boon to cannabis businesses that have a hard time accessing banking. And I think would also be a good signal to investors out there that these companies are safer places to put their money.
Chris, you're there in Chicago, and of course, Illinois just recently started legally selling recreational marijuana. It was rocky. There were a lot of supply shortages. How long do you think till that works through the system? And do you think that banking law and the banking regulations are a constraint on meeting that the demand that's out there?
Well, there's kind of two things here. So the big reason for the supply shortages today in Illinois is that the bill passed in June, and we went legal here January 1st. And so you had a cultivation and production infrastructure that was built to meet the demands of a medical market with about 85,000 patients. And that had even doubled just over the course of 2019. And so it takes more than 6 months to build that physical infrastructure, to get licensing, to get permitting, to do the physical construction, and then to actually grow the plants, process, harvest, everything else. So it'll probably be 6 months to a year before we see a real stabilization in supply in the market here in Illinois. Fixing banking, though, would certainly help, because one of the issues that's preventing these companies from scaling up their cultivation infrastructure as quickly as possible is the lack of access to investment capital. Building out 220,000 square feet of flower canopy, which is the maximum allowed in the state of Illinois, is going to cost most companies somewhere between $60 and $100 million to build that much out. And with the banking situation as it is and a lack of access to institutional capital, it's very difficult for companies to access the amount of capital needed to expand that quickly. So instead, they're forced to rely on cash flow. and instead scale up in phases rather than building everything out all at once, which they'd be more likely to do if they had access to that kind of investment capital.
All right, Chris, well, we'll have to check back in with you as that process is ongoing. Chris Crane is president of Forefront Ventures. Thank you.
Thank you.
Coming up, swiping left on Bumble, why the company is facing backlash for not making enough of a difference for women. Plus, with just one picture, this app can find your name, address, and other personal details.
It's time for our buzzer beat around. 3 stories, 1 minute each, and we start with this. Bumble founder and CEO Whitney Wolfe Herd received backlash after critics say she has not made a measurable difference in creating a safe environment for women in the online dating scene. And there's some statistics behind all of this that, you know, might make your eyebrows rise. Was it 40%, were you saying, of people?
No, I don't remember the statistics.
It's 40% of people now meet through online apps, kind of thing.
But that doesn't necessarily have to do with the safety or not of using Bumble. I mean, she did successfully lobby for a fine in Texas for sending a picture of one's private parts unsolicited. You can incur a $500 fine.
Doesn't that just point to just the challenge of trying to crack down on something like this in a dating app, though? I mean, to her credit, she did design the app around a safe environment for women, but even that has not sort of prevented these photos from slipping through. So yes, you could argue she hasn't done enough, but I feel like that's creating an app.
And the proliferation of social communications with each other, you do lose privacy protection, and it's an issue.
Speaking of gender equality, according to Oxfam International's latest report on global wealth inequality, the financial wage gap between genders fuels a sexist economy. And what they say is not only that wealth inequality feeds gender inequality, it's that gender inequality has led to wealth inequality because effectively you have a lot of women doing work for which they are unpaid, work at home, etc.
Yeah, well, that's from a different, the roots in a different era where there were different roles between men and women, and it's changing, but it's glacial in terms of getting it completely done. There are now more women than men in the workforce, but there are pockets where women are underpaid, underused, or not paid at all, and it's wrong.
Yeah, glacial is a good word for it.
Yeah, more women than men in the workforce, but if you look at where the women are being employed, there's still a big gender divide, right? We've talked about this before: education, healthcare, predominantly some of these areas that women typically or traditionally have been employed in. So that seems to me to suggest that if you want to tackle the issue of inequality, it has to be more at a granular level than looking at just the broader numbers.
Yeah, we have miles to go.
Yes.
All right. A picture is worth 1,000 words. AI startup Clearview developed an app that allows law enforcement agencies in the U.S. to find your name, your address, and other personal details simply by snapping a photo of you. Anybody a little nervous about this one? Sounds like what they do in China.
Well, I was going to say that I think a lot of people are going to read, this article that came out in the New York Times and get a little nervous about how this is being collected. We've seen cities like San Francisco already crack down, but this is another one of those technologies that you look at how regulation is cracking down in the U.S. and naturally that just gives China a leg up because they haven't had that kind of regulation and they have been collecting. I mean, I don't even know what the amount or the massive amount of data they have been doing, but
yeah, well, on the one hand, it does enhance law enforcement to get the bad guys, but the good guys, the good people are vulnerable. It makes you want to wear a mask.
But on the other side, if you've uploaded a photo, for instance, to Facebook,
well, that's it.
They're learning all of this, and so they know all of your facial character. They still make mistakes, though, because they will badge my brother me, and me my brother, and we look alike, but we're not. I mean, we're different, so it's not perfect.
Akiko, thanks for being here. Jim, thanks for being
Pleasure.
here. It's good to see
Always
you.
a
Let's
pleasure.
take a last look at the markets before we leave you. We have seen stocks trade in a pretty narrow range today. Right now, the Nasdaq's in the green and the S&P is in the red, but each of them just barely. And the Dow is coming up off its lows of the session as well.
All right, we still have plenty of time in the trading session, and Wi-Fi PM is up next to take you through it.
It is 1 p.m. in New York City, and the Nasdaq is trading at new all-time highs as the Dow and the S&P 500 are getting dragged down today by energy stocks. On tap for today, President Trump speaks at the World Economic Forum in Davos, Switzerland, while he says the time for skepticism is over when it comes to America's strength. Plus, China confirming a new deadly virus capable of spreading from human to human, why scientists are comparing it to the deadly SARS outbreak nearly 2 decades ago, and what they are doing to slow its contagion. And housing trends in 2020, according to a new survey of the top 500 real estate agents, why a seller's market is largely expected to continue this year. We'll chat with the chief operating officer of broker giant HomeLight for more on what to expect from the housing market this year. All that and more. This is Wi-Fi PM. Good afternoon, everybody. I'm Zach Guzman, and join me on Wi-Fi PM today is Yahoo Finance's Heidi Chung, along with Payne Capital Management President Ryan Payne, back with us in studio. Nice hand waves, the both of you there.
I know, we're real excited today.
I
was like, I want to do one of those too.
Textbook hellos. We're checking the market action we're seeing right now. Bit of a mixed bag here with the Dow off about 25 points, the S&P in the red as well, and the NASDAQ able to buck that trend up just slightly, as we noted, hitting all-time highs earlier today. We'll see where we close at the end of the session. But first, health officials are grappling to manage the outbreak of a dangerous pneumonia-like virus from China, and it's top of mind for investors today. Overseas, the Shanghai Composite finished the session 1.4% lower. That's its biggest drop in over 2 months' time. And companies like Delta and Carnival Cruise Lines are trading lower today as well, amid growing concerns of a widespread outbreak of the virus. Guys, millions from China are getting ready to travel for the Lunar New Year, increasing contagion risks of this outbreak here. At least 6 people so far have died from the virus, but it does draw comparisons back to SARS about 20 years ago when we think about what could happen here and what fears are out there when you think of a virus that's capable of spreading from human to human.
First and foremost, I am planning a trip to Asia in a couple of weeks, and my layover is actually in the city of Wuhan.
That's
the
where it all
region,
started.
where this all started, and so there's a lot of concern there. So I was doing a lot of research over the past couple of weeks regarding this specific virus, and it looks as if the CDC still has it at a level 1 out of level 3 different levels. So for now, they're just, telling travelers to be cautious. The World Health Organization is actually planning an emergency meeting tomorrow, so I'm sure we're going to get a lot more clarity on that situation. But I think the reaction that we are seeing in the markets today, as well as a lot of those airline companies and the cruise lines, that is on just the initial news, right? The initial fact that this is starting to spread and we're actually seeing meaningful deaths. I think over 200 people are infected as of now.
Yeah.
But I don't know if this is going to be a long-standing way in which a reaction that we're going to see. I think it just depends on what happens in terms of the meeting tomorrow.
Yeah, I tend to agree with you on that one. They're already saying it's not as virulent as the SARS virus was, and China's being way more transparent this time because that was one of the big issues you had back in 2003. So I think that transparency and the fact that markets have, it's been more of a muted reaction, I'd agree with you on that, says that it probably isn't as big a worry as the SARS was back almost 20 years ago, which is crazy to think that's that long ago.
Yeah, Capital Economics was out with a report looking back at that same outbreak back in 2003 and how markets were impacted. It's interesting to note that most of the Chinese stock market was down by about 10% in the couple months after the SARS outbreak, but then did rebound to where it was before all of that happened. So in the short term, there was an impact, and certainly we're pointing that out today, the impact there. But over time, you're likely to see maybe a rebound if it's not as bad as what we saw back then. Of course, this is something differently entirely, so kind of have to monitor moving forward.
Yeah,
but that's generally what the data says.
Well, the million-dollar question is, are you going to travel?
I am still going to travel. I think until this hits a level 3 on the CDC's radar, I'm not going to be too worried because I don't want to react now and then have a situation where it's kind of the issue subsides and then they're like, oh, you could have traveled and I canceled all my travel plans and all of that. So for now, I was in Brazil during the Zika outbreak too, and I was fine from that. Well, I wasn't pregnant, but I was fine during that.
A lot of people cancel that trip too.
Yeah. And airlines were actually giving full refunds, and they never ever do that unless they have to. So we'll definitely see what happens, I think, in the coming week. I think this week will be crucial in terms of what happens out from the World Health Organization.
Yeah, for sure. But a lot of travelers watching this and concerned, a lot of people who are planning to travel there as well, much like you, continue to monitor. Yeah, hopefully it's not as bad as what we saw from SARS before, but we will continue to monitor that and bring you the updates we get. But meantime, the World Economic Forum in Davos, Switzerland is underway with President Trump taking the world stage. And during his address, he touted the strength of the American economy. Take a listen.
Today, I'm proud to declare that the United States is in the midst of an economic boom, the likes of which the world has never seen before. We've regained our stride, rediscovered our spirit, and reawakened the powerful machinery of American enterprise. America is thriving, America is flourishing, and yes, America is winning again like never before.
There you go. President Trump also called for more overseas investment in the U.S. That was a big piece of his speech. Let's play that as well.
25% of all foreign investment all over the world came into the United States, and that number is increasing rapidly. To every business looking for a place where they are free to invest, build, thrive, innovate, and succeed, there is no better place on earth than the United States.
A very spirited President Donald Trump there, Ryan. What's your take from all that?
Well, that's a man that sold a lot of real estate, right? So he knows the promotional value. Look, I mean, bottom line is yes, the U.S. economy has done much better on a relative basis to the rest of the world, and a lot of money has already come here. So I'd argue it's probably not a bad time to see money actually flow around the world. President Trump probably wouldn't agree with that. But I guess if there's any time right now to promote or to emphasize how well the U.S. economy is doing, I mean, reality of it is it has done that well versus the rest of the globe at this moment.
I think that's fair, but we're also hearing mixed messages. Okay, the U.S. economy looks like it's on pretty solid footing at the moment, but there are a lot of concerns out there about global growth, right? And we had PwC's U.S. chairman Tim Ryan speak to our very own Yahoo Finance at the World Economic Forum, saying, well, we just had a new survey that shows that CEO optimism is at a record low. We saw a record decline when it comes to optimism surrounding global growth. Uncertainty seems to be a key player in that, but I do want to mention that this survey was taken in October, November, before we got that phase one trade deal, before we got the final or the USMCA. So all of those taken into consideration might have yielded a different result in the survey. But that being said, optimism is still not at where it should be, though CEOs here in the US are confident about boosting revenues for their respective companies.
Yeah, it's a little skewed too, because remember, CEOs are looking at the globe, and we know that the rest of the world decelerated in growth last year. Whereas the U.S. economy, if your business was just in the U.S., you would have been more insulated about that view. And they were kind of negative last year if you looked at CEOs, and they were dead wrong. I mean, if you look at the way the U.S. did. So I never trust their view completely, because it is a little skewed about what's happening around the globe as opposed to just the U.S.
A big picture, not just President Trump's word, not just CEO's word. We need a real big picture.
Let's take another look at the picture on the ground there in Davos, though, because it's not just CEOs that go to Davos, but it also is a gathering of some of the world's richest people there, as well as some other people that get to go among other ranks. A new study is taking a more critical view, though, at the global wealth gap. According to the latest research from Oxfam, there are over 2,000 billionaires in the world that have more wealth between them than the poorest 4.6 billion combined. The study adding that 1% of the world's richest have more than twice as much wealth as 6.9 billion people, while the wealth of the 22 world's richest men equals the wealth of all women in Africa, which is astounding considering the size of that continent, guys. I mean, wealth inequality has been in focus for a while now, but those stats are just kind of painting how big of a problem it's gotten.
I don't know if it's surprising more than disappointing, because I think the fact that wealth gap exists and it's really bad is not something that a lot of people don't know about. But I think what we plan to do about it is more crucial right now, here in the near term and in the long term. A lot of people call on, the government to put in different, legislation to make sure that, the wealth gap isn't so severe. But I think at the same time, a lot of people are now calling for CEOs to actually set an example, right? Just last week, we heard Abigail Disney call out Bob Iger. Despite all his success, she's still, very vocal about the fact that the average trash person at Disneyland is making so much less than his $66 million a year. So I think that's something that a lot of corporations need to take decisive action on first.
Yeah, I agree with you, but even mentioning Abigail, for instance, I mean, she still benefits from the fact the stock has had this magnificent run, so it's kind of like it gets a little murky, too, when you start to look at, she's sitting on her soapbox, but again, her wealth is created because how well Disney stock has actually done. So I think it's a lot trickier. And I mean, when you have all these billionaires gathered at Davos to make decisions, it almost makes it a little bit worse, doesn't it?
Yeah, it does.
I almost wish there was like a philanthropic arm, and maybe there are, but something like that at Davos where you have like a ticker of all the donations. We know we have the giving pledge from all of these wealthy billionaires, Warren Buffett included, Bill Gates included, who want to donate their wealth before they pass. It'd be nice to see like a counting clock of all the money that's been donated at Davos if you have all that wealth concentrated in one area. Not a crazy thing to think about. But while we're talking about all those wealthy people putting plans together, of course, climate change has been top of mind, and activist Greta Thunberg also is making waves in Davos, with the 17-year-old urging world leaders to act on the current climate crisis. Take a look.
Our house is still on fire. Your inaction is fueling the flames by the hour. And we are telling you to act as if you loved your children above all else.
So there you go. I mean, I'd flag this. She also called out the media that was in Davos, saying that you don't like to cover this. I know you don't like to report on this, but I'm going to keep talking about it until you do. When in actuality, she was Time's Person of the Year. So clearly she is getting some coverage about all this, and we're talking about it right now. But when it comes to climate change, her main point being companies and people are not doing enough when the house is still on fire.
right? But I think they're doing more than they were, right? So at the end of the day, she's right. Instead of lowering emissions, we need to make sure emissions are at zero, and we need to make even more decisive action than we are at this point. But I would say overall, let's talk about Beyond Meat. Right? We talk about Beyond Meat all the time, and while it's fun to just talk about the stock moves or the different partnerships that it makes, at the end of the day, while it might not be that healthy for consumers, it is more sustainable, it is better for the environment. So I'm glad to see groups of companies really rally behind this movement. And whether you believe in Beyond Meat or you don't, I think what they're trying to do and what they're setting out to accomplish is commendable at the end of the day.
Yeah, I have to agree with that, and you're starting to see that at the corporate level, and I thought maybe a couple years ago, you wouldn't have thought that. Like, one of my best friends is high up at JP Morgan. He's in the management there, and they have gotten rid of all plastic at the office right up here in Midtown. Basically, if you go there, you go in, you have your own bottle to fill up with water. They have access to all those things. So I think those little subtle changes that are happening at the corporate level can have a big impact long term, and you're definitely starting to see that, which you wouldn't have seen that even like a year or two ago.
Yeah.
No, I agree.
Yeah, it's incredible.
Even bigger tech giants. You got Microsoft coming out saying they want to be carbon negative. You got so many companies that are carbon neutral now. Microsoft saying they want to be carbon negative. So I mean, we are shifting in that direction, which is kind of crazy to think about a company that produces so many hardware products actually becoming carbon negative by trying to offset all that in the other direction. But I mean, yeah, to Heidi's point, I think that there is more attention being given here, and to Greta Thunberg's credit, a lot of it has to do with how loud she's been on the issue. But stay tuned for more Davos live coverage right here on Yahoo Finance. We'll hear from Verizon CEO Hans Vestberg at 1:30 p.m. Eastern Time, coming up later in the show. But after the break, there's a new highest price target on the street for Tesla, and it has shares popping back up to near all-time highs. More details on that right after the break. Welcome back. One firm on Wall Street is predicting that Tesla's stock has even more room to run, despite being so close to all-time highs, just about $5 off that number right now. New Street Research hiked its price target on Tesla to $800 a share. That's a big jump from its previous $530 target. The analyst cited strong demand for Tesla cars and execution strategy as some of the reasons for the move, and it comes as a separate call from AllianceBernstein's expressed skepticism about the automaker's recent run-up. The analyst held his market perform rating and $325 stock price target for Tesla there, guys. But when we look at that $800 price target, I mean,
it's insane.
Is it insane? Because this is clearly a momentum stock right here. Tesla has the momentum behind it. It's chugging along here, near all-time highs. Granted, $800 seems pretty high, but I mean, right now Tesla is winning the bull-bear battle.
Well, I think it's put in context, right? In the summertime, it was under $200 a share sometime in June.
Yep.
You had all of Wall Street. They all like to make decisions at the same time, all shorting the stock. It's like number 2 shorted stock in the market. I think
And it was number 1 last week. I mean, it was up there.
Yeah, now it's number 2 because I think but Apple's a bigger company, but as a percentage of actual shares outstanding, I think it's number 1. So you had everyone making the same trade at the same time, and profits were a surprise in September, which has just melted this stock up. So now is it really the time to buy that stock?
Well, according to this analyst, it sure is. I have to say, I think the fact that this stock has been on a massive run, up more than 100% over the past 3 months, we're seeing a lot of Wall Street analysts try to play catch up here, right? And this is hardly the highest price target amongst, bulls, because though ARK Investments' Cathie Wood is not technically a Wall Street analyst right now, she has a $6,000 price target on this. So if you want to go to bulled up, she is the most bulled up you can be on this company. But Tesla has been very divisive, right? We've seen a lot of bears on one side, we've seen a lot of bulls on one side, and Wall Street analysts are largely reactive. So we're starting to see a bunch of these price target raises. We saw Oppenheimer with that big 612 price target last week.
Yep.
And so, yeah, sure, I think what the move here, though, is for these analysts is to say, hey, I call that $800 price target. Remember when I was bullish at the right time? And so I think it's a lot of that right now, to be honest.
What's interesting, too, though, I mean, is his model is kind of predicting that beyond 2025, Tesla would sell about 2 to 3 million premium cars a year. It would also put itself in line with sales numbers on the likes of BMW. So, I mean, he's seeing this grow into a major automaker, not just an EV play, but as the EV space gets bigger and bigger, Tesla becoming one of the nation's largest automakers. And if you do believe in the long-term thesis, it's not crazy to see an $800 price target just by expanding what we're seeing now. But I don't know about the short term, because as we've seen, you can go from 200 back to up and down.
Yeah.
Well, I mean, I agree with you in the sense that, I think it's a great company. At the end of the day, it's awesome technology. I mean, let's face it, the Chevy Bolt sucks. I said it.
Yeah.
Wait, the designer of the car.
It looks terrible. I mean, the technology is great, and I think they'll be around. But like to your point, I mean, how many drawdowns do you have to ride out between now and then? I mean, it's like, you could have bought tech stocks at the top in 2000, and it would have taken you like over 15 years plus to break even again. But I think, this is just not the time to buy again, even though I think the company's great long term, just because the technology is so good.
We even saw, sales numbers, I should say, for those competing EV cars declined across some of these models as well. So, I mean, that's another thing here.
Because they're not
when
cool.
You mentioned the Bolt,
they're not cool.
Point, it's because Teslas have the better technology. They have that brand name appeal to it. A lot of young people want to get in on it. The design is nice. But yeah, it's all about appearances at this point, but we all care about climate change and what do EV cars provide.
Yeah, we care. Apparently, we also
as long
care.
as it's cool,
exactly.
It all comes together.
Can't be caught driving a Leaf either, though. While we're talking about Tesla, their expansion plans in Germany are hotly being investigated right now, trying to repeat the success that they saw in China. A German newspaper reports Tesla signed a purchase contract and is gearing up to build its Gigafactory 4 on the outskirts of Berlin. But concerns about the environmental impact have triggered some protests about the site as some species of bats might get pushed out. There's a lot of deforestation in this spot, too. So very interesting to see.
There's a little irony here, right? I mean, this is the country that had been cheating on their emissions tests, are now complaining about building a car that has a much better impact on the environment. I feel like you got to give them some leeway here, especially given the bad track record that companies like Volkswagen have.
The underlying issue might be, well, Germany is an auto powerhouse, right? And they have been the standard essentially for luxury vehicles. To have Tesla come into their territory and sort of, create all these jobs and these electric vehicles that are really, really popular, do you think they're a little offended by that? Do you think that could be an issue here?
100%. I didn't even think about that, of course.
I think that's the
great
biggest issue here.
Yeah.
Yeah, I mean, they're definitely going in their backyard, but, Germany is known to have such a strong manufacturing base. But it is interesting when you talk about the environmental concerns, particularly in that region, because those are felt so acutely. But on the other side, the benefit of having more EV cars on the road those impact all of the globe when we talk about climate change as well. So it's kind of a pro-con. Unfortunately, just the cons are felt more acutely in that neighborhood. But interesting because Tesla has a timeline of July 2021 in terms of getting Gigafactory 4 up and running, which is tight when you think about all the hurdles on the environmental front that they're going to have to get cleared.
And regulation, yeah. But hey, they got the Shanghai one up and running really quickly, so I don't think we should doubt them in terms of this one.
And if that happens, look out. Maybe we do hit an $800 price target there. So we'll see.
Then I'll look foolish in retrospect.
We'll play the clip
like
back.
every Wall Street analyst.
Yeah, absolutely.
In the same camp.
But you'll probably be right the next week when the shares come down again. It's just how Tesla goes. Just after the break, though, the Senate kicking off impeachment proceedings. Why Senator Elizabeth Warren wants to take things a step further with a special Justice Department task force. Plus, how former New York City Mayor Mike Bloomberg is boosting political ad costs for everyone else in the field when Wi-Fi PM returns. Welcome back to Wi-Fi PM. We are checking the mixed market action we're seeing right now. And right now, not so mixed anymore with the NASDAQ dipping back into the red. You can see that off by about 0.2%, keeping pace with the losses across the board. We'll see where things go throughout our hour. But for now, Senator Elizabeth Warren is vowing to create a federal task force to investigate the Trump administration if she's elected president. The 2020 hopeful said President Trump has, quote, done serious damage to our government, and tweeted earlier today, saying, I will also direct the Justice Department to establish an independent task force to investigate violations of specific anti-corruption and public integrity laws during the Trump administration with independent authority to pursue any substantiated violations. Guys, former Vice President Joe Biden previously said he would let the DOJ decide whether to investigate Trump if he's elected. Interesting to see Senator Warren taking a different track here and saying, I'll be the one to pursue this.
I think it's smart for her to run on that, to say, hey, I'm going to be really, really firm when it comes to this specific issue, because people, frankly, just don't trust the government anymore. Their trust is low. And so I think it's better than to seesaw, at least when you're trying to campaign and you're at least trying to win over voters. To take a very muted stance is, I don't think, very beneficial for Biden.
Does that worry you, though? I mean, it does kind of, it rings a bit to the likings of a third world democracy where we see one leader come to power and throw the other guy in jail because of fears that he might take him back over. I mean, we're seeing that play out. It sounds like Venezuela almost.
Wow.
Maybe, but I mean, we have these theatrics that just go on and on, right? The impeachment right now, and you know, it's just whatever the next thing that they're going to find Trump guilty of. I don't know. I think it's just par for the course, and I think it's part of the mistrust, but it just plays into the mistrust. It's almost like not a big deal. I mean, I feel like we're almost numb to it if I had to really put my finger on it.
Well, I think we're pretty numb to it because it's been playing out for so long in the public forum, and it's going to be playing out a little bit more in the public forum as the Senate impeachment trial proceedings against President Trump are now underway in Washington, D.C., and we're going to be seeing that play out here. Not entirely sure how that's going to go based off of what we heard from House Speaker Nancy Pelosi and Senator Leader Mitch McConnell and the way that they have been laying out the trial. Doesn't sound like Democrats are too pleased with the way things are shaping up in the Senate. So not entirely sure what specifics we're going to get out of this.
Right. I think it's interesting because this is very serious, right? We talk about the impeachment. It's really been taking everyone's attention when it comes to Washington. But here, I think when we look at the markets and the fact that the markets just don't react and don't care, investors aren't worried about this at all. But a lot of the veteran strategists that we've had on our programming have been saying time and time again, the status quo in Washington needs to be maintained in order for markets to sustain this run-up that we've seen, these record highs. And the status quo would mean President Trump gets reelected, we have the House run by the Democrats and the Senate run by the Republicans. And so it'll be interesting to see the market reaction come 6 months from now when things start to really heat up in the presidential election, and it'll be a big deal, I think.
Well, no, it's a really good point, because if you look at statistically, when there's more gridlock in Capitol Hill, that's actually the best for the markets.
Right.
And if it looks like right now, we have the incumbent, most likely Trump will be reelected. I think that's where the polls are right now. And it also looks like Republicans will keep Congress, Democrats will keep Congress, Republicans will keep the Senate. And if that's the case, then it should be the status quo, which would be very good for the markets.
Right. Yeah, and we've seen that play out. Nonetheless, a very important thing to keep watch, though. The fact that President Trump is in Davos, Switzerland right now as this is getting underway does kind of indicate how worried he might be about it.
Very
on the flip side, though, on the Democratic side, the presidential hopeful Mike Bloomberg is putting his money where his mouth is. The billionaire has reportedly spent over $248 million on advertising a mere 8 weeks into his 2020 run. Politico is reporting that is lowering supply for ad inventory, causing the national average price on political TV ads to spike 20%. But guys, Bloomberg spent $22 million on TV ads alone just this last week, and the number he's spending is astronomical when you think about how short he's been in the race compared to how much money he spent.
It's good to have $60 billion. What can I tell you?
I know. I mean, it's unfortunate, but he has a lot of money. So if you have the money, why not use it? And unfortunately, if that squeezes supply, what can you do?
You raise your prices, I guess,
Exactly.
if you're a local TV outlet. But when you're looking at it, I mean, it's not all bad for Democrats, because a lot of the messages in his ads are contributing to what the DNC is pushing overall, that Trump is corrupt. We need to focus on healthcare, we need to focus on climate change.
Yes.
All of the messages he's pushing is in line with the other Democratic challengers. So I'm not entirely sure if ads go up, if that's necessarily a bad thing for whoever wins, even if it is or is not Mike Bloomberg.
Well, it'll be interesting to see, right? What's the return on investment? I think it'll be at like $300 billion by March. And this will be a great test case of the more money you throw at it actually is great for your success, or it means nothing in the scheme of things.
But he's playing the long game here, too, so you can't even track what that return might be, because he's not really trying to even win the early primaries, right?
No, I think that's fair. But, positive for the entire, DNC. But is it a positive for, let's say, Warren or Biden or Sanders, who need to really solidify their position in this race? Mm-hmm. I don't necessarily think that's the case either. So it's a little bit of both.
Yeah, I'm not entirely sure how you track all that, but it's just a shock. It's just a lot of money that he's been spending. So there's that to keep in mind. But shifting gears, CNN is reporting the Centers for Disease Control and Prevention is slated to announce a first U.S. case of that deadly China virus we've been talking about. Let's check in with Ines Ferre on the floor of the New York Stock Exchange for more. Ines?
Yeah, Zach, and with CNN reporting that the CDC is expected to announce this today at a media briefing today, and that case reportedly in Washington state. Now, of course, this coronavirus has been something that has affected the markets, the Asian markets today, and also some of the travel stocks have been lower today, as well as some of the casino stocks, for fear that this would affect tourism in China. Meanwhile, we're also looking at Costco today. Costco up more than 2%. One of the better performers of the S&P 500 today, after being upgraded at Oppenheimer to outperform, with Oppenheimer analysts selecting it as its top pick with a price target of $335, highlighting its attractive valuation and also top line trends that come in above its peers. And then I just want to mention Intel. Intel is the best performer on the Dow today, up around 2%, actually reaching a 52-week high. This is after Jefferies upgraded the stock to a hold with a price target of $64, and Intel will be reporting earnings on Thursday after the close, Zach.
All right, Ines Ferre on the floor of the New York Stock Exchange. Thanks for that update. We'll check back in with you later on in the show. But next on Wi-Fi PM, more Yahoo Finance coverage from the World Economic Forum in Davos, Switzerland. We'll catch up on all things Verizon with CEO Hans Vestberg. More Wi-Fi PM right after this. Good afternoon and welcome to Wi-Fi PM. I'm Zach Guzman, and joining me today is Yahoo Finance's Heidi Chung, along with Payne Capital Management President Ryan Payne, back with us in studio as the markets are dipping right now. We're seeing shares across the board here in the red. The Dow off about 72 points, the S&P and the NASDAQ joining in on that, down by about the same margin right now. We'll see where things go in Act 2 of Wi-Fi PM. Well, business leaders from around the world are meeting in Davos, Switzerland for this year's World Economic Forum. And Yahoo Finance's Alexis Christoforous sat down with Verizon CEO Hans Vestberg and got his take on the future of 5G technology. Take a listen.
I'm joined now by Hans Vestberg, CEO of Verizon, the parent company of Yahoo Finance. Great to see you here, Hans.
Great to be here.
So you continue to make progress with 5G and mobile edge computing. You have this exciting partnership now with Amazon's AWS. Tell us how their cloud computing is going to help your efforts with 5G.
I think that this has been in the works for quite a long time, and we announced it in the late part of 2019. And what it all means is that we actually, with the 5G sort of competences that we have with low latency and all of that at the edge, we're also bringing the cloud software from Amazon. And there, the developers can just start developing straight into the 5G mobile edge compute. That's what we bring into the market. And of course, what is different from any other cloud services is you can get the 5G into it with the low latencies, enormous throughput wirelessly. And that's the big difference. And we have launched one hub right now in Chicago, and we will continue doing that so all the developers get the chance to get the 5G mobile edge compute close to them so they can get the latency and the throughput that is needed for new 5G applications that they're going to develop on sort of the infrastructure that we're building together with Amazon.
So it's in the pilot stage right now. When do you foresee it perhaps going nationwide? When can we as customers begin to use it?
It's not the pilot, it's actually a commercial hub. But it's the first data center of a 5G mobile edge compute. Of course, we're going to build more over time. So our customers, consumers, and the ones who want to develop new services can develop services for enterprises, for society, or for consumers, because it's basically 5G is for everyone.
You know, one of the challenges with 5G is trying to get it indoors. I know, there are issues with trying to get it in a hotel, in an airport, in a stadium. What are you doing to help sort of bridge that gap?
So in a stadium, it's not that difficult. I mean, it's like we have done on 4G. You need an antenna system inside a stadium in order to get that covered. We have already 17 NFL stadiums that actually have 5G inside. We have a couple of arenas where they play hockey and basketball as well. So for us, that's fine. It's more about when it comes to the home. But there we have the home solution, 5G Home, where you take the signal from outside and you convert it inside. Nowadays, you convert it to Wi-Fi inside because many of the devices inside is actually Wi-Fi. But over time, it might be 5G enabled devices. But that's the 5G Home that we launched already 2018, where we, instead of doing fiber to the home, we do 5G to the home.
You talk about stadiums. We've got the big game, the Super Bowl, coming up in just a couple of weeks.
2 weeks from now, or less than 2 weeks.
That's right. So
times.
Verizon has now outfitted the Miami Stadium there with 5G, the first one ever. What can fans experience now with 5G in that stadium that they couldn't before?
Yeah, so what we have enabled 17 stadiums in the US NFL stadiums is with 5G millimeter wave. We call it 5G ultra wideband. That's a super high throughput, up to 2 gigabits per second in the phone. Today you would have on 4G megabits per second, not gigabits. So it's an enormous difference. So what you can sort of experience then is, if you have a 5G phone in the stadium, is of course that you have enormous throughput uplink and downlink. You can get a new experience. And then of course we're going to have a lot of showcases on 5G at the same time at the stadium and around the stadium.
It's still in its infancy, of course, but when do you expect 5G to have a material impact on revenue for Verizon?
What we have said on the mobility case, 2021 and 5G Home 2021, that's when you will start to see some of the impacts. For the 5G mobile edge compute, it's 2022 when you will start to see some impacts, because we're a big company, so it takes some time, and we need to remember the 4G era, how long it took when 4G took off compared to 3G. The same here, So, but you need to be early on to build the technology, to build the right experience for your customers.
Away from 5G for a moment, you recently unbundled home TV and internet. You now are giving customers more choice with this mix and match program. Tell me why the unbundling, and why now?
We want to give our customers choices. We want to give them a choice what is right for them. And I think that the mix and match that we're doing on our cable offering right now is one way of doing it. Our customers, we want them to see how many channels are you using, what bundle is right for you. Ultimately, choices are important. We see over the top coming in, and any content producer in the world right now is doing linear, but they're doing over the top as well. So I think that everybody see where the trend is going. We play as a network as service. We don't have that type of content. So we want to give optionality for our customers. So the mix and match is unique, I would say, in the world where you can start doing it. And that's how we want to be seen.
All right, there you go. Stay tuned for more live coverage at the World Economic Forum in Davos, Switzerland, right here on Yahoo Finance all week long. Coming up, a survey of the top 500 U.S. real estate agents revealing what to expect from the housing market in 2020. We're chatting that with the COO of broker giant HomeLight when Wi-Fi PM returns. Welcome back to Wi-Fi PM. Recession concerns aren't top of mind for real estate agents, at least just yet. Only 12% of agents are worried about an economic downturn this year, compared to 36% of respondents predicting it could happen in 2021. This is according to a new survey from online real estate platform HomeLight. And joining us to discuss is HomeLight's Chief Operating Officer, Sumant Sridharan. And Sumant, digging into the numbers here, it's interesting because 48% of brokers characterize the housing market right now as a seller's market, and that's certainly been the trend leading up to this moment in time. So do you think that that trend continues here in 2020?
Yeah, agents are surprisingly optimistic about 2020, at least versus, I think, the general punditry out there. And, we really take a lot of stock into what these agents say. These are the top, 500 agents in the U.S. based on HomeLight data. And these folks are on the ground working with clients every day. And, over 75% of those agents do not believe we will have a recession in 2020.
Yeah, what's interesting, too, is that 89% of agents surveyed believe the market inventory will either stay level or rise, which is interesting considering the fact that we've seen so much new inventory come on here, and the fact that supposedly existing homes are tough to get, at least in some parts of the market. So what are you seeing in regards to that in terms of demand and what that might mean for inventory moving forward?
Yeah, so the common theme that we're seeing when we talk to agents is this recurring notion of slow and steady growth in 2020. So you've noted there's been some, kind of major trends we're seeing around price flattening. Mortgage rates are staying low. Unemployment is at historically low levels, and I think the combination of that is giving agents and others a lot of belief that we'll see the slow and steady growth throughout 2020.
Hey, Suman, it's Heidi here. So a quick question. Agents are optimistic about the housing market here, but I want to talk to you a little bit about technology and the rise of technology in this space. Of course, we've seen technology disrupt a lot of different industries, but how is that really playing a role in the housing market and housing industry?
Sure, that's a great question, Heidi. So we're a real estate technology company based in San Francisco. Certainly, we believe that the role technology will play over the next 5 years will impact the way we transact real estate in a manner that we haven't seen for the last 100 years. So we're excited about that role. We think it's going to be good for consumers. The biggest way you're seeing it manifest itself, there's a couple of big trends, right? There's the iBuying trend in certain cities like Phoenix and Las Vegas and Atlanta. You're seeing iBuyers gain 5-6% share of the market. You're seeing people start to view homes as an asset class, much the way that they would view stocks. So companies like Airbnb have allowed consumers to make money and make income off of home ownership in ways they haven't been able to do so in the past.
Yeah.
So yeah, we definitely believe there's a lot of ways that technology is going to impact the way we transact real estate now and in the next few years.
Hi, Sumant. This is Ryan Payne from Payne Capital. One question I have is it regionalized? Like, for instance, say the market I'm from Philadelphia, for instance. Is that different than the market in, say, New York, which had one of the slowest price increases last year that it's had in a long time?
Yeah, I think for sure, right? In the larger cities, you're seeing prices flatten. There's limited inventory. Certainly, in my hometown of San Francisco, there's one of the big topics of conversation is are these supply constraints within the city, which is really forcing people to get creative about how to live outside the city. What we are seeing though is in smaller cities like Phoenix and Austin and Portland, we are seeing still a lot of price growth, and that's due to new companies and really migration into those cities.
Yeah.
That is pushing prices up.
Well, Suman, let me push back a little bit on the idea of the seller's market continuing here, because we did see Q3 and Q4 that equation even out a little bit, shifting over from a seller's market more in even equilibrium, shall we say, between sellers and buyers. But moving forward too, obviously 2019, we got 3 interest rate cuts, mortgage rates, as you pointed out at the top of the interview, at pretty much historic lows. When you're looking at that, though, moving forward, the Fed largely expected to keep things steady here. And who knows? Really, who knows what happens with the Fed? What might happen if we see the reverse? What if we start to see mortgage rates tick higher? And what might that do to the housing market if people might have been bracing for maybe even lower, got caught in that trend of lower and lower interest rates?
It's a great point. So I think first of all, most people don't think with the current administration those rates are going to go higher. But if they do, you're certainly correct. Mortgage rates are probably the biggest determinant of a variable that could impact the housing market over the next year. That being said, what we're also hearing from real estate agents is that 70% of sellers typically have made the selling decision regardless of the market. For example, they need to sell because they're moving out of town, or they're retiring or moving to a retirement home. So there are many times structural reasons for why someone might sell their home that go beyond trying to just maximize their home value.
All right, very interesting stuff. Sumant Sridharan, COO at HomeLight. Thank you so much for joining us. Appreciate you taking the time. Before we go to break, I want to take a look at the Dow leaders so far today, and we're going to show you those. You can see Intel, Visa, Home Depot, IBM, and our parent company Verizon. Heard from them today, all in the green right now. And on the flip side, we are highlighting the Dow laggards today, as well as the Dow remains in the red. Chevron, Merck, Dow Inc., Boeing, and Exxon, the biggest laggards on this fine Tuesday. Well, after the break, me off a piece of that Kit Kat bar. See what I did there, Heidi? Kit Kat is expanding beyond its traditional flavors with all new ones that we are sampling next. Plus, Beyond Meat is skyrocketing as Starbucks vows to combat climate change in its own way. Wi-Fi PM is back in 2. Welcome back to Wi-Fi PM. We are checking the market action, and stocks continue to sell off here in the afternoon. The Dow off nearly 100 points, the S&P and the NASDAQ in the red as well, as we continue to watch an update from the CDC announcing a new case, according to Reuters, of a person diagnosed in Seattle with the Wuhan coronavirus, according to a U.S. CDC spokesperson. We'll continue to monitor that one, but stocks continue to sell off in the afternoon. Well, Starbucks is doubling down on combating climate change. In a company-wide letter, CEO Kevin Johnson outlined a multi-decade aspirational plan for the coffee chain, which includes a more environmentally friendly menu and reusable packaging. Heidi, it would come after Starbucks introduced special lids to replace straws last year, so really doubling down on the initiative.
Yeah, I think we do have to give Starbucks some props when it comes to really taking action to make sure that they are rethinking their strategy and rethinking their business in order to make sure that they're adapting with the changing times, right? That being said, the reports that came out saying that Starbucks, is looking at plant-based options, that giving Beyond Meat such a big boost, I think, is kind of, overblown at this point, because there's no indication that Beyond Meat has been in talks with Starbucks. But of course, as we always talk about on the show, these partnerships are meaningful to some degree, especially when it's a company as large as Starbucks or McDonald's.
Yeah.
That being said, I guess we'll see if they have breakfast sandwiches made with Beyond Meat, kind of like Dunkin' does right now. But Starbucks takes a long time to roll these kinds of initiatives out, right? Even the changing of the lids and getting rid of the straws, that was a long process. Right now, they're testing out different oat milks in the Midwest. So a lot of these things, they do extensive testing and they're making sure that it's something that fits in with their business and they're not losing money. If anything, they are making sure it's not squeezing their margins.
Yeah.
So a lot of these things, it takes time.
But Ryan, I mean, when we're talking about, we were talking about Tesla early in the show in terms of perhaps outsized moves. I mean, Beyond Meat it was up 16% earlier before we came on the air. I mean, is that unnecessary when you think about the fact that Starbucks did not name Beyond Meat, as Heidi says, specifically in this report, just saying that they're thinking about it? I mean, and you got Beyond Meat shares up now 13.5%.
And this stock's so volatile. I feel like I've never been on the show and we don't talk about Beyond Meat. I don't know how somehow it always seems to hog the spotlight. It's just too hard to tell because I think there's the environmental side of Beyond Meat, then there's the fad side of it, and I also think the health benefits aren't great. So I don't know how it can be that highly correlated. I mean, the stock just trades insanely, in terms of volatility. So I wouldn't be buying that stock here. I'll say that much.
Yeah, it's perhaps one of those buy the rumor, sell the news kind of vibes around Beyond Meat every time we hear a major QSR thinking about partnering up. But you're right. I mean, since Dunkin' has shown that their plant-based meat breakfast sandwich, their sausage sandwich, has worked so well.
Yeah.
Maybe that's what people are thinking here, is that it's going to continue for Starbucks and that Beyond Meat would be their person to go to. But we know there are so many out there, a lot of options, so maybe a little bit outsized. All right, well, when life gives you lemons, make a new Kit Kat. Apparently, the Hershey Company is trading in holiday flavors of pumpkin and peppermint and launching its new Lemon Crisp flavor in anticipation of warmer spring days. The fruity flavor is rolling out in stores nationwide, giving American Kit Kat fans the chance to try some of the more adventurous flavors that had been offered overseas, including the ones we have here, of course, the Lemon Crisp.
I mean, you just said it, Zach.
What?
They have amazing flavors overseas, and the U.S. is just so slow to jump on the bandwagon with a lot of the fun
flavors.
flavors.
We've got the Lemon Crisp now.
And one of our colleagues brought back a peach-flavored one that we tried, which actually wasn't that great. But I think I have a good feeling about this one.
The Lemon
really?
I do. Moment of truth.
I'm a chocolate lover personally.
Does it remind you of like a lemon meringue pie? Mm-hmm. It's good.
Or lemon cake. This is really good.
Yeah, lemon cake.
Mm-hmm.
I'll admit, I was skeptical, and it's actually pretty good.
This is amazing. I'm gonna eat a whole bag in one sitting.
That's actually great for your health, I hear.
Yeah. I'm all about the health because I cover fast food and eat fast food daily.
A bag a day apparently is supposed to
keep the doctor away.
years to your life expectancy.
I'm trying to think of what this tastes like, but it kind of tastes like a peanut butter wafer, kind of vanilla wafer vibe. I'm getting strong vanilla wafer vibes. Well, there's clearly wafer in there.
Right, but you get there's
a little bit
cream
more vanilla
filling
than lemon.
And I don't know. This is really good.
Is in there as well. No, that was a joke.
Beyond Meat, a little ground up Beyond Meat. You can still say.
That's why the stock's up 13% today.
Because it's in the Kit Kat. Yeah. No, it's not in the Kit Kat. We should be clear.
Wait, 1 out of 5 because that's the standard right there.
This one actually might be my first 5.
I think this is a 5, guys.
I'll give it 4.5 because I don't know. I don't have anything to compare it to.
Yes, no perfect scores allowed here on Wi-Fi PM either.
That's
I
right.
like the trend. Ryan Payne, thank you so much for being here for the full hour.
Thanks for having me.
Heidi Chung, thank you as always. We'll head down to the New York Stock Exchange for more news today, though, as Reuters reports the CDC is confirming the first U.S. case of that deadly China virus. Let's check in with Ines Ferre on the floor of the New York Stock Exchange. Ines?
Zach, I'm here with Tim Anderson. And Tim, we're taking a breather today, but also we just had this headline with respect to the CDC confirming its first case of the coronavirus in the U.S. So what does this mean for the markets?
Well, clearly the markets are going to be a little jittery over this. Now, in the past, investors have dealt with this before. We had the SARS virus in 2002, 2003, the bird virus and the bird flu, more appropriately, the decade before that. And clearly this adds a large issue of uncertainty into the market as to how widespread is this going to be, how involved is this going to be, what's it going to take in terms of a timeline to eradicate the risk.
Some of the
tremendous amount of unknowns.
And some of the casino stocks are under pressure. Also, some of the airline stocks are on the session lows.
Anything that involves travel and tourism to or from any that area, China, Southeast Asia, and any other parts where maybe the virus has shown up, is going to take a hit.
And speaking of travel, let's talk for a second about this headline regarding Boeing, with a report that Boeing is expecting the regulators to clear the MAX jet no sooner than June or perhaps July, according to CNBC. This has brought down the stock down below its support level. So what are you expecting there?
Well, I think we really need to watch how the stock reacts over the next hour. I think this story just came out literally in the last 5 or 10 minutes. Clearly, it caused some selling below what had been the support level for the stock of 320. It's possible that selling could just get absorbed by the market and the stock could recover a little bit. It's not a worst case scenario headline, but certainly it's a delay in the timeline to getting the 737 MAX back online. And it's not.
And for the airlines, I mean, most of the airlines had already pushed out the line up to June.
Right. So maybe this means it wouldn't be back online until the fall. I think we need a lot more information on this story before we really get a firm grasp of it.
Going into the rest of this week, into next week, what are you looking at?
Look, I think what's really important for investors to realize is that we are 2 full weeks into a new year and a new decade. And we've had 2 weeks in a row where the Dow, the S&P 500, and the NASDAQ Composite have all posted all-time weekly closing highs. Now, clearly we're down a little bit today. It's the first day of a 4-day week. But market technicians and even market strategists are going to, when they look at weekly charts that span 3 to 5 years, and they see these major indices closing at weekly all-time highs, that is a very powerful signal of intermediate to longer-term momentum for the market.
All right, thanks so much, Tim Anderson. Zach?
Well said. Coming up, the C-suite is growing more pessimistic about the global economy. An expert weighs in after President Trump takes the world stage in Davos. The ticker all over it starts in 2.
Good afternoon and welcome to the ticker on Yahoo Finance. I'm Shonda Smith. We are seeing the Dow, the S&P, and the NASDAQ move to the downside today. The Dow extending some of its earlier losses. Now the move to the downside coming on the heels of 2 reports out in just the last hour. We had the CDC announcing its first case of the coronavirus here in the U.S. And then also the report on Boeing. You can see Boeing is one of the biggest decliners in the Dow today, is the biggest decliner in the Dow, off more than 3%. And this move to the downside coming after Boeing said that it does not expect regulators to sign off on the 737 MAX until June or July. So this is further delaying what Boeing had initially said. Again, that's a big reason why Boeing's stock is down today. But joining us now for more on today's market action, we have Kim Kataikis. He's head of investment strategy at Martin Currie. And Kim, thanks for joining me today. We're seeing the losses in the Dow, the S&P, and the NASDAQ well off our record highs that we had last week. Why do you think the market is reacting so severely, or I guess off over 100 points in regards to that CDC report and then also the Boeing news today?
Hi, Shauna. Thanks for having me. I think, first of all, we've got to accept that the market is probably finding a little bit more reality. What I mean by that is that in the run-up to last week, when we were getting the signing of the Phase 1 deal between the US and China, I think there was a bit of irrational exuberance. We're now getting a combination of factors all clustering together to put some pressure back on. The fact is, for example, that the background stuff that was driving the market up, such as the deal itself, I think people are now having time to go through the detail and finding that it's actually China committing to buy things that they would have bought anyway. And it's not clear to see how this actually plays out. In the meantime, you're quite rightly pointing out issues of the day, such as the China virus. I mean, the fact that you've got your first case in the US is worrying, to say the least.
Hey, Kim, I want to turn to what the latest that's happening overseas over at the World Economic Forum in Davos that is underway right now. President Trump spoke earlier today. During his address, he actually touted the strength of the U.S. economy. Let's take a look at what he said.
Today, I'm proud to declare that the United States is in the midst of an economic boom, the likes of which the world has never seen before. We've regained our stride, rediscovered our spirit, and reawakened the powerful machinery of American enterprise. America is thriving, America is flourishing, and yes, America is winning again like never before.
Can we just hear President Trump say that the U.S. is in the midst of an economic boom, also saying that the U.S. is thriving? From your perspective, do you agree with that?
I have to say not entirely. I think, like all politicians, he's dressing the facts to suit the message that he wants to get across. The fact overall, I'd say, yes, the U.S. economy has been doing better for longer. A large part of that will be due to the one-off tax cut that was so significant. We saw that some time ago. I think if you just think about headline GDP numbers, which is what we tend to traditionally look at, you're getting growth of between 2 and 3%, which is very good. But it has clearly been higher in the past. We've had 4% in the Clinton era. We've had, over 3 at other times. But this is just kind of nitpicking. In terms of job creation, there's plenty of jobs being created. Where I would worry is that I think that this might just prove to be the peak. Last time I was on your program, I suggested that one of the key things to worry about is this underlying gnawing away at profitability that has been happening for the last 2 years because of the tariff war with China. And the problem is that tariffs are on every good, so intermediate goods as well, which U.S. companies need to buy in order to be able to sell abroad. They're getting hit twice. They're paying the tariff, and their goods are more expensive, so they're less competitive abroad.
Kim, do you think, well, what's interesting actually going off of that was we had the comments from Treasury Secretary Steven Mnuchin. He was talking to the Wall Street Journal earlier today. What he said was that even if we do reach some sort of phase 2 trade deal between China and the U.S., it may not remove all existing tariffs. So if you're talking about the fact that tariffs are very, very worrisome, taking that into account, how problematic could that be?
I'd say very problematic. Simple reason is that a tariff is basically a tax. And one way or another, it filters down to the consumer, the end consumer. Now, at the moment, what's happening is every Chinese company we've been meeting over the last year has been saying they are sharing the cost of that with their American clients. And you'd expect that to continue. But remember that there's a lot of industries out there where margins of 5 or 6 or 7% are pretty good. So if you're sharing some of that, say a 10% hit, and you're sharing it with your supplier, you can keep it going for a while, not indefinitely. I firmly believe that this is linked to the biggest threat possibly that is being missed by the market right now, and that is the erosion of profitability in the value chains of virtually every sector, but particularly technology, that's been built up over the last 30, 40 years and optimized for cost and reliability and efficiency. I think these tariffs are going to drive suppliers to move their base somewhere else, which is fine, but it's still not going to necessarily come to the US, and you're still going to get suboptimal earnings outcomes.
Kim, you mentioned technology. What other specific sectors do you think are at risk of this?
Well, clearly the best example in the world is the auto sector. And, you know, it seems strange that the US, which is, you know, holding up traditional values of free trade for the last 75, 80 years, is the one that is now at a stage where they're actually promoters of managed trade, the kind of stuff that we would typically in the West criticize China and maybe other countries in Asia for historically. So it's no longer easy to unpick these value chains. Other sectors that are maybe equally impacted will probably be sectors like pharmaceuticals, chemicals, you know, even agriculture, as we're finding through the demand for raw materials. You know, in agriculture in the US, you tend to export raw materials more than finished product.
All right, Kim Kataikis, thanks so much for joining me today.
Thank you.
Let's get to our big three tickers of the day. We have the travel industry. Stocks like Delta are taking major hits on fears about a deadly virus in China. Also, Boeing reportedly looking to raise a pile of new debt as costs soar from the 737 MAX jet grounding. And Tesla scoring a huge bullish call on its stock. We're going to have more of those details on those stories. But first, let's get to the latest in China. Now, China's new coronavirus has many industries on edge after the country confirmed that the illness can be transmitted between humans. This coming as Reuters reports that the CDC is confirming that the first case of the virus is here in the U.S. The news is dragging shares of companies like Boeing, Wynn Resorts, and Carnival Cruise. You can also see Las Vegas Sands and Delta moving to the downside today. Anjali Khemlani is with me. And Anjali, how concerning is this story, not only for some of the travel names that we just mentioned, but also the pharma industry?
Absolutely. Well, the pharma industry actually
will benefit
from this, right? So we've definitely seen some of those companies that either have a major stake in China or are, you know, working on vaccines for flus or other airborne illnesses really, you know, get a bump today. We know that we've seen Inovio and Aethlon; those are working on coronaviruses, specifically the Middle East respiratory syndrome, and then Novavax, which has been working for more than a decade on a SARS vaccine and had received NIH funding and has a flu vaccine on fast track status, and it's in clinical stage. So you're looking at these companies that have already been working on other airborne illnesses or similar types of, you know, illnesses and can really stand to benefit here.
Is there anything that we can learn from the past? Because a lot of people are citing SARS, that the reaction there's lots of fear, I guess, in the markets in terms of when that spooked the markets many, many years ago, that could also have a similar effect today.
Well, the difference obviously is that previously for SARS, which was in the early 2000s, China did a good job of sort of delaying the response to that and really letting people know. And so what's different now is that you do have, in fact, you know, the acknowledgement that it is an airborne illness, that it has come into contact with humans, which, by the way, makes it the 7th coronavirus to affect humans. And it's already killed 6 people, 300 infections. As you reported, it's confirmed that one case from a traveler from China in Seattle has been confirmed just now by the CDC. So we're still learning a lot of sort of where this might be affecting. The World Health Organization is set to meet tomorrow, an emergency meeting to sort of decide whether or not this is in fact an international crisis. And I think that will actually give more clarity to the markets on how to move.
Yeah, because also it clearly affects areas outside of just China and also the U.S. I mean, Europe at risk, Southeast Asia, broadly speaking, also could be exposed to this virus.
This goes back to, you know, there's a lot of trade and a lot of just interaction with China, generally speaking. So that is definitely where the concern is coming from. And it just remains to be seen sort of like how, you know, both China itself and the international markets handle it.
All right, Anjali, thanks so much. Well, more pain for Boeing today. It is the worst performer in the Dow, with the stock off almost 5%. Now, CNBC is reporting that Boeing doesn't expect regulators to sign off on the 737 MAX until June or July. This coming as the airplane maker is in talks with banks about borrowing $10 billion or more. This is according to a report from Reuters. Jared Blickery is with me at the Wi-Fi Interactive board. And Jared, just taking a look at the stock reaction alone, obviously a huge concern for investors with shares off almost 5%.
Yeah, definitely. The technical picture here is pretty bad. And let's just get to that first. Stock is down over 5%, and the level 307 is far below the 320 level that we've been watching. We've been covering this on a weekly, sometimes several times per week. And that 320 support that's held since the beginning of the crisis is now broken. And we can see when that happened, it was a very quick trip down. So how low can it go from here? Well, this is what I tweeted late last year. And the picture hasn't changed too much. This is a volume graph and it shows where the volume has accumulated pursuant to the stock price. And we can see that there's the trading range that we have right here. That's where most of the volume has been sitting. And down below that, there's this huge air pocket down to about 150 to 160. And if you're doing the math, that's about 50% below current levels. So while we could still bounce from these levels right here, and we can take a look at a longer term chart as well, we could bounce from 310, 300. The technical picture has certainly deteriorated, as well as the fundamental one, because consider what's happening here. Boeing may miss out on the critical summer months of flight for the 737 MAX here, and it's also going to increase its costs. We learned earlier today that it has to borrow up to $10 billion. Earlier, it was thought they would only borrow up to about $5 billion, and that has to do with payments that they're making to some of their suppliers, as well as the airlines, as well as meeting their commitments as this key plane remains grounded and out of production.
Jared, does that $10 billion or the up to $10 billion loan, does that mean that liquidity is an immediate concern for Boeing?
I don't know that it's an immediate concern. They're going to be able to make this payment, but the question is, what does that do to their credit profile? Already they were downgraded by S&P a couple weeks ago. We covered that, and they're on negative watch for Moody's as well. So that has the effect of tending to increase their borrowing costs over time, and the longer this plane remains out of the sky, out of production, out of sales, their credit profile is going to deteriorate even more from there. Now, Boeing is going to recover from this, but it's only a matter of time. And the question is how long. Everything keeps getting pushed into the future here. And a lot of people have speculated, including Rick Newman here at Yahoo Finance, that 737 MAX needs to rebrand itself. If it does that, if it's a new plane, it has to go under an entirely different approval process, and that could prove even more costly for the airline.
That's what President Trump has been saying now for quite some time,
Yes.
too. So, all right, Jared, thanks so much. Moving on to a very bullish call on Tesla. Now, shares today are surging with the stock up over 6%. Now, the move to the upside coming after New Street Research raised its price target to $800 a share. Melody Hom is with me. And Melody, some of the reasons why they are bullish on the stock, obviously they said about management and also strong demand. What's your read on this? Because it seems like a tremendous move to the upside when we've already seen a huge run up in Tesla stock recently.
Yeah, and this is, of course, on the tails of a slew of upgrades that we experienced over the last couple of weeks, but Pierre Ferragu by far is the most bullish call here. I do have to say that, yes, 800 seems like a lofty number, but the thesis is essentially that we should expect Tesla to sell between 2 to 3 million vehicles per year after 2025. So, of course, this is a long view. And then if you think about the market cap at that point, Pierre Ferragu is suggesting that that would bring Tesla to about $230 to $350 billion. That would equate to about $1,100 to $1,700 a share, which, as you can see, is a far cry from what we're seeing now. But ultimately, Shauna, we've talked about quite often on this show the lack of penetration of EVs in the general market, and that passenger sedans, it only makes up about 2.5% currently in 2020. So as much as we talk about Tesla as if it's a household name, which it is in terms of actually having these vehicles in people's garages, on the streets. Of course, I live in LA, so it's very disproportionate to the general population. But ultimately, the consensus here from the Wall Street community is that there is a long way to go, and that the demand will only continue to increase here as hopefully the prices go down.
And those cars are pretty popular in LA too, aren't they?
Very, very popular. We have a bunch in our lot right here. Not mine, of course.
Melody, I also want to get your thoughts. There was another report on Tesla that we are watching, and there's reports that it has signed a contract to build its next gigafactory in Germany. When you think about how fast or how quickly Tesla is moving, obviously it's shifting its focus not only from the U.S. but overseas on the heels of the news that we just had about its Shanghai plant over in China. Is there any risk that maybe Tesla could be getting ahead of themselves and spreading themselves too thin and then could be subject to some of the production problems that they've had in the past?
It's interesting, Shauna. I don't think production is actually the big headwind here. I think environmental concerns and a lot of the backlash that they're facing from the community is actually coming to light. So a lot of the local German newspapers are reporting on this Brandenburg facility that did get approved. I think Tesla has spent so far about $45 million on securing this facility, but there is an extinct bat species that is actually up here that is now in part of this discussion, where a lot of local community activists and folks coming from different parts of Germany saying, hey, how are you going to help with deforestation? How are you going to help with the water supply? A lot of these details have yet to be ironed out. And there's further backlash, actually, because Tesla did not actually send any of its own representatives. They're working through a third-party consultancy to really kind of hedge these sorts of concerns. So I have no doubt that Tesla will plow through and make sure that they are promising that they end up planting 3 times as many trees as they cut down. However, of course, as you know, this is going to be an ongoing discussion with any sort of big man taking to local communities, because this is not Berlin proper. This is a small town outside of Berlin. So as you can imagine, they need to be very cognizant of the concerns of those local community members.
All right, Melody Hahn, thank you. We also have an update on Boeing. Now its stock is now being halted due to news pending. As we mentioned a few minutes ago, CNBC is reporting that Boeing does not expect regulators to approve the 737 MAX jet return to the skies until at least June or July. We'll keep you updated as things develop. Well, coming up on the ticker, a big list of heavy hitter companies are reporting earnings this week. A top expert tells us how investors should prepare next. Welcome back to The Ticker. Earnings season is underway with companies like Netflix, Johnson & Johnson, and American Airlines slated to report results this week. And according to Credit Suisse, S&P 500 companies are beating earnings by 4.9%, with 67% of companies exceeding their bottom line estimates. Joining us to discuss is Ben Phillips, Chief Investment Officer at Event Shares. And Ben, when you take a look at what we've seen so far this earnings season, it's only been about a week. What are your expectations for the rest? Will we continue on this path where they've actually been pretty decent?
Yeah, I think that's right. I think we're expecting pretty decent earnings. I mean, expectations got a little low. You just gave the numbers that Credit Suisse pointed out. Roughly 70% of companies are beating, there's the expectation, 5% beats. That just shows you the street is kind of always managing expectations. And so we're expecting the same, kind of modest beats. The outlook is going to be really what we're focused on, though. That's really what's key.
Do we need to see earnings materialize in a meaningful way in order for this market to continue its upside momentum?
Yes, I think that's really important. Markets go up when earnings are going up. And so if we see earnings continue to increase, that's going to give the case for the market to increase. As we saw last year, right, the valuation multiple expansion was really what drove markets for pretty much the entire year of 2019. So it wasn't earnings growth. It was all multiple expansion. So this year, we're going to see the return of earnings growth. And even if you don't see multiple expansion, that could bode well for equities.
Ben, we've seen this move to the downside today. The Dow off just over 100 points. S&P and NASDAQ also moving to the downside. Dow off actually 180 points right now. When you take a look at this, do you think we're not too far off those all-time highs that we hit repeatedly last week? Do you think the market is still expensive at this point?
It's tricky. There are definitely expensive parts of the market. So we look at large caps on a near-term basis. They're pretty overbought. I mean, looking at across almost any sector, we're seeing pretty extreme overbought measures on RSIs, on 50-day moving average, and 2 standard deviations above. So we're looking pretty overbought on large caps. Now, there are pockets of value. Certain areas of the market, certain subsectors like gaming, energy, 5G telecom infrastructure, even some healthcare subsectors. So there are pockets of value out there. They're, in our view, largely in the small and mid-cap stocks is where we really like, and especially on a near-term basis. I mean, large caps just look pretty darn expensive.
Ben, you just mentioned gaming, energy, 5G. How do you play those sectors?
Yeah, so gaming, we're looking at sports betting plays. So that's an interesting way. We're looking always for government policy catalysts. So sports betting is pretty interesting in gaming. So some of the regional casino operators where they're going to see more traffic is our expectation. We like those. We like some of the technology providers, too, who are enabling sports betting. And then some of the media properties, even like Fox, who you could think about it as going to allow betting maybe while you're watching a game on a Fox program, or streaming a Fox, live event. So that's interesting. Energy, we like IMO 2020. We like some alternative energies, like ethanol is pretty interesting from a government policy catalyst standpoint. And then I think you mentioned 5G telecom. We like some of the U.S. equipment providers and the European equipment providers there, too.
Hey, Ben, what about healthcare? I know you briefly mentioned that, but with all this political noise, that sector, some investors are saying it's too risky right now to find some opportunity there. Why are you seeing a buying opportunity now?
Well, a couple of reasons. I think first, you pointed it out there. There's skittishness around the institutional investors. So the money doesn't really want to be in healthcare right now. That creates an opportunity, especially when people are just saying, I want to be underweight healthcare. Well, they sell the whole sector. And so there's subsectors of healthcare that are still seeing really strong growth. So health tech that's supported by CMS's new value-based reimbursement initiatives and really pushing for quality of care and efficiency. There's certain tech providers there that are really well positioned in healthcare. But then even some of the managed care providers, I mean, we saw when Elizabeth Warren was really surging, they were really being oversold. And so there are opportunities there in some of the insurance companies too. So if you see like a Bernie Sanders or an Elizabeth Warren surge, that can create an opportunity for some healthcare names because we don't think Obamacare is going away. We don't think Medicare for all is a real likelihood either.
All right, Ben Phillips of Event Shares, thanks so much for joining me.
Thanks, Shauna.
And before we go to break, we want to mention that Boeing shares are still halted pending news. Now, CNBC did report a short time ago that Boeing now expects regulators to not approve the 737 MAX jet's return to the air until at least June or July. We will, of course, keep you updated as news develops. Well, coming up, President Trump touting an American economic resurgence, while in Davos, are the signs for 2020 as strong as he says? Stay with us.
Welcome back to the ticker. Let's check in on the market. Still a down day. The Dow off 191 points. S&P and NASDAQ also moving to the downside. Ines Ferre is on the floor of the New York Stock Exchange. And Ines, the big story right now is Boeing shares being halted.
That's right, Shauna. We're waiting for Boeing shares to resume trading. They have been halted pending news. Now, earlier, CNBC had reported that Boeing doesn't expect regulators to approve the 737 MAX jet until June or July. That sent the stock lower, breaking below its support level of 320, down to a 52-week low, down about 5% before shares were halted. And so we're waiting for that news. We will bring it to you as soon as we get it. Meanwhile, we're looking at a Dow component. Intel, actually the best component on the best performer on the Dow today. Intel hitting a 52-week high after Jefferies upgraded the stock to a hold. Now Intel will be reporting earnings after the market close on Thursday. And then I just want to show you what's happening with Costco. Costco, one of the better performers on the S&P 500 after being upgraded at Oppenheimer to outperform. The analysts there selected Costco as its top pick with a price target of $335, with the analyst note highlighting an attractive valuation and also top line trends that come in above its peers. Shauna.
All right, Inez, thank you. Well, the World Economic Forum in Davos, Switzerland is underway. We had President Trump speaking about the U.S. economy. Now, he touted the strength of the American economy earlier today. Let's watch.
Today, I'm proud to declare that the United States is in the midst of an economic boom, the likes of which the world has never seen before. Despite all of the cynics, I had never been more confident in America's future. I knew we were on the verge of a profound economic resurgence.
Joining us now, we have James Liu, Clearonomics founder and CEO. And James, we asked the previous guest what he thought about that. He was saying that he doesn't necessarily agree with the president in terms of the U.S. economy right now being in a state of booming, I guess continuously saying that it's thriving right now. What do you think?
We think the economy is very healthy right now. Things are going well. Obviously, unemployment is extremely low, and there really are no signs of inflation yet. Although I think what the president is talking about is really where we are in the business cycle, a cycle that has gone on for almost 12 years now. So, you think about where we are in a historic cycle. Things are generally going well. Obviously, we're not going to see the 3 or 4% growth rates that we saw in the 90s or in the 60s, but 2% for U.S. economic growth, if we can keep that steady, is actually quite good.
James, what do you think matters most to the markets here in short term in terms of performance?
Yeah, so I mean, from a market perspective, we're going to have a make or break moment later this year around corporate earnings. Now, I think it's no secret to anyone who looks at markets that earnings have to deliver in 2020 in a way they did not deliver in 2019. And just to be clear, that's not necessarily a bearish signal in and of itself. We've had situations like this even over the last several years where markets ran above where earnings were likely to be. So we had this at the end of 2016, right around the presidential election. At the end of 2017 and 2018, valuations were elevated, roughly where they are here. And so as long as global growth can pick up, which is an open question, but if it does pick up, then we can see global earnings pick up as well. And that, of course, can boost earnings and help stocks.
James, what are your expectations for earnings? Do you think we will return to growth this year?
Yeah, so we think we will, but unfortunately not as much as the market expects. So the market right now seems to still expect around 9% earnings growth over the course of 2020. And we think, unfortunately, it's going to be closer to 5 or 6%, which is around the historical average. Now, all that means in the end is that if you think stocks are roughly fairly priced today at around 18 times forward earnings, that just means it's actually just slightly more expensive than that because earnings may not deliver as much as the market expects. So overall, we think it's still a good picture. We think the economy is still healthy. And if global growth can pick up again, then that means that other international markets can actually do well too. So think back to 2017. Global growth was picking up. It wasn't just the US that did well that year, which it did. Emerging markets, developed markets also did very well. So we think staying internationally diversified is still the best approach.
So you're saying the U.S. economy, let's start there, is still very strong. You're not worried at all about the slowdown that we've seen in manufacturing?
Yeah, so there are exceptions to what we've talked about, and manufacturing, you hit the nail on the head, is one of those. Manufacturing has slowed down. Now, part of that is because, of course, trade wars, and now we do have this interim trade agreement in place. Unfortunately, that's not going to solve all these problems. Manufacturing has slowed down. But if you look at non-manufacturing indices, they've slowed down because the economy is older and we're in the 12th year of this expansion, but it certainly has not started to contract the way manufacturing has. What that tells me is that there's one part of the economy, which makes up about 10%, that has slowed down, that was related to temporary measures around trade, and hopefully that'll pick back up. And the rest of the economy is still actually doing quite well. Obviously not gangbusters, again, going back to prior economic cycles, but it's still healthy today.
James, you mentioned trade. In terms of what we saw in the phase one trade deal, do you think that was enough to satisfy the markets at this point?
Unfortunately, probably not for the long run. So in the short run, it's great that we got a trade deal. Everyone's happy about that. You know, they did the whole ceremony, the dog and pony show. They signed papers. Everything was great. But tariffs are still in place. It's unlikely we get the second round trade deal anytime before the presidential election, which means we have this cloud hanging over us for the rest of this year. And in addition to that, part of this trade deal, the crux of it, is that China is supposed to buy a lot more agricultural products and other goods, and it's unclear whether or not they'll actually be able to make that happen. So optically, good for the markets, removes some instability that was there in the marketplace, but we still have a long way to go.
James, we also had, going off of that, Treasury Secretary Steven Mnuchin telling Wall Street Journal earlier that the phase two trade deal between U.S. and China may not actually remove all the existing tariffs. If these tariffs are not taken back, how significant do you think that is?
Well, I think from a market's perspective, markets will essentially learn to look past that. I mean, we've had these tariffs in place for well over a year, and we were talking about tariff escalation last year. And so if you think about what the market might do, I think the market will react just fine. From an economic perspective, obviously that reduces economic trade and economic output, and so that ultimately will be the problem.
All right, James Lu, thanks so much for joining me today.
Thanks, Shauna.
Well, before we go to break, we want to mention that Boeing stock is still halted due to news pending. Now, as we mentioned earlier, CNBC reporting that Boeing does not expect regulators to approve the 737 MAX jet's return until at least June or July. We, of course, will keep you updated as things develop. Well, coming up here on The Ticker, why Uber is testing a potentially groundbreaking new feature for ride-sharing industry. Don't go away. Welcome back. Let's get to our next group of tickers. Halliburton is on the rise despite a growing slump in the shale business. Uber rallying after selling its stake in a major food delivery investment. And investors are eagerly awaiting Johnson & Johnson's latest quarterly results. They will be out tomorrow morning before the bell. But first, let's get to Halliburton. Now, the company beat fourth quarter earnings expectations on both the top and bottom lines. Jared Blickery is standing by. And Jared, what's interesting to me, they actually lost $1.7 billion in the quarter, but investors are able to shake this off. The stock is slightly higher today. Why do you think that is?
Well, this is a one-time charge, and the company has restructured a bit to avoid something, and actually to deal with something that we've been talking about for some time, which is a restructuring in actual shale oil. So the growth phase in shale oil, the boom in the United States at least, is probably over. And now there's a consolidation phase where we see a lot of the majors getting into it, but they're kind of scaling back operations as well. So a lot of the smaller shale oil companies, they're kind of burdened with debt, and they don't need the services. They're being a lot more conservative to try and return as much capital to shareholders as possible through buybacks and dividends. The last thing they want to do is cut their dividends. So the shale oil rigs have really taken a hit over the last year. So we talked about Schlumberger last week. They went through something very similarly. Halliburton is poised as well to not only continue its downcline, continue to pair its operations in the shale field, but also increase its international operations where revenue actually increased 10% as opposed to dropping 12% as it did in North America. Now, margins have been under pressure, but they actually expanded in the last quarter for Halliburton. They shrunk in Schlumberger. So that's a bright spot for Halliburton. Could be why we're seeing the stock up today. It's only up 13 basis points, but consider the fact that a lot of the energy sector is really underwater today, along with the general market. So if we look at a stock today and see what the price action is, we can see that it was up above water just a little bit, and now it's kind of back to the unchanged line. Let's take a look at a one-year chart, and we can see that we've been forging a multi-month rounded bottom, and that's a technical formation that may point to higher prices for the stock.
All right, Jared Blickery, thank you. Let's talk about Uber. The stock is jumping today after the company sold its food business in India to its rival Zomato. Now, the deal gives Uber a nearly 10% stake in the company and about $35 million in cash. You see the stock up just over 5% today alone. Melody Hom is back with me. And Melody, why do you think this makes sense strategy-wise for Uber?
Well, Shauna, I think this has been Dara Khosrowshahi's big point, right? If you're not number one or number two in an existing market, then you have to sell your stake or just exit the business entirely. We know Uber Eats has been on a fast track here domestically, but of course faces its own share of domestic pressures. However, internationally, I think it's actually facing a lot stiffer competition. As you mentioned, Zomato is the leader in India, but Zomato and Swiggy are the two main rivals of Uber Eats there. They were already very well established and they dominated the market with about 80% market share. Uber, prior to selling and exiting their stake, they were actually only at about 3% of the entire market share of India. I also want to point out that if you look at the way in which delivery is executed in countries like India or even in China, they very much use a motorcycle for delivery operations, even in South Korea. And so it is a long-standing way for folks to deliver their food. And then Uber does do very well in India from the ride-sharing perspective, but they can't really do a 1-2 sort of punch in the same way that here domestically they can drivers can drop off an Uber Eats delivery and then pick up a passenger and then kind of alternate back and forth. So I think that was one of the major hurdles for Uber Eats in India. I think this is a very smart move on the part of Dara, and we should expect this sort of strategy to continue throughout 2020.
Yeah, Melanie, I wanted to ask just in terms of this strategy continuing, because we know that Uber has been under a tremendous amount of pressure from investors alone, just in terms of the fact that they want to see some sort of path to profitability. So we talk about the fact that they should streamline their business, or the benefits of streamlining their business, then I guess would point to the fact that we could see more of this type of deals being made down the road.
Yeah, I want to point out that there was news out today. New reporting shows that Uber is testing out a new model where drivers actually have control in California. It's a very limited test for certain drivers who are picking up passengers from the airports in Santa Barbara, Palm Springs, and Sacramento, where drivers would be able to up the base fare up to 5 times what Uber normally charges. Of course, there will be outcry among customers, but this is another way that folks are trying to figure out how to really operate in a higher margin business. And especially to your point, if they are exiting a lot of their other businesses, ultimately the ride sharing is the main opportunity for folks. So I'm curious to see how that test will end up working out, and I'll be sure to bring the latest reporting there.
All right, thanks so much, Melanie. It's something that we will certainly keep our eye on. All right, we have a breaking development on Boeing. Its stock is still halted. The company is out, though, with a new update about the 737 MAX jet. Let's go to Jared Blickery standing by with more details. Jared?
Yeah, the statement basically confirms, Boeing's confirming the report that CNBC released just about an hour ago that really sent the stock reeling. And that has to do with the return of service of the 737 MAX, estimated to be mid-2020. So that's I guess, June, July. However, forgetting the fact that we have to actually train the pilots on that, it could push this out well beyond the summer season. And the summer is, of course, one of the critical times for flyers. That means they're going to owe more money to Southwest Airlines and its suppliers. We can see the stock of Spirit AeroSystems is down 4.5%, kind of matching Boeing's descent here to 5.5%. And we can see the stocks hit here. When the news broke, that CNBC report, we saw the stock tank right below 320. Now that has been the critical support line that we've been watching. And when it was halted at 306, that was at session lows. I just want to show a one-year chart here because this really illustrates that support line and how critical it's been. Not only that, I did show a volume chart earlier that shows there's a huge air pocket down to 150, 160. So there's not a lot of support below this. We could see the stock bounce after resuming trading. There could be other news that send it up. But for now, the technical picture on Boeing remains pretty bleak.
And Jared, I'm also taking a look at some of these airliners as well. I know you mentioned the suppliers, but names like Southwest, that stock off just around 2%. And then American Airlines shares there off over 4%. So it's not only some of these suppliers, but we're also seeing the ripple effects that we've talked about time and time again throughout the airline industry.
Yeah, and not only that, we have the coronavirus, which has now been detected, according to the CDC, in the United States and Washington State for the first time. Airline stocks began the day off on that news, and so this certainly isn't helping them to boot.
Some more bleeding there. All right, Jared Blickery, thank you. We are also watching Johnson & Johnson. Now, the pharma giant will report quarterly earnings before the bell tomorrow. The street is expecting adjusted earnings per share of $1.87 on revenue of $20.8 billion. We have Anjali Khemlani back with us. And Anjali, when you take a look at Johnson & Johnson, the stock trading not too far from their 52-week highs, are we expecting a strong report tomorrow?
Yeah, absolutely. And the company has consistently talked about its strength, talking about its, its footprint and where it's going. So it doesn't really have any surprises expected. Investors are saying, and analysts are saying, status quo pretty much remains. The company has said that 75% of its growth is going to be coming from existing assets, so things that are already on the market, versus looking to its pipeline, where it is focused very heavily on cancer drugs and gene therapy. Obviously, the cases that we've heard about, the talc case especially, there have been mixed up and downs for the company between overturned cases, settlements, and the largest $4 billion that they owe. And then you also have a downgrade for one of their cases of a mood disorder treatment drug from $8 billion down to just $6.8 million. That's a recent news ticker for them. And then the opioid case, which we know is just kind of halted. Back in October, they mentioned that they might settle for about $4 billion. That sent the stock down for a bit, but nothing has moved since then. So, and as well, a recent JAMA article, that Journal of Medicine article that talked about how there is no link between talc and ovarian cancer. So a lot of things, sort of mixed reviews for them, but still kind of keeping the company strong, and no one expects any surprises.
All right, Anjali, again, those earnings will be out tomorrow before the bell, and I'm sure you will be watching them closely. Anjali, thanks so much. Well, straight ahead, SAP's new co-CEO sounds off to Yahoo Finance on the single biggest challenge facing the tech industry. We've got all that next. Business leaders from around the world are meeting in Davos, Switzerland for this year's World Economic Forum. Yahoo Finance's Brian Sazi spoke with SAP's co-CEO Christian Klein and got his take on the future of the software giant.
I'm here with SAP's co-CEO, Christian Klein. Christian, good to see you.
Yeah, thank you.
So this is your first time at the World Economic Forum as co-CEO at SAP. How do you imagine your role will change at an event like this?
I mean, I'm really looking forward to great conversations, not only business conversations, also about, bigger society issues we are facing these days, to talk about climate change. I guess this will be also at the top of the agenda.
Do you also close deals at a meeting like this? How important is that?
No, we are, of course, talking to our customers. We want to, of course, understand how SAP can be an even better partner in their digital transformation. But here it's not so much about closing deals. It's really about, having some talks about the future strategy and how can we support our customers best in the digital economy.
One of the biggest themes at this year's World Economic Forum is the fourth industrial revolution. How will SAP play in that?
I mean, on two sides. I mean, when our customers look at us, we are their major partner in their digital transformation when it comes about launching new business model in the digital age. How can we automate certain transactional processes? How can we design more intelligent processes in the supply chain, in finance, in HR? But again, here, there are also bigger topics we have to talk about. What about our employees? Their job profiles will change. So we also have to have a responsibility about how to retrain the people and giving them, skills, what they need to succeed in the digital age.
How big is the skills gap?
The skills gap is actually quite huge. I mean, in some parts of the businesses, take, for example, retail, a truck store in the future, you won't see any salespeople in there anymore. Or take, for example, financial services. This will be completely go online. And therefore, we have to make sure that we train our people wide. It's all about continuous learning.
Do big tech companies need to work closer together? I think a lot of us really focus on all the battles a lot of companies are having. But to get anything really transformational done, don't you have to work closer together?
Absolutely. I also see that, especially when it comes to vocational training at the universities, even at schools. I think there the economy, together with the politicians, really have to make sure that we train the people early enough to really equip them, with connected thinking, with new skills, what they need in the digital age. When you look, for example, in Germany, there's a high need for IT specialists, and we have really a lack of talents. We have to change, and this is a common exercise between the economy and the politics.
So we mentioned that you are the recently appointed co-CEO of SAP, but you've been there for quite some time. You've seen some of the biggest acquisitions the company. Last one, Qualtrics, deal closed in 2018. Will you be as aggressive with acquisitions? The company has made 5 since 2018, 70 acquisitions since 1991.
For the next chapter of SAP, Jennifer and I really want to put customer success at the top of the agenda, driving organic innovation together with our customers. Therefore, we really have to make sure now that in the next decade, we really integrate our acquisitions well, that we gain the synergies on the top and the bottom line. So it's all about customer success and organic innovation.
Are you through your restructuring?
Yeah, we are now done. We did our last restructuring round last year. We set the company now up for success. And now, of course, we have to drive an ongoing transformation, but there's no further restructuring plan.
And lastly, your predecessor put out some pretty big goals by 2023. Triple cloud subscribers, $35 billion in revenue, and some pretty aggressive profit targets. Is that still achievable?
That's still achievable, and we are working also now on making the right decision to make our portfolio grow even more in the future, double down on cloud growth, while we are continue to transform SAP to also drive productivity inside the company. And yes, we of course will stick to our 2023 targets.
Christian Klein, SAP co-CEO, thank you for joining Yahoo Finance.
Thanks a lot.
Appreciate it.
I will stay tuned for Yahoo Finance's live coverage of the World Economic Forum at Davos through the end of the week. Well, straight ahead, a new twist in Apple's battle with the Justice Department over encryption. We've got all that next. Welcome back to the ticker. An update here on Boeing. Shares have resumed trading now after an announcement that the 737 MAX jet will not return, or they don't expect regulators to sign off on the 737 MAX until mid-2020. We can see the stock off just around over 4.5%. Jared Blickery is standing by with the latest. Jared.
Yes, after the announcement or after the resumption of trading here, the stock hit new session lows, but it's off those lows right now, trading at around 308. Still down significantly for the day, down nearly 5%. And again, that 320 level, that critical support level has been breached. So we'll have to see what comes in the coming days and weeks, and especially with respect to the news flow. The FAA has also released a statement saying that it doesn't have a timetable for the release of the Boeing 737 MAX to again fly. Even once it's cleared to fly, the pilots have to be trained. It's not clear exactly how long that will take, but it seems as though it will be out of service for at least the entire summer. That is a very busy season, and that's only going to increase the liabilities of Boeing to its suppliers and to the airlines, which is having to make reparations for being out of service. So again, looking at the stock here, it's off session lows. It's rallying a bit, but still down significantly for the day, trading below that critical 320 support.
Jerry, you can see the stock off just around over 4%. Still the worst performer in the Dow so far today, with shares trading just around $309.88. Jared Blickery, thank you. Actually, you're going to stick around here for this next story we have. It's time for our last tick of the day, and it is Apple, the tech giant, dropping plans to let iPhone users encrypt backups of their devices in the iCloud after the FBI complained, noting that the move would harm investigations. This is according to Reuters. We have Anjali Khemlani. Jared Blickery is still with us, and also Melody Hum back to weigh in. And Melody, how significant is this? Because we know the fact that we've reported on time and time again that there's the differences between Apple and the DOJ, and how Apple may not be helping the FBI or the U.S. government in terms of looking into their phones. But this actually shows that the two might be working together or have a better relationship maybe than we initially thought.
Yeah, and it also shows just how much power and clout Apple really does have, that the FBI needs to be able to infiltrate iPhones, which is, the leader here in the U.S. when you think about bad behavior, a lot of unsavory activities that are happening, and trying to figure out what the digital footprint of these bad actors really were. I think what is particularly significant with the Reuters reporting also is that there are various employees and former employees who are saying, yeah, they didn't want to poke the bear anymore, and then others are saying, hey, maybe this was too costly of an initiative, that we don't actually want to invest so much in end-to-end encryption development. But ultimately, Shauna, I think what's particularly salient is that Tim Cook and a lot of the executives are out front and center saying they protect customer privacy and data, but then behind the scenes are ultimately giving in to the FBI and federal enforcement agencies. So I think this shows the kind of push and pull from what Apple really wants to be on the outside and then what they're really doing behind closed doors.
Yeah, Anjali, going off of what Melody just said, do you think we could see some sort of backlash here from some of Apple consumers?
Absolutely. I think that's one of those things that, Apple consumers do pride themselves on being part of this community of privacy, when in an age you're looking at really just giving up on that privacy, really, just as a consumer.
All right, guys, let's go beyond the ticker. PayPal CEO saying that his duty is to put his employees first, not the company's shareholders. While speaking in Davos, he said in part, "To me, the number one constituency that we have to serve is our employees by far and away. If you don't have passionate, engaged people who you work with, then you can never aspire to be a great company." Jared, when we're picking apart what Dan Schulman said, what do you think? Is there any truth to that?
Well, I think there's the zeitgeist is capitalism has to be feel-good right now, and everybody needs a feel-good story. However, the law is that the company owes a fiduciary duty to its shareholders first, and if he wants to flout the law, that's his business. Look, we're 33 years from greed is good. That's what Gordon Gekko said. The pendulum was way over here. Now it's swung to the other side, and we'll see how much further it goes to the upside before it eventually retreats again.
Melody, is it something that we will likely hear other CEOs or other business leaders say as well, do you think? Because it's important.
Yeah, I think it's just ironic in a certain sense, because a lot of these conversations are happening at Davos, where they are primarily a lot of these publicly traded CEOs and executives who do have that fiduciary duty, as Jared mentioned. We know Salesforce's Mark Benioff has kind of been the pioneer in a lot of this conscious capitalism discussion. And ultimately, it's a net positive for these companies, right? They want to be able to recruit and attain talent who care about the environment as well as their paychecks. And ultimately, if a a company does perform better over time, that is good for employees as well, because they also are compensated in stock.
That certainly is true. All right, Melody, Anjali, and Jared, thanks so much for joining me today. One more quick look at the markets before we let you go. The Dow, the S&P, and the NASDAQ all under pressure. The Dow off 143 points. The biggest decliner in the Dow is Boeing. That coming after Boeing saying that it does not expect regulators to sign off on the 737 MAX until mid-2020. The final round is next.
Miles Upton here in New York. This is the final round on Yahoo Finance. Stocks rolling over a bit. The first case of China's Wuhan virus has been reportedly detected here in the U.S. Also, shares of Boeing with some negative news. We'll have more on all the market action coming up in just a bit. Plus, Trump at Davos, why he's urging Jay Powell and the Fed to go negative, of all places, and Facebook's micro-targeting in the crosshairs of FEC Commissioner Ellen Weintraub and why it should be banned ahead of the elections, plus big after-hours earnings coming your way from Netflix and IBM. We'll have the numbers for you right after the bell. Joining me today, we got Yahoo Finance's Brian Chung to talk about today's market action and so much more. But let's take a look at where the major averages are trading right now. All three majors are lower with about an hour to go in the trading session. Off the lows, Brian, as they like to say around these parts. The Dow right now off 150 points. Of course, got to take a look at shares of Boeing right now. The stock had been halted earlier in the session, down about 5.5%. It has reopened trading, gaining back some of that ground that it had lost earlier. But overall, I think this market is not great. But, maybe it's fine.
I mean, it's a down day off of what we really saw as all-time highs last week. So it's not too much. It's not like we're seeing markets go down by more than 400, 500 points. So, it's, no reason to necessarily hit the alarm here, but definitely some market movement that maybe more than people expected started into this shorter week. Yeah, and of course, we continue to see this rotation inside the market. It's a theme we've been hitting on pretty regularly here at the final round, which is, a lot of the beaten down stocks from last year, specifically the IPO names. You just kind of look at that kind of broad group during today's session, and a number of these names outperforming. Of course, Uber announcing that its India operations has successfully spun those operations off. That stock is up some 6% today. Lyft up 3%. Beyond Meat up 15% during today's session. Sure, why not? That stock back at $125
per share. And then look at the shares of Tesla right now. That stock continues to grind higher because, it's a day ending in Y. So that means the stock goes up.
Right.
Those are the rules in the market.
Exactly. I mean, I think when you just look at this market, it seems like largely there hasn't been one big macro catalyst. There's a lot of sensitivity, obviously, to the Boeing news, to the Wuhan virus news. But when you look at the macro picture, it seems like there's not much from a central banking standpoint, from an economic data standpoint, from a geopolitical standpoint. Particularly, it seems like the Mideast conflict is something that the market's kind of forgotten about
that today.
right?
Yeah.
I mean, that was the biggest story if you rewind 2 to 3 weeks ago. That seems like that's kind of taken a backseat as well. So no huge driving factors. I mean, again, notable movement today, but nothing, completely shocking, I guess.
And, I don't think we have it scheduled to get into it, so we might as well just do it here. The green bonds thing, the green swan issue, your thoughts?
So, I mean, this is the big story out of Davos, right? All these CEOs.
The elites are very worried about climate
change.
change.
All these world leaders
but they seem to only be worried about climate change in the context of how it changes the GDP calculation.
Well, I mean, so the report that you're mentioning about the green swan, that's specifically language that came from the Bank of International Settlements. It's a cohort of central banks from around the world, and they basically released this report yesterday saying that this is something that central banks should be, keenly aware of, at least in the future. It could present systemic risk. The problem is that I haven't really heard from the number of conferences or research papers that I've read a way to actually model that, a way to actually do that. So here you have all these central bankers saying this could be a huge factor in the future of central bank planning, but we have no idea how to actually model that today. How do you incorporate that into an FRB US model? There hasn't necessarily been an answer to that right now, as is everything when it comes to Davos and kind of the high profile picture of climate change. There really isn't any sort of tangible action that some of these issues can kind of be linked to or connect to.
Yeah, I've sort of started to suspect that climate change is an issue where we may find out the limits of the market-based philosophy that the Davos set, kind of subscribes to.
Right.
Where it's like, oh, well, if we just create the right incentives, everything will be fine. Because, the consensus basically take away from notes out of Deutsche Bank and JP Morgan that, preceded the BIS report but are on the same lines. They're like, we just don't see how anyone right now is going to be changing their current course of action to actually address the climate issue, which means it's probably going to get worse. And then maybe when it gets worse, people will change what they're doing.
Well, it's a chicken or the egg thing, right? Are they saying that because they know that the status quo is going to remain in place because they're probably lobbying for it? Or is it vice versa, right? I mean, I think when we talk about Davos, we talk about all these high-profile players. I was there last year. You hear a lot of nice things on stage, but again, what's actually actionable from these events, I think, leaves something to be desired. I have yet to see a reason why anything from the 2014 Davos has resulted in a crisis being solved today in 2020.
And guess what, folks? This guy didn't get invited back.
I'm here right now in New York.
I think that says it all. All right, for more on today's market action, let's go to Inez Frey. She's live on the floor of the New York Stock Exchange. Inez.
Miles, we're watching shares of Boeing down more than 4.5% off its session lows, but nevertheless, the stock broke its support of 320 earlier when that initial report came out that Boeing was expecting regulators to approve the 737 MAX jet no earlier than June or July. That's when the stock was down more than 5% to a 52-week low of 306. Then trading was halted pending news, and then the company came out with a statement saying that it's expecting the ungrounding of the 737 MAX to begin mid-2020. That would be around June or July, coinciding with that initial report. Meanwhile, remember that the airlines had recently pulled back extended its timeline for when it was pulling the 737 MAX from its schedules to early June. Now it's expected that once this jet gets its clearance, that there will be additional pilot training. So we'll have to see what the airlines say in the coming days. And the FAA, by the way, said that it has no timeline set for the return to service of the 737 MAX jet yet. Taking a look at another Dow component today, Intel. This is actually the best performer on the Dow today, up more than 1%. It actually hit a 52-week high earlier today after Jefferies upgraded the stock to a hold with a price target of $64. And Intel, by the way, will be reporting its quarterly earnings on Thursday after the close. And meanwhile, we're also watching shares of Disney after Disney announced that it's moving up the date for the release of Disney Plus in some Western European countries. So countries, for example, like the UK, Ireland, France, Spain, they're expecting to get Disney Plus, to start Disney Plus there on March 24th, mid-March. And then afterwards, Belgium, countries like Belgium, Portugal, that will be set to roll out in the summer of 2020 of this year. As far as the cost, When you compare euros to American dollars, it's the equivalent to about $7.76 per month. And here in the U.S., Disney Plus costs $6.99, so very similar pricing structure.
All right, Nez Frey live on the floor of the New York Stock Exchange. All right, let's turn back to our beloved friends in Davos. Donald Trump in the spotlight today, delivering his speech in front of the global elite, talking about his big wins on the economic and trade front, but also, once again, taking a shot at the Fed.
The Fed has raised rates too fast and lowered them too slowly. And even now, as the United States is by far the strongest economic power in the world, it's not even close. It was going to be close, but a lot of good things happened to us and some not so good things happened to certain other places. They're forced to compete, and we compete with nations that are getting negative rates, something very new, meaning they get paid to borrow money, something that I could get used to very quickly. Love that.
It's great stuff.
So right after that, Larry Kudlow went out and said negative rates are not a good idea. They're really bad for banks. They're really bad for savers. They're not great for investors.
Central banks that have taken on negative rates have started to say, actually, QE sort of asset purchases are a more forceful part of the policy.
Right. And for the Federal Reserve's part, that's exactly what they've been saying. They said QE, forward guidance, is the recipe for the next downturn.
Just look at
not
this
negative
market
interest rates right now.
Look at the not QE.
Yeah, but I mean, it's kind of hilarious to see Trump go up and say that, and then it was literally, I think, 30 minutes or an hour after that, Kudlow started to walk those comments back. But look, I feel like we have to do a Yahoo U on this, on negative interest rates.
There it is.
The problem here, you heard it here first. You heard it here. But here's the thing. You can have negative interest rates on issuance that actually had positive yields at first, right?
Okay,
Market rates can take negative interest rates.
There's a conversation between negative effective yields and negative.
Right, but the point is, President Trump seems to think that negative interest rates means the government can issue bonds at negative yields and then make money off of
So do most macro strategists.
Well, right, and that's a problem that's a myth that needs to be dispelled right off the bat. And as Kudlow points out, rightly, not everybody's a winner in a negative interest rate environment. In fact, there are lots of losers. So just need to get that out there.
I sort of wonder, I think for a time, Trump's complaints about the Fed, were interesting. And he's going to obviously continue to do it. And you sort of wonder at which point does he kind of get off that.
Here's an interesting statistic. So since President Trump has entered office, I'm going to have a story about this soon, another assignment. He's tweeted 100 times about the Federal Reserve, monetary policy, Powell in some capacity. 48 of those tweets came before or in the period leading up to the September 18, 2019 FOMC meeting where the Fed cut by 25 basis points, right? That was their second cut of the 3 that they delivered last year. He's been pretty quiet since then.
Yeah.
Because he acknowledged that, yes, the Fed did cut. He says he wants it at 0, but of course the president has to come out and say it's never good enough for him.
Well, does he have to say that? Couldn't the president, as has usually been the case, just say nothing about the Fed?
Well, I think once the Fed started cutting is when he started saying we actually want interest rates to be 0 or negative. So he did ramp up the rhetoric once the Fed started doing what he already wanted.
Right.
I think after that fact, he kind of realized that the Fed probably won't do that. And then, because when the Fed was at that teetering point, it was like maybe, again, this is maybe the perception from the White House, maybe the policy will be malleable. Those things are obviously, Powell has said, we're not influenced by what the president is saying.
Right.
That's maybe what Trump was hoping for.
Well, I think this is why we end up on the opposite side of the take that Powell actually did respond to Trump. Because when you lay it out like that, it seems like you did.
Well, I've asked this of Neil Katyal.
I know what they say, right? We all know what they say.
We all know what they say, and I've asked this question, though, right? I mean, it doesn't matter what the Federal Reserve does. I am sure inside the Federal Reserve that they are truly doing this independently. They probably don't talk that much about what Trump is saying or doing. But when people look back on this chapter in history, all they're going to see is that President Trump was firing off all these tweets about the Fed easing, and then guess what? The Fed did. Right. A lot of stories. There are multiple stories.
Be like, wow, that Brian Chung, he really knows the Fed influences policy, or the president influences policy.
You got a few stories up there, too.
That's right. But then you took over my job, and I started doing this. All right, coming up, Facebook's micro-targeting is in the crosshairs of FEC Commissioner Ellen Weintraub. She'll join us to talk about why it should be banned ahead of the 2020 election. But first, let's take a look at where European markets closed on this Tuesday. for watching in today's market. Shares of Apple in focus. Morgan Stanley raising its price target on the iPhone maker to $368 a share, arguing that investors are underappreciating the impact of this year's 5G-enabled iPhone release. Little stat here on Apple for you. Because the Dow is a stupid index and is weighted by price, Apple is now the most important component of the Dow. How about that? Congratulations, everybody. Boeing shares right around 308 right now, the second most expensive stock in the Dow. All right, let's take a look at shares of Costco. Oppenheimer upgrading the warehouse retailer to outperform from neutral, calling the stock a top pick thanks to the company's attractive valuation and positive top line trends. And shares of Beyond Meat up about 15%. Starbucks announcing plans to add more plant-based items to its menu as part of its effort to combat climate change. All right, well, as November elections approach, the role social media plays in political advertising and misinformation is top of mind. Ellen Weintraub is the chair of the Federal Election Commission, and she joins us now to discuss. So, Chairwoman, the business model of social networks like Facebook and Twitter, it essentially revolves around micro-targeting their users in a way that previous advertising could not. Why is this practice something that you see as not having or something that shouldn't have a role in political advertising right now?
Well, the micro-targeting takes advantage of the vast amount of data that Facebook and the other platforms collect about us, based on all sorts of things that we do on the platforms that have nothing to do with politics or whether we want to even receive that kind of information. They take that trove of information and they target ads in very small slices at people, making sure that it's almost custom designed for you. At the same time, anybody who disagrees is likely to be getting a different ad set. They're not going to even see the ad. So there is no opportunity for what we call counter speech, for someone to come out and say, wait a minute, that's not right, or there's another take on that, or there's other information that you really ought to hear in order to make an informed judgment. If you circulated these ads if the platform circulated the ads to a broader base of viewers and listeners, they would be able to, those other folks would be able to critique the ads, and there would be a fairer exchange and a more robust debate of our politics.
As you're talking, I'm realizing we sometimes get too far down the road of what Facebook is doing, what Twitter is doing. Can you just outline sort of what the rules are that politicians have to follow, let's say, in terms of broadcast advertising versus what rules don't exist on the internet, and kind of how that arbitrage essentially is where Facebook has found itself kind of in this questionable territory?
Well, the whole broadcast model of selling ads is different because you don't get a different, when I turn on my television, I turn on a particular channel and I see the same thing that everybody else who's tuned in my neighborhood to that same channel sees. So you get at least the entire geographic area is going to be viewing the same ads. On the internet, you get a feed that is designed for you by the particular platforms based on their algorithms and machine learning, and they take, as I said, all this data that they collect about you and design the feed that you're going to get. They say because they think this is what you're going to want to see, but it doesn't necessarily lead to the best informed voters.
Commissioner Brian Cheung here. I mean, some might argue that even under the broadcast system, you were still able to target geographies. You did touch on that, counties or state levels in which you could actually define certain demographics that you're trying to get at. So how would that be different than what micro-targeting might be in the structure with these social media tech companies? And how do you kind of square that up with what you see as a need to actually ban micro-targeting?
Well, in the first place, what I propose is that the platforms take it upon themselves. I'm not proposing a government ban, which raises other kinds of issues. But the platforms have come up with different approaches to this. Twitter's decided that it's not going to have political ads at all. Google has adopted something that is a lot closer to the kind of model that I think would be better for us as a democracy to make sure that everyone is well informed, where they are not going to micro-target beyond the zip code range. But Facebook has said that they're going to continue their normal micro-targeting practice. And what that means is that what you are seeing might be different not only from what your next door neighbor is seeing, but perhaps what the person sitting across the dinner table from you is seeing, because it is designed specifically for you based on what you have liked and what the machine learning and the algorithms have dictated they think is going to be the best ad to hit all of your buttons.
And then I guess just more broadly as we head towards the election in November, an event last week, you said, and I think the context is with regard to internet-based election interference, that if you're not terrified, you're not paying attention. And I guess the question is this about the things that happened in 2016 repeating themselves? Are you seeing new behaviors happening in 2020 that we don't yet appreciate? Kind of how do you see the landscape as we head towards what is certain to be a contentious and certainly disinformation-filled election cycle?
Well, that comment really had to do with the disinformation that we're seeing that's coming at us from abroad. Our intelligence communities have pretty well documented that the Russians were trying to interfere in our election in 2016. They were trying to spread disinformation. And the intelligence communities have again said that they're expecting more of this in 2020. We expect to see it from the Russians, from the Chinese, from the Iranians. Who knows who's going to try and interfere next time? I think we need to be taking stronger steps to protect against that kind of interference, because nobody wants foreign governments trying to tell us who we should vote for in our election.
All right, FEC Commissioner Ellen Weintraub, thanks so much for joining us.
Thank you.
All right, coming up here, we'll have more on the final round. Plus, we'll head to Davos and hear from PwC Chairman Bob Moritz what CEOs are telling him about the state of the global economy. But first, let's take a look where big banks are trading right now with 40 minutes to go in the session. World Economic Forum, Davos kicking off. The inflammatory headlines, of course, rolling in. Ray Dalio says that cash is trash. Scott Minerd says the market is a Ponzi scheme. Paul Tudor Jones says that monetary policy is, quote, insane. And joining us now to make sense of all this is George Rusnak, the co-head of global fixed income strategy at the Wells Fargo Institute. So, George, you got to make a headline here. You got to keep on. But, George, in your note, you guys say you're cautiously optimistic short term, but you're a little more concerned as you look further out. So I guess kind of lay that out, the time frame. You talking the next 6 months here, and
sure.
What are you guys seeing in the landscape?
Yeah, I think the challenge is obviously the market's been up dramatically, right? It was up 30% last year. It's already up 3% this year. I think the challenge that we have is if you look at kind of where the returns are coming from, right? So historically over this cycle, we've seen most of it come from earnings growth, right? And not from sort of the multiple expansion. This last year, though, 92% of the growth came from multiple expansion, not from earnings growth. So what we're saying is a little bit of a weaker foundation for it to build on. So can it be building? Yes, absolutely. But the earnings growth really need to follow. And that's what we're challenged with.
So a big story kind of underscoring the macro background is really the Fed having cut by 75 basis basis points last year. But as we know and we hear so often, it operates on a policy lag. So what are the expectations from your view of the effect of that in 2020? And what's your forecast? Larry Kudlow calling for a cut, it sounds like. You see it the same way?
Yeah, so we're not actually calling for a cut this year. I don't think there's any reason to do it. Right? I think last year you saw the market kind of push the Fed into making cuts, and they made 3 of them last year. I would say, though, that even look at more globally, right? You saw tremendous cuts across the board. So that could spur further growth this year. From our perspective, our viewpoint for the Fed right now is they're going to be on hold. They want to see extra growth. They want to see inflation kick up, and they're going to remain on the sideline. It's a pretty high bar for them to actually raise rates at this point. For them to lower rates, maybe not as high of a bar, but I still think they want to sit on the sidelines and not be active here.
So I guess if we go back in time to 2017-18, the Jay Powell Fed clearly had a quick trigger finger when it came to looking at inflation and saying how they wanted to act. So do you guys see them not only having just spoken differently last year, but actually having a full policy rethink with respect to the inflation target? I mean, I know Powell says that they're willing to tolerate 2%, but no, above 2%, but no one, I think, believes it until they actually see it.
I think they are this time. I think right now, so I do think there's a policy shift from that perspective, because look at globally what you're seeing. You're not seeing inflation spike up anywhere and get out of control. And yet you see such accommodative policy. So really they're kind of begging for that. They're wanting to see some of that get out of control so they can push back. Now again, inflation is not a good thing, but they actually have a mechanism to control it by raising rates. Whereas disinflation is something that they're more concerned about. I think right now they really want inflation. They want to see that come back, and they're almost tempting it to happen.
So the Fed in its dot plots projected no change through 2020, but its projections headed into 2019 weren't very accurate either. I mean, what would a possible dark horse to the economic outlook, not just for the Fed, but for anyone with money in the market right now in terms, is it geopolitical? Is it just simply the inflation number? What is it that maybe could present a surprise to the Fed this year?
Yeah, I think there's a couple things that could cause potentially challenges to the markets or potential recessions, right? It's the idea of an exogenous shock, right? So a la sort of an oil scare, right, in late 2000, in the 70s. It's the idea of things getting overpriced. So look at the market crash we had with technology, with housing, right? Things getting overpriced. And then the third would be a misstep by the Fed itself. We don't see the misstep by the Fed, but you could see some things getting potentially either overpriced or overheated, or you could see the idea of, the idea of things getting overpriced from our perspective. So,
and then just in terms of things you like, I mean, you guys say you like mortgage-backed bonds in here. Obviously, we've seen the housing market really come back in a big way over the last couple of years. What else are you seeing in the market right now?
Yeah, so again, just seeing basically a lot of people grabbing yield, right? So we're hearing that from clients every day. And the reality is right now, we've seen that in the past, right? But what we're seeing a little bit differently this time is people grabbing yield with not appreciating any kind of risks that they're taking on, right? So you're seeing that mostly play out in the high yield market. You're seeing it even in sort of the lower rated investment grade credit spread. So in triple Bs, the lowest rated investment credit grade spread are literally not only at cycle tights, the highest that we've seen since 2009, but almost ever. They're 7 basis points away from the highest we've seen ever. So again, people just wanting yield and going in. And we've seen dramatic inflows in corporate bonds, record inflows towards last year. We've seen record inflows into munis. And the challenge has become is where you're going to put the money. And again, at this point in the cycle, we're not saying we expect things bad, but what you want to do is start reallocating to where things have not performed quite as well and move up in credit quality, become a little bit more defensive.
We've got government bond yields up on the screen right now. What do you think about the yield curve widening over the past few months?
That's good. We're going to use that word.
Yeah,
I like that. That's going to work
right there. That made no sense. I like it. Let's make it a
so last year, that's a new headline. So last year we saw a flattening of the yield curve and actually even saw an inverted yield curve, right? And this year we're seeing a fairly flat yield curve. 2 to 10 spreads is around 30 basis points. We think there might be a little bit of yield curve steepening, but not significantly so. We're late in the business cycle. That could be better for financials, right, both in the stock market and in the bond market. But we don't see a significant widening of spreads right there, and specifically a steepening of yield curve, maybe a slightly steepening to 30 to 40 basis points, thereabouts.
And then just quickly, you're talking about the action we're seeing in the corporate bond market, how things have changed. How much is the role of direct lenders and private equity and those kinds of investors coming into the market? Has that changed the dynamics that you've seen in corporate credit? I mean, as part of the tightness with high yield, because people are just saying, I'll just buy the whole company instead.
Yeah, there's a little bit of that happening. I would argue right now there's just such demand. More of the demand what we're seeing right now is from institutions and individuals. So on the institutional side, you're seeing insurance companies, pension companies. They've seen 30% returns in the stock market. They have to reallocate their assets, and they're looking for duration, interest rate risk to do that, right? Individuals, though, the 65-plus community, you're looking at $1.3 trillion a year coming into the marketplace on that. That's roughly almost 4 times what you saw prior to 2014. So you're seeing it from individuals, institutions. That's really helping to drive the market. So absolutely some of the private equity is taking shape here, but I think it's more of the individuals and institutions taking over.
All right, George Rusnak with the Wells Fargo Investment Institute. Thanks so much for joining us.
Thanks for having me.
All right, coming up here, we'll have more on the final round. Plus, we'll head out to Davos. We'll hear from PwC Chairman Bob Moritz, what CEOs are telling him about the global economy. But first, let's take a look at where big banks are trading right now with a half hour to go in the session. Back to the final round here on Yahoo Finance. Miles Allen with you in New York. I'm joined today by Yahoo Finance's Brian Chung. Let's take a look where we stand right now. We've got 28 minutes to go in today's trading session. All 3 majors are in the red, though we're coming off lows of the session. The NASDAQ just a few basis points away from getting back into green figures here. For more on today's market action, let's go to Inez Ferre. She is live on the floor of the New York Stock Exchange. Inez.
Miles, the best performer on the NASDAQ today is Tesla, up more than 6%. Almost close to its record highs. This is after New Street Research increased its price target on the stock to $800, reaffirming its buy rating. Also related to Tesla, Tesla pushed back, denying allegations of unintended acceleration. This is after a petition was recently filed with safety officials. Tesla saying that this is all the work of a short seller. Meanwhile, we're watching today Costco. Costco up more than 2%, one of the better performers of the S&P 500 today, after Costco was upgraded at Oppenheimer to outperform, with analysts there selecting it as its top pick. And then we've just been watching Starbucks today after CEO Kevin Johnson came out with a letter to shareholders saying that Starbucks will be embarking into a more sustainable path, talking about reusable packaging, also less waste to go to landfills by 2020, and also saying that it's expanding its plant-based menu options, migrating more towards an environmentally friendly menu. Now, the letter didn't specify when these options would come into play, what type of they would be, or who would be the provider. Meanwhile, if you take a look, though, at Beyond Meat today has been up around 16% at its session highs. This is since the beginning of January. Beyond Meat has been on in a rally mode, up more than 50%. It's gotten some positive headlines with McDonald's announcing that it would be extending its tests of the Beyond Meat burger in some of its restaurants in Canada. It's also deepened its relationship with one of its ingredient suppliers. So Beyond Meat seeing a pop, and definitely seeing a pop on the heels of this headline regarding Starbucks. But Starbucks, nevertheless, still not saying which would be the supplier for its plant-based menu options.
All right, Nez Frey live on the floor of the New York Stock Exchange. All right, well, let's head back to Davos. Yahoo Finance's Alexis Christoforous spoke to PwC's global chairman Bob Moritz about what CEOs are telling him about the state of the global economy.
So I think you've got CEOs that are looking at the past year with a lot of trepidation. The amount of risks that they have to deal with, the amount of uncertainty that was out there, particularly when you look at what's happening between the Brexit and the EU, the China trade conflict with the US, elections all over the place, social unrest and the like. So that pessimism comes from the uncertainty that they are feeling as they sit in the boardrooms and decide what steps to take, or perhaps pause before taking those steps because they're worried about that uncertainty.
To be fair, the survey was taken in the fall prior to the Phase 1 trade deal being signed, prior to having the clarity we now have on Brexit. Do you think if that survey were retaken today by those very same CEOs, we're talking about 1,600 CEOs, by the way, across 83 countries, do you think there might be a more or a less pessimistic tone?
If I had to guess, and it's a guess, it's probably a less pessimistic tone, but still a little bit pessimistic. Again, when you look at some of those big issues, some countries where those CEOs are residing still have a lot of concern and a lot of uncertainty that's sitting there today. So while we have some certainty relevant to perhaps the next step on trade with the US and China, let's not forget, there's still issues with trade in general. If you look at Brexit, we have certainty with the election in the past, but how will Brexit actually now happen and the implications on the EU? If you look to the US, the politics over the next 11 months will be interesting to watch. Will Trump get to his second term? If so, what does he do with it? If a Democrat comes in, what happens to tax? What happens to regulation, where there was a lot of reform that gave an environment of confidence to the U.S. CEOs that candidly drove a global phenomenon?
Yeah, a decent amount of question marks still out there in the global world for these CEOs. What about how they feel about their own backyard, about their own businesses, revenue growth in 2020? Does it sort of jive with how they feel about the global economy?
It's clear that the pessimism from an economic perspective does translate down to their own confidence in their own organizations. The difference, I would tell you, it's not a view sector by sector or country by country. It's company by company. Those that feel they can control their own agenda, those that are driving a transformational agenda in terms of leveraging digital and technology and changing what they do, how they do it, and getting an effectiveness and efficiency, productivity gain from that, those are the ones that say, you know what, I see opportunities even in a slowing economy, even in this uncertain world. And that's where we, PwC, believe there'll probably be a differentiation between the winners and losers over the next year or two or three, where in the past, everybody was riding that curve because there was a lot of upside on a worldwide basis.
Also, I'm curious in terms of geography, which countries are the CEOs more optimistic?
So two phenomena, let's go for two different reasons. In the U.S., the CEOs are confident. They had a lot of resiliency over the last decade. They've been able to ride that curve. The economy has been solid. There's a great stability and resiliency within the consumer, and they love the innovation. If you go to the other side of the equation, there's a great and unbelievable confidence coming out of China. Now, let's not forget the China survey went to CEOs, many of them state-owned, so that government connection is still there. When you look at the underlying demographics in China, there's a big upside, right? Both in terms of what has to happen on the domestic agenda and the role that China plays across Asia-Pac right now. If you go to other countries, though, not so much. Brazil, UK, while better than previous years, still somewhat concerning in terms of their confidence level. Look at continental Europe and the lower part of Europe, a lot of concerns there and their confidence and ability to drive the agenda going forward.
And in terms of CEO's top 10 concerns, it's ironic that here we are in Davos where sustainability and climate change are the themes, yet climate change does not land on the CEO's top 10 of concerns. Why is that?
So I think you have two phenomena going on. One is it is a geographic focus. If you look globally, it doesn't reach the top 10. If you look at, particularly in Europe, you see it in the top 5. drive. The second thing is, and this goes back to the risks, there's so many coming that they're top of mind for CEOs. So the question is, what can I control and not control? The average CEO is seeing a lot of things come their way. Uncertainty on the economy, policy issues, political agenda, trade conflicts and the like, cyber. So all of those things are sucking up the openness and the blue sky. Climate falls down as a result, unless there is a focus of, this is important, it's important to me strategically, and I will take action on it. And that's where we see, for the first time ever, CEOs saying climate could be an opportunity for them, not necessarily just a downside
and
risk.
I believe China felt that it was the biggest opportunity was coming
China
from China.
sees it as the biggest opportunity, and this is where I think tech and climate come together. Leverage technology and data to drive how can it have a positive impact on society and the world relevant to clients, CO2 emissions, pollution, and the like.
All right, you can catch Yahoo Finance's live coverage of the World Economic Forum in Davos starting at 8 a.m. Eastern here on yahoofinance.com or on the Yahoo Finance app. All right, well, coming up, another good jobs report in the books last month, capping off a pretty good decade for jobs growth, but we're still not at full employment, so why not? Sam Bell of Employ America says to blame the Fed, and we'll discuss with him coming up after a break. But first, take a look at where big tech is trading with 20 minutes to go in the session. All right, let's take a look at some of today's winners and losers in the stock market. Stocks in red include American Airlines among several other airlines declining today as concerns grow over the mysterious virus that has originated in China. Now a confirmed case reportedly here in the U.S. could, of course, impact global tourism. Let's take a look at shares of Morgan Stanley, also lower after the bank getting a downgraded Citi to neutral from buy. Citi thinks that Morgan Stanley stock is now fairly valued after a 27% rally. Stocks in the green today include Costco, Oppenheimer upgrading the warehouse retailer to outperform from neutral, calling it a top pick thanks to its attractive valuation and positive top line trends. And Beyond Meat, that stock up 15%. Starbucks announcing plans to add more plant-based menu items as part of its effort to combat climate change. All right, the unemployment rate holding at 3.5% in December, being a cause for celebration among some members of the Trump administration. But are we measuring employment correctly, and are we actually anywhere near full employment? Our next guest is the policy director and founder of Employ America, Sam Bell. Sam, thanks for joining the program. Let's just start with unemployment, full employment, kind of how you define that, how you think that the mainstream economics world has misdefined that, and where that fits into Fed policy, and kind of the goals that you guys at Employ America are shooting for when it comes to the framework in which we understand employment.
Thanks for having me on, and it's a really important question, very topical question. Obviously, we have the headline unemployment number, which is not meaningless. It's an important indicator, but it's just one. We also want to look at participation, and we also want to look at wages, and we want to look at, frankly, for us, the quality of the jobs. Do people actually have power to, for example, quit their jobs? We've seen quits around 2.3%. Leveled off, which is not a bad number, but it's not an exceptional number. So we're really looking at, do people have jobs? Are their wages rising? And what's the quality like? Do they have power, not just to quit their job, but in the workplace more broadly?
Hey Sam, Brian Chung here. So it seems like the Federal Reserve has really used the labor market as a talking point for really what is the end game for them, which is inflation. They'd like to see something closer to their 2% target. So from the wage growth standpoint, right, the last reading was 2.9%. Some Fed officials say, oh, that's just a blip on the radar. We still expect to see 2% inflation. But then others say, hey, this might be an opportunity for us to try to pull more on the sidelines back into the labor market. From your view, how do you read wage growth within the context of where the labor market stands right now?
Yeah, well, I can't get outflanked by the Fed chair, Jay Powell, who has said this is not a tight labor market. This is a strong labor market. And he's all but saying that we don't have high enough wage growth yet to call it a tight labor market. And he said that multiple times now. He's also said, there's no reason why this is not sustainable, or even hotter than this, sustainable over a longer period of time. I think the question is about risks. Okay, there's a lot of uncertainty. But where are the risks? Are we going to try to raise the unemployment rate? Are we going to try to cool off the economy? What's the risk to letting this play out, letting labor markets tighten a little bit more, seeing if we can get more wage growth? Given years and years and years of low inflation, what is the risk of letting this labor market get tighter? It seems to me, and it seems that a lot of Fed officials have concluded that the risks are more on the tightening side than on the should we let the labor market, continue to get hotter.
So Sam, a pretty interesting development in terms of the Fed cast of characters right now. Judy Shelton and Chris Waller officially sent to the Senate their nominations being, which means that we could see perhaps the Senate go through the confirmation process soon. What do you see as the odds of both of those candidates ultimately making it to the Fed in a Senate that's actually trying to deal with the impeachment, first of all, right now, and then just given particularly Judy Shelton's background and her policy views?
So your viewers should know we have a shortened calendar this year. It's an election year and it's an impeachment year. So we only have so many calendar days to move nominations, which will impact both these candidates' odds. I think Chris Waller's a mainstream pick, and he'll be a slam dunk to be confirmed if they have the time on the Senate floor. Judy Shelton faces longer odds, and she's way, way, way outside the mainstream on a number of different issues. She's way outside the Republican mainstream on a number of issues. She believes in a worldwide gold standard. And basically, when everything boils down, she has a real serious moral vision of honest money where, Brian, it doesn't make sense to have a monetary system where you cannot exchange your paper dollars for gold coins, in her mind. And, that's a pretty radical vision. And it's paired with a number of different views on a number of different topics, from wanting to eliminate deposit insurance to helping the state of Virginia plan for an alternative currency to the dollar, to a number of other sort of views that are going to make her nomination problematic. After Stephen Moore, the Republican Senate said to the White House, do the vetting. Don't send up anyone here who has a lot of baggage. And the White House is now sending up someone who has serious, serious baggage in Judy Shelton. So we'll see.
Well, I guess, Sam, the question is, what sank Stephen Moore's nomination? Was it really, I think a lot of the comments that he had made about women in his past, or was it his views on policy? And I guess we're going to find out, but it's sort of, you outlined Shelton's policy bona fides, and I think back to a time in 2009 when a lot of those things probably would have connected, I think, with mainstream Republicans who have only seemingly found some kind of religion here on easy policy and lower rates just because it seems that that's what Donald Trump wants.
I think even in 2009, she would have been more conservative, more hawkish on both fiscal and monetary policy than basically anybody in the Fed. And I think, she's now done a huge 180 as the potential to get nominated, has appeared. She's done a huge 180 and now is supporting rate cuts. And she's made several comments about Fed independence that I think will rankle some Senate Republicans. I mean, they've drawn a line at the Fed and said, look, this is one place where we don't want to mess around and where we're not going to follow Trump. And, she's made some noises about, being more sympathetic to Trump's point of view, that maybe the Fed shouldn't be so independent. So I think that will be an issue for her with the Republican Senate. But I think the bigger issue is, what is her vision for monetary policy? This is someone who could be Fed chair in 2022, if not sooner.
All right, Sam Bell is the policy director at Employ America. Thanks so much for joining us.
Thank you so much.
All right, coming up here, we'll have more on the final round. The closing bell is right around 10 minutes away. That means Netflix earnings are about 11 and a half minutes away. We'll have a preview of those results coming up for you right after this break. back to the final round here on Yahoo Finance. Let's take a look at the major averages right now. We got all three majors lower as we head towards the closing bell. Again, off the lows of the session, we had made up some ground. The Dow was off about 120 points just 10 or 15 minutes ago. Moving lower here as we head towards the bell, but certainly not a day where we'll see a record close. Some concerns on the coronavirus. Very intimidating name there.
Yeah.
From the latest concern out of China, the Wuhan coronavirus. There is a case, according to the CDC, in Washington State here in the U.S. that moving stocks lower. Obviously, Boeing shares once again pushing around the Dow. We noted that it's now the second biggest component in that price-weighted index, but Boeing shares off as much as 5.5%, right around $315 a share. That's a level, of course, that traders have been looking at very closely for some time. Right around between 315 and 320 is a level Boeing shares have held for the better part of 3 years, and it's a level they've held all through the 737 MAX crisis. Boeing confirming that those planes will not be in the air until sometime later this summer, though that's, I think, the third or fourth extension we've seen now. So certainly that's as strategists love to say, Brian, a waiting for it to go Godot kind of moment there.
I hate the cliches.
Terrible.
I thought you did too.
I did. I made fun of it today.
That's disappointing, man.
I had to Google waiting for Godot because I didn't actually, I understood that the guy.
It's Gal Gadot.
I understood the guy never shows up, right? That's the thing.
Right.
But I didn't realize that Samuel Beckett wrote it.
Now our viewers know it too.
Well, that's good. I think every finance website should have a Spark Notes of Waiting for Godot because it's the most common reference you'll see in analyst notes. All right, let's take a look at shares of Netflix right now. That stock is off 25 basis points as we head towards the closing bell. They are set to report earnings or perhaps not earnings after the bell, whichever way you want to see it. Consensus looking for $5.45 to be precise $1 billion in revenue during the fourth quarter. Adjusted earnings per share, 75 cents. Of course, the street is going to want to see a lot more color from Netflix on their call about where their spending is for the next year, where content spend is. And of course, this company has one of the best letters that you're going to find all quarter, just in terms of commentary about their industry and where they see their product going.
Yeah, I mean, the thing about Netflix is that everyone always flags the massive amount of debt that they have as a possible concern in the long run. It's almost like the government, you know, it's like almost MMT. Like, how long can this thing keep going?
Netflix can just cut rates.
They can just keep print the money.
That's right.
But actually, no, in all seriousness, I mean, you look at the numbers of it, 106, I think, PE ratio, and a company that just issued $2 billion of debt in October, I think it was, of last year, no problem. So, I mean, from an appetite standpoint, it seems like the street is just willing to throw money at this thing, and hopefully the earnings for this quarter kind of continue to at least show the growth trajectory for right now.
Yeah, and I think, obviously the way that people, analyze Netflix, they look at the earnings, they say this is crazy, can't work. But that borrowing capacity, they're borrowing into a base of subscribers that has a demonstrated amount of churn, so you have a pretty good visibility on what revenues are going to be out into the future, and that's what's allowed them to borrow at such high levels. I mean, to some extent, cable companies have a similar setup, but of course, people are unsubscribing for that at an accelerating rate, whereas Netflix's churn has pretty much been stable.
Yeah, but there are headwinds. Look at Peacock, it's coming, right?
There you go. If you want to watch The Office, got to get Peacock now. Don't know if you're a big Office guy or not.
Parks and Rec.
Too young?
Parks and Rec is good.
Oh, okay, all right. So you're a Parks and Rec millennial. I'm more of
I have watched The Office.
I'm
it's
more
not
of
like
an
I don't
Office
know
millennial. It's just 3 years, big difference there. All right, Brian Chung, have a great evening. All right, and coming up here, we'll have the closing bell on Wall Street. Netflix earnings also out after that bell, and we'll have our call of the day. UBS breaking down the hard seltzer craze. Is this trend here to stay through the winter and into next summer? We'll
Big Truly guy.
Right after the break.
Big Truly guy.
Welcome back to the final round here on Yahoo Finance. Miles Upton with you in New York. I am joined today by the host of The Ticker, Shauna Smith, as well as Yahoo Finance chief food correspondent Heidi Chung. 10 seconds away from the closing bell here on Wall Street, looking at a red day across the board. These are live pictures from the New York Stock Exchange and the NASDAQ market site. All right, and that is the closing bell on Wall Street. Live pictures from the New York Stock Exchange and the NASDAQ market site. All three major indexes closing lower on today's session. We'll see where the numbers settle out, but the Dow looks to be off around 150 points. The NASDAQ, the slimmest losses on the session, down about 20 basis points. Of course, we are awaiting results out of Netflix and IBM due out after the close. We'll have the numbers for you as soon as they hit the tape. But certainly a day in the market softened up a little bit. I guess now we have global virus concerns. We were talking just a few minutes ago about how Iran kind of came and went. Always something.
Well, this virus is kind of serious, Miles. I don't know if this market reaction, of course.
Good for 26 basis points on the S&P.
Well, actually, I'm traveling through Wuhan in a couple of weeks, so this is extremely hard-hitting for me. But that being said, obviously the market reaction today I don't think is something indicative of how the reaction is going to be after potentially the World Health Organization's meeting tomorrow, if we get more clarity from that. But yeah, kind of softness.
Are you staying there or are you just connecting?
Connecting, but it's still scary, guys.
It is scary. No, I know. And it's interesting, after we got that report out from the CDC saying that they did find one case in the U.S., markets initially dropped a little bit more on that report, but they were able to regain some of their footing after that. So I think that also speaks to the fact that investors are on a little bit of edge or looking for any reason maybe right now to take some profit. This, of course, comes after we had that record-setting week last week. So I think any noise, any potential pullback, we are going to see a little bit of a drop in the markets. But I think the majority of today's move, obviously, at least with the Dow, was because of Boeing. Boeing come out basically saying that they don't expect regulators to approve the 737 MAX until middle of 2020, which was obviously longer than they initially had expected. So that move of that actually closed well off its lows of the day, but closed off just over 3%, clearly is of a concern here for the broader market.
And a little bit of Dow trivia here, and we don't have to go into whether the Dow is a well-constructed index or not, but it is price-weighted, which means the price of the stock matters, even if that is a silly number. Apple is now the biggest component in the Dow on that basis. That stock right around $315 per share. Let's see where it's settled out today. $316.57. Boeing shares $313.28. So Dow, or Apple rather, the biggest component of the Dow. $1 trillion company. Great for Apple. Congrats to Apple.
There's nothing that seems like it's going to stop Apple anytime soon. You know what's kind of crazy about that? So that's obviously.
There it is, the magic words.
And no, it had an incredible 2019, and I feel like we go through analyst call after analyst call, and it's so hard to find a truly bearish call on the tech giant right now, even though they're facing some regulation concerns, some over in China, in terms of slowing growth of the iPhone sales over there. There's still not a lot of material bearish calls on the stock, just yet, at least.
All right, well, we were teasing Netflix earnings, and we have those numbers out. Jared Blickery is live in our newsroom with the latest. Jared.
Yeah, it's a beat on both the top and bottom lines for Netflix. Looking at fourth quarter GAAP EPS of $1.30, the estimate was for 53 cents, so a big beat right there. Very small beat on revenue, coming in at $5.47 billion for the fourth quarter. The estimate was for $5.45 billion, just a little bit lower. And then the big number that everybody's looking for are the subs. The fourth quarter streaming paid net change, that was an increase of 8.76 million. The estimate was for 7.65 million, so a beat on that key metric as well. Now for the first quarter, that's the current quarter, they see global streaming paid memberships coming in at 174 million, and they see first quarter global streaming paid net additions coming in at 7 million. I don't have an estimate, but just based on my survey of some of the analyst notes, that might be a little light. So we'll have to see that, where that falls. Netflix surpassed 100 million paid memberships outside of the U.S. in the fourth quarter for the first time. And then looking at the stock, it initially spiked higher by about 4%, but it's now trading lower by over 1%, as you can see on your screen right there. Now, the options implied volatility for this stock, based on estimates before this coming into the market, were for about a 6.5% move. So not quite seeing anything of that magnitude just yet, but this is the early minutes after the release, and we still have the earnings call later on.
All right, Jared Blickery live in our newsroom with the latest from Netflix's fourth quarter results. Certainly a a decent quarter for the company. The stock, pretty muted reaction, which is something Netflix is always kind of bracing itself for if, folks there do care about what is happening with the stock price. But, something that stands out to me just looking at the company's investor letter, looking at the free cash flow for this year, free cash flow loss of $3.3 billion in 2019. Netflix saying in its letter to shareholders that it believes this is the peak in our annual free cash flow deficit. And so we hear so much about the concerns over Netflix's debt load. How can they manage that obligation? Certainly they have a large subscriber base against which they have borrowed extensively at this point, but now looking for a free cash flow deficit of around $2.5 billion next year. So again, we do expect, or Netflix does expect, to see those cash levels, that free cash flow, which is the street's new favorite metric, get itself into shape here over the next couple of years.
Yeah, what's interesting, I mean, another thing, not only the cash flow, but also the other looming factor facing Netflix right now, obviously, is the rising competition. We talked about time and time again that Disney Plus has been able to secure more subscribers than initially was expected. We're also seeing some other competitors roll out and have some pretty convincing numbers, or expect to have some pretty convincing numbers. But Netflix actually going through and talking about some of their competitors in this release. And the one thing that stands out to me is they're basically saying that we have seen a more muted impact from competitive launches outside the U.S. So it's important to point out that this is outside the U.S. But as always, we are working hard to improve our service to combat these factors and push net adds higher over time. And again, those global paid net additions totaled 8.8 million in the fourth quarter, which was on par with what they saw a year earlier. And then again, ahead of that forecasted 7.6 million.
And we've often talked about how Netflix likes to put creative graphics and things in their investor letter. In the past, they've had Instagram followers for some of their stars. Today, Heidi, they go with Google Trends. Why not?
Yeah.
Showing that Google Trends search traffic
exactly.
for Witcher was higher than The Mandalorian, The Morning Show, or Jack Ryan. So now we're doing that.
And this also in the release, they stated that the launch of The Witcher is tracking to be their biggest season 1 TV series ever. Now, we always talk about how legitimate these claims are. Like, what are the metrics? How long does someone have to watch a season in order for it to be considered, as one of their indicators? But this is very interesting to me because a lot of the results for this, or the reviews for it, haven't been all that good.
Have you watched the show?
I watched the first episode of The Witcher, and I will say I could not sit through 20 minutes without wanting to shut it off. So
I haven't watched it.
That being said, they surpassed.
No, Dan asked me to, so I didn't.
He slapped all of us. Remember that. But yeah, over 100 million paid subscribers globally.
Yep.
That's a big number. I mean, the stock gapped up initially on the Q4 results and then took a leg lower and is down by more than 1% on that guidance. So.
Yeah, and the company calling out in here a number of titles, of course, that we've talked about, or many of our viewers have heard about, one of which, Killer Inside the Mind of Aaron Hernandez. That's kind of been the big documentary over the last couple of days. And I think to me, I didn't know that Cheer was going to happen. I didn't know that the Aaron Hernandez documentary was happening. And yet in the last 2 weeks, both of those documentaries have really, not had a huge turn in the sun, but like a couple of days, and it seems like, quote unquote, everyone's talking about it. And I think that is proving out Netflix's model, which is they have a ton of content in the pipeline, a ton of stuff that you don't even know is in production, you don't even know is being made, but they know is going to work with their audience based on what they know about their audience. And you can say, oh, it's too many documentaries about this, it's too many shows that follow this format, but Netflix knows what works and what doesn't, and I think that the content itself does start to bear out what they're going for kind of strategically, because we make so much about what's happening at Disney Plus, The Mandalorian, and all that, but it's like, yeah, all right, fine. Star Wars is like the biggest brand in the world. You can't compete with that, but no other of these streaming platforms are making things, again, like these documentaries, like Witcher, even like going back in time, Stranger Things, that are coming out and actually working.
Well, yeah, we also talk about the fact that they're already getting some attention just in terms of being nominated for awards, because also in this release, they were talking about the fact that they launched their original film initiative just under 5 years ago, and the fact that they have had some of their movies nominated, like The Irishman, Marriage Story, and The Two Popes. They were all very popular for a lot of their members as well, and having the fact that this is a relatively new venture when you compare it to some of the other studios, obviously, that have been around now for quite some time. They talk about the fact that it's a very proud achievement and a testament really to the creative talent with whom we partner with. Again, this is Netflix saying that, but it's hard to argue with the fact that they're getting so much. They're not necessarily winning a lot yet, but they are getting at least a lot of nods.
Did you guys watch The Popes?
I didn't.
You didn't sit the boy down and say,
I did.
We'll watch the Popes together.
Not yet.
All right, Netflix shares moving slightly lower after hours right now, off about 2.5%. We also mentioned IBM is due out with its earnings. Jared Plickery has those numbers for us in our newsroom. Jared.
Of beats on both the top and bottom line for IBM. Their fourth quarter operating EPS came in at $4.71. That's a beat by 2 cents. Street expecting $4.69. And fourth quarter revenue also a beat, coming in at $21.8 billion. Estimate was for just a little bit lower, $21.6 billion. As part of their guidance for 2020, they're guiding operating EPS of at least $13.35. Estimate is for $13.29. So that is a beat as well. And then just taking a look at what the stock is doing, it gapped up on the announcement, and it's trading about 5% higher. The options implied volatility was only expecting a 4% move, so this is a little bit greater than that. And if we take a look at a longer-term chart here, we can see we are trading at prices we haven't seen since about October of last year. And just another note, a couple of line items here. Fourth quarter debt was reduced by $10 billion since closing the Red Hat acquisition that happened in the 2019 calendar year. And also looking, they're saying that they ended fourth quarter with $9 billion of cash on hand. Free cash flow and their operating EPS expectations for 2020 were key metrics going forward.
All right, Jared Plickery in our newsroom with IBM's latest quarterly results. Revenue for the quarter there up 0.1%. Of course, we remember the several years-long streak of declining quarterly revenue from IBM. They broke that sometime in 2019. Building on that into the fourth quarter, that stock up 4% in after-hours trading. For more on today's market action, though, let's go to Inez Ferre. She is live on the floor of the New York Stock Exchange. Inez.
Miles, two headlines today which were affecting the markets. The first being, of course, the CDC confirming the first case of the coronavirus in the U.S., and then also Boeing expecting the ungrounding of the 737 MAX jet to begin mid this year. So if you take a look at the Dow laggards, Boeing clearly the Dow laggard today, down more than 3%, but it did close off its session lows. It had been down more than 5% before the stock was temporarily halted, and then Boeing came out with a statement regarding the ungrounding of the MAX jet when they're expecting that to happen. Also, Chevron was a laggard today, down about 2% as energy stocks were leading on the downside. ExxonMobil down more than 1%. Goldman Sachs was also under pressure today, and Dow Inc. as well. And then if we take a look at the top performers today, the top performer being Intel. Intel reached a 52-week high today after being upgraded at Jefferies to a hold. Visa today reached an all-time high. United Health also today touching a record high, and also some other stocks that touched intraday highs today include Johnson & Johnson, Microsoft, Apple, and also IBM today. Today closed up fractionally and in after hours, as Jared was just mentioning, up after their earnings report.
All right, Inez Ferre live on the floor of the New York Stock Exchange. All right, well, coming up here after the break, we'll dig deeper into Netflix's latest report with CFRA analyst Tuna Amobi, and we're back with that conversation right after this. at shares of Netflix. That stock under a little bit of pressure in after-hours trading following the release of its fourth quarter results. Revenue just a little bit light there, but that stock not as big a move as we're accustomed to seeing with Netflix in the past. Joining us now for more on Netflix's latest quarter is Tuna Moby, media and entertainment analyst at CFRA. So Tuna, I guess just your initial thoughts on the quarter and what we've seen from Netflix.
Well, I just look at the numbers. They beat a lot on the international side. I think on the U.S. side, we're seeing signs of the early signs of intense competition. That being said, I think Netflix story now is going to increasingly bifurcate, whereby the international, where they just passed the milestone of 100 million international subscribers, is going to become more and more of the growth driver. What we liked was that the gains in the international markets appeared to be broad-based. The U.S. was lower than expected, but when you beat by almost 800,000 subscribers, I think you'll take it as a positive, whereby I think we're going to see more and more focus on the international side.
Tuna, it's Heidi here. So you mentioned the strong growth that we're seeing internationally with subs and a deceleration here in the States. But what do you make of the guidance that the company gave? It was a little bit lighter than the street, what the street was expecting.
Well, the guidance for Q4 was quite conservative, 7.6 million. Granted that they were up for some difficult comparisons, but I think more importantly, I think the outlook for Q1, the commentaries that they're going to make is going to determine, the perception of the overall competitive impact. If you remember, in Q1 19, they had 9.6 million, subscribers globally, which was quite a, performance. So I think as we kind of think about, the model now, I think pricing power is still cycling through the U.S. price increase, which could have been a factor as well. All in all, I think the company has provided some reassurance that their viewing hours per member for this Q4 was not really adversely impacted as a result of the entry of Disney Plus and Apple TV Plus. Fingers crossed, just remains to be seen as we get more data points.
Tuna, what stuck out to me in this earnings release was when they talked about competition, and they were saying that basically overseas and an international basis, they're not seeing any real impact from some of the competitors that have launched in this space right now. As you look at with the rising competition, do you think Netflix is at all at risk of losing subscribers?
I think there is, a risk clearly that there will be impacted by the intensifying streaming wars. The question is to what extent. At this early stage, I just don't think that you can write them off, because remember, the majority of the consumers out there buying streaming packages are actually subscribing to multiple packages. So the question is, when you drop your traditional pay TV, if you're a streaming platform, you want to be one of the options that consumers are seriously looking at. So far, we think Netflix remains one of those, granted that the competition from Disney Plus and Apple, and especially Disney Plus, could be quite formidable. So internationally is where I think they've invested a lot, in terms of their local language productions. They have a mobile-first initiative in India, which seems to be gaining traction. So look for international to pick up a lot of the slack as the U.S. Market shows more and more saturation.
And then, Tuna, the company coming out saying that they think that 2019 is going to be their peak free cash flow deficit year, $3.3 billion out the door last year, looking for free cash flow deficit around $2.5 billion next year. Certainly, to some extent, something the street wanted to hear, not reacting to it hugely after hours here. But, we make a lot about how much money they've committed to content in the future, how much they're paying, how much debt they've got on that balance sheet. When you look at the financials of the company, was it time, in your view, for them to come out and say, all right, no mas, this is it. We are not going to continue spending increasing amounts of money?
Well, we know they spent about $15 billion in cash content this year. Next year, last year. This year, 2020, we think that number could get to $18 billion. That's kind of one of the major reasons you're seeing a free cash flow kind of remain relatively elevated. That being said, coming from $3.3 billion deficit in 2019 to about $2.5 billion projected deficit for 2020, that is moving in the right direction. If they can maintain that trajectory, I think you could anticipate about 3 to 5 years out free cash flow inflection to positive free cash. At which point, I think the paradigm for valuing Netflix is going to change quite dramatically. Question is how long it takes them to get there. That being said, as long as they can continue to justify this content spend in terms of subscriber growth, the main question also potential debt issue timing, that's always something to keep an eye on. But at this point, I don't think there's really any major reason to change dramatically the projections for free cash flow.
All right, Tuna Amobi, media and entertainment analyst at CFRA. Thanks so much for the time.
Thank you so much.
All right, coming up here, we'll have what we're watching tomorrow in the look ahead. Plus, Peter Schiff says he can't get his Bitcoin anymore, why the notorious gold bug could be spinning a tall tale. That's coming up right after the break. All right, now here's a look at some of the stories that are going to be making headlines on Wednesday. All right, well, Davos is in full swing. You know the drill. Global elites gather in the Swiss Alps. Fine. Trump spoke on Tuesday. He said the usual stuff. That's also fine. But the standout theme from this year's forum so far seems to be climate change, namely the concern the economics establishment has about its impact on global growth. The BIS and a number of Wall Street firms have weighed in on the negative effects that climate change could have on global growth. The short answer is that it's going to be bad. The long answer is that the future stability of the economic system we've come to accept as the only way to increase broad prosperity is now in question. Some firms, including JP Morgan, expect that this won't change reality, right? The business as usual approach policymakers have taken to battling climate change is likely to continue, and the impacts from climate change will likely get worse. So what can we lowly citizens expect to see from the Davos set when it comes to the future of our planet? Well, it's unclear. We're often told the good meetings happen off the record, behind closed doors, where the elite can hide from actual consequences. Perhaps an answer to the climate crisis will be dreamed up there in the background, and maybe we'll hear more about it next year. For 2020, however, I think the elites have already said too much. Now, turning to the calendar for Wednesday, on the earnings side, Johnson & Johnson, Abbott Labs, Baker Hughes, and Raymond James are among the notable companies set to report their quarterly results. And then on the economic data side, the December reading on existing home sales will be the day's biggest economic data release. All right, crypto critic and noted gold bug Peter Schiff says that he cannot access his Bitcoin holdings after his wallet stopped accepting his password. In a series of Twitter posts over the weekend, Schiff claims his wallet was corrupted and his password no longer valid. Bitcoin users are pointing out that Schiff's holdings still exist, even if he can't access them, and that he can still recover the password and regain access eventually. Schiff, however, again, in these tweets, insisting the issue is not a forgotten password. The wallet has in fact been compromised, called the possibility of simply forgetting his password fake news, said there's no way to guess a new random password that may or may not unlock my wallet. Now, several questions here. One, do either of you own any Bitcoin?
No.
Okay. I don't either.
Okay.
But I always enjoyed that the answer that so many Bitcoin bulls would have to Mr. Schiff's conundrum would have been, you should have written that down.
But he's insisting, though, that he did not forget the password.
He's saying
He's saying that's
someone
not the issue.
saying it's been hacked
Yeah. It's been
and that it's gone
compromised. Yep.
and that it's now gone. To which I say, I think that was part of the risk of Bitcoin.
Yeah.
I mean, that's certainly a possibility, but to me, it sounds like he sort of does maybe perhaps have an agenda here because he's been bashing Bitcoin for so long,
yes.
right? He's a noted Bitcoin bear. And so perhaps if this is true, which a lot of people are saying it's not the case, that it wasn't corrupted. In fact, he might have probably just forgotten his password or whatever the case may have been. I mean, there was that issue where a lot of people lost a lot of money because they did forget their passwords.
Right.
So
I don't know. He's insisting that it's not the password issue. Also, he's saying that to him, I guess it's not worth a lot of money. Obviously, to some people, this would be pretty substantial. But he's saying it's $2,000 worth of Bitcoin that he was gifted, and now he just has no access to. So I don't know. It's hard. It's kind of hard just to figure out what exactly is going on because it's just that he said.
Yeah, right. Is it like a long setup for like, don't worry, you'll never lose your gold?
Exactly.
Something
That's what
like
I feel
that?
like it is.
I don't know. It could be.
Yeah.
What's your read on it?
I kind of just thought it was hilarious that of course.
That Peter Schiff is
Like, of
making
course-
a big deal about
Right, like of
Bitcoin.
course Peter Schiff had like a Bitcoin wallet and then he locked himself out and now he's complaining about it
On
very
Twitter,
loudly on the
yeah,
internet.
exactly.
Like that just, to me, that was just a little, not a little too pat, that was just right on the money. That's what I'm expecting when I'm logging on to see what is Peter Schiff angry about on the
His
internet
plan
now.
was to hodl.
Right. Right, that's been the Rick Newman plan, that's the Jen Rogers plan. They've all done quite well.
Do they only own Bitcoin or do they own any of the other coins?
I don't think, I mean, I don't know about Rick. I'm pretty sure Jen only owns Bitcoin. Although she made a lot of noise about Ethereum and some other garbage a couple of years ago.
Hey, I don't know, the crypto bulls say that Ether has more use cases than
Good God.
Bitcoin, that it's
we can go
more
down
of the
this rabbit hole for a
technology
while.
behind it.
Heidi, it's 2020. We don't have to pretend like Ether is like a real thing now. We can just move on and say it's all ridiculous.
I got to give a voice to these people that have been hodling.
What is Bitcoin doing today? I don't even know what Bitcoin did. It was over 9,000 over the weekend.
You know what? Let's take a quick gander.
There it is, 87.
Oh, it's up a
87.40. Good for, it's fine.
Not bad.
It's doing fine. Jared was charting a long-term bearish wedge in the price of Bitcoin, so we've been watching that very carefully here on the final round.
What's the level that it needs to?
Well, it was kind of like basing out like around 6,000 or so, but there was a descending triangle, so that kept hitting resistance on the way down, and there was a big breakout coming.
Love the technicals.
I'm a TA guy now.
You're a technical guy.
You stand up there with Jared, you become a technical
You do.
analyst.
You don't
let me
have a
tell
choice.
And, yeah, so I don't know. We'll do that tomorrow on this program.
the
We'll
cup and
trace out
handles.
exactly where we're at. All right, coming up here, we'll have more in the final round. Plus, still watching shares of Netflix after hours. Now the stock into positive territory, up a little over 0.5%. We'll have more earnings reaction coming up right after a short break. Around here on Yahoo Finance. Miles Little with you in New York. I'm joined now for the final half hour of the program by Yahoo Finance's Shauna Smith, host of The Ticker, and Yahoo Finance's Heidi Chung. Let's take a look where the market settled on this Tuesday. We had all three majors lower on the session. The Dow off about 150 points. The NASDAQ with the slimmest losses among the three majors, off 19 basis points. The S&P off about 0.3%. But of course, we are watching shares of Netflix in the after hours. Let's take a look at where that stock is trading at right now. Shares had been lower, now up about 0.4%. Jared Blickering noting previously in the program that the stock, the options implied volatility, indicating a 6% move was likely for shares of Netflix, often one of the more volatile names we see in and around its earnings report. So I guess relative calm, sigh of relief, however you want to frame that. If you're a Netflix shareholder here, maybe you don't really care. That stock coming in better than expected on the bottom line, top line missing just slightly, I think by about 1/10, about $100,000 or so on its top line growth there. Of course, everyone looking for where this company's cash is going in the future, noting earlier that the company said it was going to see 2019 as the max loss, $3.5 billion out the door in 2019, looking for $2.5 billion in 2020. Maybe then, as we were just discussing with Tuna Amobi, we can get to some visibility, as analysts like to say, on when the company could turn cash flow positive, looking there at Netflix's results for the fourth quarter. Sean, we also talked about competition, company putting in a Google Trends chart, which is always fun. Apparently that is now real research that Netflix is putting out in their quarterly letters.
Yeah, it's also interesting. I mean, we talk about the competition, the fact that there's so many big bulls out there of Netflix. I mean, take a look at this earnings report. They obviously did beat on the top and bottom lines, but once you start digging into the numbers, it might not be as strong as you would expect when you take a look at the stock's reaction, because this is a stock that has outperformed the broader market over quite some time. It was the top performer of the decade. So when you take a look at Netflix and how the stock is reacting, it's a little surprising when you see it up slightly, just because it did have that weaker than expected guidance in terms of what they're expecting for the first quarter. And then also the fact that their domestic subscribers did miss, you would think would be a slight concern here for Netflix, but I guess you can see now it is now, falling.
I know we're really trying to make hay here, guys.
But it's still not a huge move, really, in either direction. So it's something that maybe was largely what the street was expecting, and it wasn't a big enough surprise on the upside to really warrant that upward move.
But yeah, to just go off of your comment about competition, I love how they said in their release that, quote, "We have a big head start in the streaming space and will work to build on that by focusing on the same thing we have focused on for the past 22 years, pleasing members." Yeah. Mic drop.
Very Amazonian.
Yeah. But I have to say, you were talking about this earlier, Miles, but I think in the age of social media, the fact that a lot of people didn't even know that the Aaron Hernandez documentary was dropping, they didn't even need to market that. They don't need to release all of these trailers. They have social media doing all of their marketing for them for free. And that's how I heard about Don't F With Cats, which was also a very interesting documentary.
Also, Sam Rowe talked about that.
Yes, he did. But also a lot of other people were talking about it, and it was quite entertaining. I also do want to mention that Netflix has a very vast international content library, which I think sets it apart from a lot of its competitors here in the States. I have spent many of hours recently watching some international content, so that's any indication right there.
What are you watching these days?
Some Korean dramas. Reply 1988 is quite good. If you're looking for a Korean drama there, that's it.
Now I know what I'm doing tonight.
And also, you mentioned social media. Like, they just do it through their homepage too. And Netflix, unbeknownst to a lot of people, they publish their research on the algorithm and stuff. You can just go read it.
Yeah.
And I don't really know what it says, but I've skimmed it before. And they have all these scenarios of viewer X who watches these things will respond to these images, and that's how they get you.
It makes sense. It's leveraging all the information that they already have from the users and trying to promote others. So it makes sense.
All right, Netflix shares. Again, a little changed after hours. All right, our next guest, currently a top exec at Comedy Central, and is out with a new book detailing how she learned to reparent herself and become a ninja of self-love. Joining us now is Tara Schuster, author of the book Buy Yourself the Effing Lilies, also Vice President of Talent Development at Comedy Central. Tara, thanks for joining us. Congratulations.
Thank you for having me.
So when you look at this book, and were you writing this sort of just for yourself? Okay, I'm at this point where I need a reminder on how to not lose my mind, and now everyone else gets to read that.
So I didn't set out to write a book. I set out to save my life. I was 25. I had grown up in a neglectful household, and I was sucking at life. I was like the girl crying on your stoop in the streets of Manhattan. And I realized I need to get it together. And so I decided to create this curriculum of reparenting myself because I'd always been super good at school, super good at work, super bad at life. And that's where the book came from. I mean, I did this for 5 years in a Google document, like a good student would. Like I'd ask questions, what are values? What are principles? What are vegetables? And as I got through those answers, that's sort of how this was born. And when I was done and sort of like a stable, content, happy adult, which I never dreamed I would be, that's when I was like, I have a story to share. I have a practical guide for people.
How are you sort of able to balance your career while also going through all the things that you were going through in your personal life?
Yeah, they were very compartmentalized for me. So I was really hustling on the self-care and sort of saying, okay, my career is the thing that's working, so let me pour a lot of energy into that. But then I carved out time to make all the rituals that are in the book, basically just before work. It really only took waking up at 6:40 to change my life. Like it was just those mornings before I got to the office.
Tara, what would you say when you were going through this self-discovery process? Obviously, you have been very successful as a business leader. What have you learned about yourself, and how has that helped you improve just in terms of how you manage some of your employees and how you really continue to do well on a business level?
Yeah, I think a big part of the book and sort of the underlying principle is building self-awareness. Every ritual in the book is basically how do you become more self-aware? And by having that awareness, I'm better at reacting to new things that are happening within our business. I mean, in entertainment, I was just watching all of your Netflix coverage. Things are changing, and if you are in an old mindset, you are not going to be up on what's about to happen if you're not self-aware, if you're not present. So I think the self-awareness practice really helped me both in terms of the industry, but then also people I work with, being better able to read them and know what they're going through.
And you described like that process of being a good student, but then like going out in the world not knowing what to do. Maybe it's just because it's the only lens that the four of us can all see it through, but it feels like a very millennial thing, right? It feels like a lot of people that we all know were great students, high achievers, and then we all were kind of let out into this post-crisis world, and it was like, nothing that you just learned is going to be good enough right now.
Exactly. I graduated in 2008 from college where it was like, oh, you want a job? Good luck. Like, good luck to you. And so a lot of this was, let me just use my education, that lens of do, a curriculum and goals and apply it to myself.
Tara, you talk a lot about money and finance in your book, but tell us a little bit more about the idea of cheap out on yourself. What are you trying to promote with that? What does that mean?
Yeah, so my main thing was I don't cheap out on myself, never ever. And where I mean that is mostly in the basics. I think and especially in millennial culture, it's so aspirational. Buy this product will change your life. This face mask will make you 10% happier. And I want to move away from that. I think having a drawer full of socks with no holes in it, that to me is a luxury greater than any Tulum vacation. So for me, I don't cheap out ever on the basics. And the title of the book comes from buying myself the lilies at Trader Joe's. For many years, I thought I was not worth $7 lilies. I thought that was an extravagance beyond my means until I realized, fresh flowers are pretty much a basic.
They make such a difference.
And they make a huge difference. So it's focusing on these little things that make a big difference as opposed to reaching and doing financial downward dog for some car or something. It never works.
Tara, I want to get your just stepping out here a little bit and talking big picture just in terms of your work at Comedy Central. You mentioned the fact we were talking about Netflix in the segment before and just how the entertainment landscape is changing so much. From your perspective, from your experience at Comedy Central, how is it specifically affecting comedy, do you think?
Yeah, I think it's affecting comedy in a super positive way because there are so many more unique voices. I think if you look at how long it used to take a stand-up to become a name, it was a long, long process, but now the audience who are watching this, they're actually a lot more savvy and they become these comedians, so they hit the ground running. And then, at a place like Comedy Central, we're out everywhere watching everything. And so for us, it's fantastic. It's like a renaissance of content and we're there to nurture new artists.
All right, great stuff. Tara Schuster, the book is called Buy Yourself, The Effing Lilies. It is out February 18th. Thanks so much for stopping by.
Thank you.
All right, Shauna Smith, Heidi Chung, you guys are dismissed as well.
Thank
you
Class
for
is
coming
over.
by on this Tuesday, filling in with Jen out on assignment. All right, coming up here, $600 billion worth of advice. Standard Life Aberdeen's Martin Gilbert tells us what he's telling his clients about the global economy right now. We're back with that right after this. All right, let's take a look now at some of today's winners and losers in the stock market. Stocks in the red include American Airlines, among several other airlines declining today as concerns grow over a mysterious virus that originated in China and, of course, could hurt global tourism. Shares of Morgan Stanley also lower after a downgrade over at Citi, which downgraded the stock to neutral from buy. Citi thinks that Morgan Stanley is now fairly valued after Morgan Stanley shares rose 27%. Stocks in the green today include Costco. Oppenheimer upgrading the warehouse retailer to outperform from neutral, called it a top pick thanks to its attractive valuation and positive top-line trends. And Beyond Meat, that stock up double digits today after Starbucks announced plans to add more plant-based items to its menu as part of its effort to combat climate change. All right, well, let's head back to Davos, where Standard Life Aberdeen's Martin Gilbert spoke to Yahoo Finance's Julia LaRoche to discuss everything from the fourth industrial revolution in financial services to climate change.
Well, I think I've recently joined the board of Revolut, so that's a very good example, I think, of where we are seeing the fourth industrial revolution, in that the banks are making good profits in certain areas. Same with asset management, making good profits as well, good operating margins. So it does give the profits for the startups, the fintechs, or whatever they are, to look to get their market share of.
So you were just mentioning Revolut. Explain what that is and what the opportunity is there.
Well, it's an electronic money transfer business. It's prepaid credit card. So the opportunity and the benefit for users is clearly the sharper interest, the sharper exchange rate that you get if you do use that type of card. So it's a good example, I think, of that sort of industrial revolution.
So there are a lot of disruptions going on. You were just mentioning one about payments, I suppose. How about when you look at the asset management business, particularly active management? Are you seeing any sort of disruptions there?
Yeah, no, I mean, we're seeing it because, as I said, the asset management industry traditionally has been a profitable business. So we're seeing it in the move from active to passive. We're seeing it in fee compression. We're also seeing it in an area that the retail investor hasn't really had access to any great extent yet, which is from public markets to private markets. So we're definitely seeing disruption in the business.
I want to talk about this active versus passive, because you're right. We're seeing this proliferation of indexing. Does that create distortions? What kind of impact could that possibly have?
Yeah, I mean, clearly, if all assets became passive, it would be one extreme. But I think the opportunities for active asset managers increase as more assets, more equities, for instance, fixed, become passive. So I think it's a huge opportunity for active fund managers now to outperform and to create value that we haven't actually over the last sort of 5 years to any great extent. So I think it's a huge opportunity for us.
You're of the mindset that active is not dead. You often hear that passive is going to be killing active.
No, active is not dead. I think there's room for both. There are certain asset classes. Certain investors want access to an index at a cheap price, and there are others that want access to stocks and stock pickers. So I think it's a mixture of both. I think there's enough. There's enough room for everyone.
Room for everyone. I want to talk about climate change. This is something that's also going to come up at the World Economic Forum, and we are on the heels of Larry Fink's letter that came out. What can financial services do, or how should they think about climate change, just broadly?
Yeah, no, I think as owners of companies, we have a responsibility in that area to ensure companies behave properly. So I think I haven't read Larry's letter in detail yet. I've just seen all the headlines on it. But I agree with him. I mean, as owners, we have a duty to the individuals, the sovereign wealth funds, the asset owners that entrust us with their money to ensure the companies do the correct thing. But across the board, I think we've got to act like owners rather than investors.
And before I let you go, what is the one risk that's on your radar in 2020? We're talking a lot about risk here.
Yeah, I wish I knew. I mean, I'm worried about equity markets. I'm worried about bond markets. I'm worried about property. But as they say, these bull markets climb a wall of fear. So I think the good thing is that people are worried about the levels. But of course, at these sort of interest rate levels, where do you put your money apart from in equities? Equities probably number one, bonds number two, and cash is probably the least favored asset class.
All right, Yahoo Finance, of course, providing live coverage at the World Economic Forum in Davos starting at 8 a.m. Eastern. You can watch that live here on yahoofinance.com or, of course, on our app. All right, well, coming up, we'll have what you missed today on Yahoo Finance, and we are back with that right after this. time now for all the best moments that you missed today right here on Yahoo Finance.
2019 was really a year where the market kind of ran on fumes. It was all multiple expansion, no real fundamental earnings growth. So I think this year is the sort of the show me year where we need to really see earnings materialize in a meaningful way.
Netflix is sort of going to be left on an island where they're really sort of a one-trick pony in that they provide streaming content. And so far, no one's really able to monetize streaming content in a way that can create a sustainable business model.
Bernie Sanders says Joe Biden wants to cut Social Security. And Joe Biden says, fake news, man. So they're kind of poking each other in the eye over this.
Our customers, we want them to see how many channels are you using, what bundle is right for you. Ultimately, choices are important. We see over the top coming in, and any content producer in the world right now is doing linear, but they're doing over the top as well. So I think that everybody see where the trend is going. We play as a network as service. We don't have that type of content, so we want to give optionality for our customers.
The skills gap is actually quite huge. I mean, in some parts of the businesses, take for example retail, a truck store in the future, you won't see any salespeople in there anymore. Or take for example financial services. This will be completely go online, and therefore we have to make sure that we train our people wide. It's all about continuous learning.
The Russians were trying to interfere in our election in 2016. They were trying to spread disinformation, and the intelligence communities have again said that they're expecting more of this in 2020. We expect to see it from the Russians, from the Chinese, from the Iranians. Who knows who's going to try and interfere next time? I think we need to be taking stronger steps to protect against that kind of interference, because nobody wants foreign governments trying to tell us who we should vote for in our election.
All right, let's take a look at where the markets settled on this Tuesday of this holiday shortened trading week. All three majors were lower on the session. The Dow fighting off its worst levels of the session. Boeing shares off 3%. They were off as much as 5.5%. The company coming out saying they don't expect the 737 MAX to be approved until the summer of 2020. That, of course, pushing that timeline back considerably. A little note on the Dow there. Apple now the biggest component of that price-weighted index. Let's also take a look at shares of Netflix. They're up about 1% in after-hours trading. That company reporting its results after the closing bell, the company beating on the top and bottom lines, and also looking at first quarter revenue that was better than expected by the street. Also saying that it expects its free cash flow deficit bottomed in 2019. All right, well, that's all for now from New York. I'm Miles Upton. This has been the Final Round here on Yahoo Finance. We'll see you back here at 3 p.m. Eastern tomorrow.